of 6,000. Inline quarter and improving trajectory is what they make of this quarter, and improving growth trajectory at the exit of the quarter is something that they've liked. So similar commentary as compared to Morgan Stanley as well. Macquarie has maintained outperform with a target price of 4,800. What they're saying is that it's exited the quarter with mid-teen sales growth. They like comments indicating improving domestic demand as well as market share gain versus competition. But like I said, 9:30 is when the con call is today, so commentary will be interesting.
Absolutely, and we'll watch out for that as well. Thank you so much, Mahima, for joining us with that entire update also coming in on Britannia. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Buy now.
Sell immediately.
Hold it, boss.
Buy now.
Sell. Hold.
Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared. That's where we...
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open right here on NDTV Profit with me, Neeraj Shah, and my colleagues Alex Matthew and Hiral Daria. And amidst a slew of news flow that is doing the rounds, one thing that stood out for me today, or overnight, the last 12 hours, the Netflix CEO, Ted Sarandos, saying that Dhurandhar was the most watched non-English film on Netflix this year, bigger than every other language.
I'm not surprised.
37 million views is what I read.
Quite something, right?
Yeah.
Maybe that's an understatement, I don't know. But it's quite
that's
something.
what they quoted, I think, 37,
Yeah.
and I'm like, okay.
I mean, for a Netflix CEO to say this is par for the course.
Yeah.
You have obviously the most populous country in the world, and no wonder it's important for streaming companies globally.
Yeah, but it's just that any other language as well, per se, quite something.
of course. Not surprised.
Yeah.
Hindi is one of the largest spoken or widest spoken languages in the world.
Yeah, quite something.
Okay, let's talk about what happened in overseas news. Geopolitics front and center. Not that there is a significant update, but it is what it is. US President Donald Trump saying that he believes that the war with Iran will be over soon. He has said that in the past, so take that with a pinch of salt. He was speaking to reporters in the Oval Office when he said, and I quote, "I don't think that they can go on much longer." Listen in.
Republicans are arguing a lot right now about affordability. What is your message on affordability going into the midterm?
Oil prices now are coming down very rapidly. If you look at what's going on, it's down to 75. When I started the very important excursion into the Islamic Republic of Iran, it was a very important excursion because they can't have a nuclear weapon. Otherwise, the whole world would get blown up. We're not going to let that happen. Not only us, not only the Middle East, the whole world would have been catastrophic. We had no choice. And we'll see those days pretty soon again, based on everything I see, as soon as the war ends. And I think it's going to end pretty soon. I don't think they can go much longer. Yeah.
Okay, so Donald Trump, they're talking about WTI crude at around 75. It is, in fact, at this moment heading towards 80. And the reason for that is, and you've seen a like move in Brent as well, which is at 83 or nearly 83 and a half. It popped as much as 4% overnight. And the reason for that is that the Iran Parliamentary Committee is reviewing preliminary bill to bar the US, Israeli and other hostile vessels from the Strait of Hormuz. And so you don't know how that's going to be taken. You don't know whether that's going to lead to further escalation in geopolitical tensions, as a result of which you have Brent crude that is spiked. US equities, probably on account of that uncertainty about the war, but also ahead of the jobs data on Friday, took a little bit of a backseat or lost a little bit of ground. You had the Dow Jones Industrial Average down about 0.9%, the S&P 500 falling as much as 0.2%, and the Nasdaq ending flat. Markets, of course, are very closely watching for that non-farm payrolls data, which will give you a signal on the jobs market and the strength of that in the context of monetary policy. Remember that you've pushed the expectations of rate hikes down the road, and that has had a bearing on bond yields. Incidentally, those bond yields actually climbed overnight once again in the US by about 4 or 5 basis points. The dollar also rose, and it rose broadly. It had its best day in 2 weeks. And Asia Pacific, when I looked at it this morning, was a little mixed. Let's pull that up. Indeed, you have Shanghai that's trading positive, but the Nikkei 225 is down about 1%. The Kospi was positive when I checked it last. I wonder where it is right now. It's down about 1%. You've had a significant amount of volatility with Kospi in particular because of chip stocks and the way that they've behaved in the recent past. Steve Englander, a global head of G10 FX Research and North America Macro Strategy, Standard Chartered Bank, joining us this morning. Steve, thanks so much for taking the time. I want to start by asking you about how the dollar has behaved in the recent past. And earlier in the week, you actually saw the dollar dip to an over 2-week low. And then overnight, you've had it pick up once again. Is it geopolitical tension? Is it something else?
It's a mixture of things. And first of all, good morning. It's a pleasure to be with you again. The geopolitics have helped the dollar, not because it's good for the world or particularly good for the U.S., but the U.S. is an oil exporter. And what we've seen is U.S. yields tend to go up when oil prices go up, and that tends to take the dollar up. It's not a question of good or bad. It's what happens. I think earlier in the week, there was more concern about U.S. monetary policy and written broadly, including the Treasury intervention on behalf of the yen, concerns about war. I think the risk premium on U.S. assets was higher in the aftermath of the FOMC meeting and in the aftermath of the intervention. Last couple of days, since nothing has happened, that's calmed down a little bit. So you have a mixture of oil as a positive and diminished risk premium or term premium on U.S. assets as a positive.
Okay. Steve, good morning. Hiral on the side. With what's happening in terms of commodities as well around, the way crude has been panning out, it is quite benign at the moment. Now, the question is, how are you actually looking at what's happening in terms of where the dollar goes? Because the moment you know where the dollar is headed with regards and the way the dollar index pans out as well, an impact in terms of emerging markets is something that the street is watching out for.
Yeah, look, I think that for a lot of investors, especially U.S. investors, The war in Iran crisis is a distraction. It's not something I see too many investors wanting to trade. The bigger picture, and I think it's important to keep sight of this, is that the U.S. equity market hit an all-time high yesterday, and it came off a little bit today, but it's still very high compared to the past. What we're seeing, the strength in earnings, which is translating into equity market strength, reflecting the strength in productivity growth, I think is the big picture, and that ultimately is going to be a dollar positive. But I think everything around this, concerns about wars, concerns about the war, they matter when the headlines flare up. But ultimately, this is going to be the force that we think will take the dollar stronger over the medium and long term.
Okay. Steve, how used to will the markets get to this blow hot, blow cold around a truce for the Middle Eastern conflict, even if there is no resolution? Because it seems that we are around one soon, but we've heard this tape play out a number of times in the last couple of months. If it doesn't quite happen, will the markets really take it negatively, or will it be much like what's happening with Russia-Ukraine, that it goes on in the background, crude stays at circa 85-90, and the world moves on?
I think if it's in that price range, and the rationing is by price, in the sense that if you can pay 85 or 90, you can get the oil that you need and the energy products that you need. I think the world goes on. If it gets to the point where we're saying, oh, there are real shortages, and you're seeing that reflected in really sharp increases in certain segments of the market, I think that becomes much more painful. It's no fun to have oil at 85, but I think that the world can deal with it. It takes a chunk out of growth, but it's not disastrous.
Okay, so we will be watching out for in terms of the way markets are reacting to this as well. And I mean, thank you, Steve, for joining in as always. The question is, I think somewhere probably markets are getting used to it, but they're not really able to take a call of what is to be done. I mean, mentally people are okay कि हाँ ये होने वाला है, क्या करे? But again, to take a call to make a bet in terms of investments I think is becoming a question from the retail perspective, and that's what I'm gauging so far.
Yeah.
I don't know if anyone wants to add anything.
I don't think that's something that you can debate.
Okay, so in terms of yesterday's markets, you've traded, pretty much in a narrow range of just 73 points. Now, this is the narrowest daily trading range that you've seen in terms of Nifty 50 since September 2025, and there is lack of directional conviction amongst market participants, and Nifty actually ended almost unchanged for the past 3 consecutive trading sessions as well. Nifty has been witnessing an ongoing phase of consolidation, wherein Bank Nifty also witnessed a range-bound session. Bank Nifty actually traded within a narrow band of 360 points before settling above that 58,000 mark with a gain of almost 0.6%. Nifty PSU Bank, Nifty Chemical Indices, these are the ones which actually outperformed. You had real estate, media that ended as the top underperformers. Your broader market kind of exhibited a mixed trend in yesterday's session. If you talk about mid-cap 100, a 0.4% kind of a decline is what we've seen, whilst the Nifty small-cap 100 continued its strong momentum, advancing almost 0.5% in trade. In fact, your small-cap index registered a fresh all-time high. Talking about the breadth, slightly towards the negative side, because your advanced decline ratio has favored the declines as well in terms of yesterday's session, Neeraj.
Yeah, well, I don't know, just the way the texture of the market is, and maybe the market's being unsettled a little bit with this whole closing auction session as well. Multiple factors, but somehow just the screen tells me that a short-term reversal is not ruled out due to the one-sided optimism currently. And maybe the telltale signs of this is the way the market is now reacting to good results getting sold into meaningfully. So keep that at the back of your mind as you try and initiate fresh longs today as well. Remember, crude has just moved a little higher as well. And therefore, how do you play this on the long side? I think the commentary for Q2 is strong for multiple companies, and that may be the key for staying long in select pockets. But be careful. For example, we're not going to talk about it, and that's why if you look at Rain Industries today, fabulous set of numbers, but the commentary isn't the strongest, and therefore you want to maybe try and be lightly positioned in some of those names, but strongly positioned in where the commentary is looking very, very solid. So bear that in mind. Copper disruptions, though, are setting the stage for possible upticks in pricing of copper, and therefore maybe that value chain, or probably there is only one full-fledged producer, but maybe that's the cohort of stocks that might be interesting to do. And maybe early investing plays, guys. This statistic really bombed me out. In South Korea, brokerage accounts of kids under the age of 1 have nearly tripled from a year ago.
How is that even possible?
Yeah, okay. Parents are opening the brokerage accounts for kids. That's how it is, simple. And those aged 0 to 9 recorded a jump of new accounts of nearly 60% to 1,85,000 accounts. Quite something.
Yeah, quite something.
Yeah, but it's also scary, no?
Well, from a long-term investor's perspective.
Yeah, I mean, and it's not scary because, I mean, they are not investing. They are not doing the trick, right?
That too. But imagine if my parents had opened a brokerage account for me and just bought the Nifty ETF when I was 1. I'm not blaming them, of course. I'm really happy I have them. I'm really fortunate and blessed that I have them. But this is
and they created the wealth that they could at the time that they could.
In the business or real estate or whatever.
Gold,
it has been a great real estate market. Exactly.
So everybody.
That's what our market was that
actually,
time,
it's a beautiful concept because, and people have written about it, is that your worldview at the moment when you are living, you do the best that you can in the investment landscape that you have available to you.
Absolutely.
The wisdom of retrospect is flawless.
No, but retrospection helps in one account, that if you understand the power of compounding early in your life, you'll make
100%.
Wealth. That's the moot point of this.
Absolutely. So that's the wealth creation tip coming in from Neeraj Shah, taking cues from what's happening in Korea.
You should have got that on camera, by the way. In case you missed it, he's like...
Yes. Okay. So you're taking it up from where Neeraj left it right now. So tight consolidation phase is what you're talking about. 11 points gain to close, and while the short-term momentum is sideways, the broader trend is still remaining absolutely intact, and that's the beauty of the markets right now. The support is coming in at 24,610. Your first resistance level is 24,665, and buy on dips, near the 24,400 or 24,450. That's the support zone, is the key. If there is a decisive breakout above 24,800, then it actually opens the doors for Nifty 50 to go up to that 25,150 kind of a range. And in terms of Bank Nifty, now the question is, does it really need to comfortably clear that 58,500 to 58,600 kind of momentum? The answer is yes, because that's what will unleash the momentum towards 59,600 as well. In fact, 57,500 actually remains the primary line of defense. The support is coming in at 57,815, so watch out for that. And on the upside, you're seeing resistance at 58,090. So that's what the levels are indicating. But let's head across to Puneet to tell us what's happening in the derivative space. Puneet, good morning to you, and I hope you're wishing good morning to all of us.
Good morning to all of you.
Morning, Puneet.
It's been I mean, we did speak about what the impact of cash could be on the Sensex expiry, but at the end, I mean, things just worked out, and it's something that we discussed at the end in terms of the closing show yesterday as well. While the Sensex, of course, indicated a 300-point downtick, that's what happened. The implied open today indicates a start in the red, and we'll be closer to that 24,600 mark. But compared to where we started off, if we would have been told that by Friday you will be closer to that 24,600 mark for the Nifty, I think all traders, investors would have taken it with both hands as well. So it's been a decent week. Hopefully we end like that too. Bank Nifty also will be in focus today. Big SBI earnings will come through during market hours, and hence continues to be in focus along with the PSU banking index. For the cash market though, now we've seen buying at the start of the week, some selling yesterday, day before yesterday, and a very smaller number coming through now in terms of selling by foreign investors. But there have been some positions being built in to the longs that they've been building in on the F&O side of things. So now that index long is at 13.8% highs that it has been this week, and much higher than what we'd seen in the dismal month of July, that in terms of F&O positions specifically for foreign investors. The open interest distribution is also showing you some of those longs that are built up. So 25,000 now has the highest active open interest for calls. 25,100 and 200 are also seeing some action there, but 24,700, importantly, we've not spoken about this level too much because 600 and 24,800 are important levels, but that is also seeing some active open interest now being built in. And for stock specific action, you've seen multiple results reaction also come through. Blue Star was one where slightly more weaker numbers, and hence there was a build-up of shorts visible. Kalyan Jewellers also yesterday was longs being built on the counter. And finally, for the open interest losers as well, seen some action come through on Pidilite, Bharat Dynamics, and the big one on SBI as well. Results have come in good numbers yesterday, so this counter yet again will be in focus, but continue to see where the benchmarks open up and if we can continue to maintain that momentum and see some buying post the implied open indication.
I'm glad you didn't have to deal with any coughing fits this morning, because you were so kind as to wish all of us a very good morning. Thanks so much, Puneet, for that. Let's talk about stocks that you should keep on your radar. I've got 3 on mine. Britannia, first up, it's a thumbs down. And this is a mostly in-line quarter, but a margin miss, and that miss was on account of higher other expenses. The management, interestingly, has said that the company exited the quarter at mid-teens revenue. So that bodes well for the future. That's against 9.5% for the quarter as a whole. International business has recovered sequentially, so watch out for that as well. Some of the key numbers for you, PAT numbers up as much as 13.5%. Revenue uptick high single digit to say the least, up about 5,000 crore rupees. EBITDA uptick of about 11%, and the margins about 40 basis points higher, 16.8%. There are several notes, and we'll get you more of them. I've picked one, Morgan Stanley on Britannia. They've maintained an equal weight. They've retained their target price of 5,848. They say it's a margin miss. The top line growth was in mid-teens. Most key categories have improved growth sequentially, while the company exited the quarter with mid-teen revenue growth, and that is a positive. While margins have missed, commentary around improving growth towards the end of the quarter is a key positive. So watch out for it. It's a mixed sort of number. So let's see how the reaction is. Shipping Corporation, there's nothing mixed about this. In fact, it is in line with what we were talking about when we spoke about GE Shipping just a short while back. Higher freight rates have aided performance. Margins have spiked to a multi-quarter high. Geopolitical tensions have, of course, affected those freight rates during the first quarter, and that is reflected in the numbers. PAT uptick of 75% 619 crore rupees is what it stands at. Revenue uptick of as much as 40%, EBITDA uptick of as much as 80%, and EBITDA margin at 47.8% compared with 37.2% in the comparable quarter a year ago. And finally, Crompton is something that you should watch out for. The numbers looked okay, actually. It's a mixed quarter more than anything else, even for this, but on balance, pretty decent. They've managed a double-digit revenue growth and a PAT growth as well. They've had a margin improvement at a time when they've faced pretty significant cost pressures. The fact is that their cost as a percentage of sales has not gone up materially. In fact, if anything, it has gone down marginally on a quarter-on-quarter basis and on a year-on-year basis. They've actually taken pretty significant price increases. They've said that they've taken high single-digit and low double-digit price increases across categories. What I found interesting, though, is the fact that their Gandhimati subsidiary, Butterfly Gandhimati subsidiary, has not seen the kind of numbers that a Stovecraft did. Even though they do make those induction stove tops, they also, I think, sell a lot of other utensils, and so maybe because of that, they've had an improvement in the margins, but the top line growth is not as significant as you saw with Stovecraft.
Yeah, I mean, it has to be more in terms of the brand, or I think the integration that is still ongoing. So that's with regards to Crompton. But on my list as well, I have 3 companies which is on the back of earnings. Now, the first one is a Lupin. A thumbs up. The revenue has been in line. However, the EBITDA has beat estimates as well. Now, the growth was mainly driven by the strong business that we saw in the US markets. They did see a sharp growth in the EMEA, LATAM, and the rest of the market region as well. talking about India business, it remained healthy with almost a 14% year-on-year growth, and the product mix that was better suited and the strong performance in the US is what has supported margins this time around. Your revenues, a 32% growth, EBITDA up around 50%, and margins have improved substantially, 29.8% versus a 26.2%, and a 16% profit growth is what the company has seen. The second one on my list is a Siemens Energy. Now, again, a thumbs up because the performance has been strong, and this is mainly on the back of robust operational execution and the capacity expansion that they've done. In fact, their order backlog itself is up 22% on a year-on-year basis, and the weakness in terms of the rupee actually provided a favorable export-linked forex gain for the company. The export mix actually increased to 28.4% in the 9 months of FY26 versus a 21.4%. In the terms of power transmission, the top line grew 33%. The power generation business, the top line grew almost 27-28%. Profits 68% is the kind of growth that they've seen. Good growth on the top line as well, and if you see in terms of margins, a substantial improvement at 23.6% versus a 19.1%. The last one on my list is IFB Industries. Again, a strong quarter is what the company has delivered, and hence a thumbs up. The growth has largely been driven by robust consumer demand, and this is within the home appliances and the engineering business segment. In fact, their earnings growth has actually outpaced the revenue growth as well this time around. Profits are up 64%. You're talking of a 43 crore profit number. The revenues, though, have grown 18 to 19%. EBITDA is up 40%, so operationally also pretty strong. And look at the margins, 5.6% versus 4.7%. So across parameters, IFB has also delivered in terms of trade. Let's see how all of these react, Neeraj.
Yeah, on a down day, let's see if there are very enhanced positive reactions or no. HCL Tech, don't quite know the financial implications of something like this, but it's been named OpenAI Advanced Partner on August 6, 2026. Remember, it's got some fairly healthy wins as well on the AI side, so could be an interesting one. HCL Tech, keep an eye out for that one. LIC, keep an eye out for this one, really. Strong VNB margins, which are about 22.9%, have driven robust VNB growth. Now, what has been the VNB growth for LIC? Value of new business, that is. It's at 3,140 crores, which is up about 61% YOY, above most estimates. VNB margin is at 22.99%, as I said, but that, just for detailing, is up about 750 basis points YOY, above the 19%, which was estimated as a consensus. The focus, according to LIC, is remained on margin accretive products, and the VNB margin guidance is at mid-20s. This is a very robust set of performance by LIC, coming on the heels of the large price drop that has happened because of the share supply. I think the street might like it. I was just looking at the consensus targets, and a lot of brokerages have a target of close to 550 rupees. At 550, the price to EV for LIC is just 0.7 times the price to embedded value, and which is actually a really, really nice valuation. So if you believe that LIC actually is available to a bargain, and I think Parag Thakkar, as he comes in, will probably talk about this, but these numbers should give you an idea of what valuation are you buying LIC at 387. The room for upside seems good. It depends on when it moves, because remember, life insurance stocks traditionally haven't created, whether LIC hasn't created any kind of wealth for most people, so be mindful of that. But the valuation currently looks okay. I don't know if Apollo Tyres sees a bit of a beating today, because revenues were up okay, margins came off a bit. The reported PAT number looked higher because of a number of other items, but the EBITDA margin number at 11.7 versus 13.2 left a bit to be desired, and this is a bit of a surprise because almost every other tire company came out with numbers which weren't that bad on the margin front. So I don't know if Apollo Tyres sees a bit of a downtick today. Remember, guys, we spoke about a lot of other tire companies.
It was actually surprising for Apollo Tyres to report like this. Yeah.
So let's see, and we'll probably get the management at some point of time in the show to try and talk about the details around this as well. A lot of other stocks, of course, in focus. What we'll do is take a break right now, though, and come back and talk about a lot of those other numbers as well, besides the 9 the three of us have spoken about. Stay tuned. We'll be right back.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आपने ना बहुत? फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। एक हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today.
Welcome back. You're watching India Market Open, and joining us in the studios, as always, is Parag Thakkar, Head Fund Manager at Fort Capital, and Kush Bora, founder of kushbora.com. Gentlemen, thanks so much for taking the time, and happy Friday to you. Let me start by asking Kush about what he thinks about the Friday mood.
Let's hope it turns out to be a good Friday. First of all, very good morning, guys, and let's hope it turns out. By the way, Alex, do you know Nifty की सबसे खूबसूरत आदत क्या है?
Consolidation.
Reversion to
वक्त आने पे पलट जाती है. I remember the Dhurandhar discussion, and you gave me a clue in. Of all the views that have been quoted for Dhurandhar, I'm sure I have a small percentage in there as well. So yeah, let's hope that Nifty ends the week the way it started. That that's on a very strong footing, on a strong note. By the way, I think we do need to discuss CAS as well, right, briefly, because I don't think it's as sorted as it appeared yesterday at close. The difference between the reference price and the final closing price might have been smaller than what it was in the last 3 days, but the option pricing is not sorted, so maybe that warrants a discussion. As far as the Nifty goes, flat closing, lower high formations for the last 3-4 sessions on the Nifty spot. However, like I've been saying, you need to focus not on the spots right now, on Nifty futures to get a better picture. Nifty futures, by the way, however, has been making higher high formations, which is a good sign. You're seeing long build up on this. By the way, the FII number on shorts has reduced from 88 to 86, very close to that 85-84% mark. Where it if it crosses, then there's a good possibility that we might see a sustained rally, on the Nifty towards levels of 24,800 and 25,000 that we've been talking about. If you do get this dip of about 100 points that the GIFT Nifty is suggesting, it's a good idea to go long at those levels. The supports are intact. PCR has gone slightly above 1, suggesting that the put writing is also very active. Even that's reducing now, not even 100 points anymore, 76. So if you do get this dip, a good idea to enter a Nifty at those levels. 24,400 stop, the support and the stop loss still intact.
Well, follow Kush in that regard, and not what I said in the morning. Somehow the screen seemed to be suggesting to me.
Okay,
that
actually, so yeah, that's exactly.
Yes.
No, it's not. But having said that, Neeraj was not making a point that you should listen to anyway. He says a lot of things that you should pay close attention to. He was basically saying, don't listen to me, which is not something that you should agree with.
Not saying when it comes to a trade.
When it comes to, he still doesn't have his mic, so you can't listen to what he's saying right now. Anyway.
No, by the way, no, just to Neeraj's point, he mentioned that, he's seeing, perhaps there are signs of reversal on the markets. There are signs of reversal. But in this mid space, remember I've been talking about how, I've been tracking this space very closely. There are signs of exhaustion at the very least. Whether it's a correction, a deep one, whether it's consolidation, I have more than a few data points to discuss, and maybe not for now, but yes, I'm seeing signs of exhaustion in this mid space. You have to be
Why not
really
now?
selective.
Talk about it.
It's a host of points, and I'd rather do it on the wall than here. So
Okay.
perhaps Monday morning, perhaps, yeah.
Okay.
So be a little mindful, be a little cautious in this mid space. I'm not saying the rally's over or anything. I'm just saying that yes, there are signs of exhaustion. Whether this turns into a correction or consolidation, that is yet something that we need to
There
figure
are
out.
a host of stocks that we need to talk to Parag Bhai about. But before we do that, let's get the trades for today out of the way, and maybe any updates that you might have for the weekly calls that you had at the start of the week.
How did you know? I have a host of
I can look at your
updates.
face and guess.
So predictable. That's not a bad thing, by the way. I have a host of updates also that I want to talk about. Let's first quickly get the stock picks for the day. Out of the window, Indian Bank, Sangvi Movers, and Senoris Pharma. These are the three stocks, on the buy list today. All three of them strong moves, correct? Indian Bank for targets of 905 and 940 with a stop loss at 855. Sangvi Movers comes back into the trade. We've discussed this as a call also multiple times. 501, 516 as your targets. 471 is where you keep that stop loss. Senoris Pharma for relatively bigger targets and stop losses. 1365, 1430. These are your targets. 1275 is where you keep that stop loss. And now for the updates. Karnataka Bank, target 2, 300 hit. MM Forgings, this one had a bigger target, about 7-8% or higher, right? 605 target hit. Sunflag Iron, we've been talking about this stock for the last 2 days. Yesterday it was the top pick, just before the markets opened. 392 target hit. If I were trading these, I would book partially and hold the rest with trailing stop losses. And one more stock, by the way, which we didn't discuss as a call, Navin Fluorine. Remember, 4.5% kind of cap up opening, and we said still hold and keep trailing your stop losses higher. The stock was up, 11, 13% by the end of the day. So yeah, that's how you ride your profits.
Well, Parag Bhai, let's talk about creating profits or riding profits. I think I want to start off, Parag Bhai, particularly with LIC.
Yes.
Simply because it's something that we spoke about 2 days ago. You've been vocal in the fact that this is a business which looks solid to buy at the valuation.
Yes.
And the results seem above estimates for sure. Did you like what they have said about the future? And therefore, is it worth looking at even now?
100%. It's a clear buy. It's a clear buy. And table thumping means, table thumping.
Okay.
But
let the image come.
No brainer. It is 0.5 times price to EV. 0.5 times price to EV on now to FY27. Because now the estimates have been revised. VNB margin at 22.9% and that too 750 bips improvement. VNB up by 61%. So they are actually closing their gap with the other insurers. So why should they get 0.5 times? And now the major overhang of government OFS is over. I think there's only one way this stock can go.
Yeah. Like I said, the interesting thing, sorry Hiral, I'm just coming in here because when I was looking at the consensus price targets and that 525, 550 seemed to be one where a lot of brokerages have their view. Even at those valuation, it's 0.7. So after a 35% rally, if the stock does that, I don't know if it will do, but if it does that, it will still trade at 0.7 times.
0.7 times, yes.
How many businesses do you get right now?
And price to embedded value. And remember, LIC's embedded value has a big sensitivity to Nifty. Right, because they are invested in markets, right?
Of course, yeah.
So if you are a little bit constructive on market, you are getting it at 0.5 times. So you can look at like that also. That it is.
You're buying Nifty at a 50%
big discount. Big discount.
Sale.
Yes. Big, and just because of this, OFS was pending. Which government is
sale है फिर तो ये
LIC खरीदो पॉलिसी मत खरीदो
nice. Which government has hit a master stroke? पूरा ही
That was the line of the show so far.
But Parag bhai, LIC खरीदो पॉलिसी मत खरीदो.
That I cannot tell you. You should have some insurance also. Sir.
No, you should have term insurance. It's important.
Absolutely important.
But I knew Alex would chime in with that.
No, I noticed that I said term insurance and not traditional insurance.
That's what I'm saying. I knew you chime in with that. Term insurance.
And by the way, this VNB margin improvement, out of that 750 bips, 650 bips is due to product mix improvement, right? Which is
high margin. They are going
savings and protection.
Those are all high margin, high profitability products.
The beautiful thing for Life Insurance Corporation is that if it sells more term insurance, it is positive.
Yeah.
It improves their margins. So
absolutely,
in
protection.
fact, It's important for people. So the only issue is that the distribution of these products is highly dependent on the agent. And so once that...
But LIC has got, I would say, irreplicable franchise in terms of distribution network.
No one can beat that right now. Before we go to Sharad, just go to decode LIC for us. On the charts, Kush, I want to take your view.
Yeah, okay. So just...
मैं नहीं लूँगा अभी.
I'll show you something very interesting.
Sorry, I don't want to cut in.
No, I'll show you something very interesting. Parag bhai, यहाँ से अगर लिया तो क्या target तक आप सोच रहे हो जा सकता है LIC?
My target, see, basically, I am very bullish, so my target will be very high. But let us keep it little bit realistic. Now, 500 to 525.
Okay, fair enough. See, so there are times when the fundamental and the technical views match. Okay? This is one of those times where he likes the stock and he thinks 450, 500 plus जा सकता है. I don't like the stock, ठीक है, with the kind of moves that it's made, but I still think 450 तक जा सकता है. So,
okay.
Just because of, कब तक? See, that could be a month, maybe 3, because this is not a momentum stock at all. लेकिन the risk reward ratio, 20 rupees का आपको यहाँ पे stop loss लगाना है, and on the upside you've got what, 60 rupees, 1:3 risk reward ratio, ऐसे ही बनता है. So I don't like the stock per se, so it's not a buy and hold for me. Lekin, because of the fall, because of the fact that it's very close to support levels, risk reward ratio very favorable. So from that perspective you can buy. लेकिन 400 450 के ऊपर आया तो निकल जाना.
400, 450, 500, 500, 530. Now let's go across to Sharad to tell us what brokerages are also making out of it and what's the kind of target price they have. Sharad, good morning. Decode as to what has really worked for LIC according to you and what brokerages are making out of it.
Hiral, interestingly, there is a very important trend which LIC has been doing for last 2 to 3 quarters. That is the VNB, value of new business margins. It's largely 21-22%. Generally, we have, and the private players have 26-27%. But slowly, LIC is improving each quarter, and that's where a bullishness is coming in. But of course, there is a little bit of overhang of the OFS also, which was done. But we'll come to that. Talking about the numbers, the annualized premium equivalent, that has been a steady growth coming in, and the profitability was very strong. If you look at it, the individual non-par products, that's the high margin business I'm talking about. They have been doing well, and that is what is aiding the value of new business margins. Also, higher share is coming in this segment, and there has been an increase in the average ticket sizes as well. Solvency ratios, we compare it on a year-on-year basis, that has improved materially, and the persistence ratio has remained moderated. So net, a very strong set of numbers coming in. And also the Bernstein has given a market perform rating with a target price of 500 rupees per share, and they have stated that the government OFS addresses the key overhang for the stock, and now it creates a room for further upside. On the other hand, Macquarie has maintained outperform, target price of 550 rupees per share, and now that peer gap is closing, valuation still remains attractive for LIC.
Yeah. Thanks so much, Sharad, for that. And that's all you need to know about Life Insurance Corporation of India. I wonder where it opens today. Remember the number 387. Let's talk about another financial entity, and this time let's talk about Bank of Baroda. Not good news. In fact, my colleague Piyush has picked up that the central bank is turning on the heat with regard to a massive data leak that exposed customer and banking records. So, Piyush, thanks so much for bringing us this update. First and foremost, what was this leak about? And two, what is the regulator saying now?
Sure. Good morning, Alex. The leaks, as we are aware, last month Bank of Baroda saw massive around 1 TB data leak, which included personal details of their customers, bank account numbers were leaked, the internal audit data was leaked, employee record was leaked, loan record, IT system backups, compliance data, Kisan credit card data. A lot of chunk of data were leaked, Alex, and the details of Aadhaar card, PAN card, bank statement. So the contact number, personal details, a lot of things were actually leaked on the dark web. So now the RBI has taken cognizance of it. RBI has a cyber security framework which it issued on July 31st last month itself, and it says that banks are supposed to report to RBI within 6 months of any leakage, within 6 hours of data leak which has happened, and the banks also have to work in tandem with CERTIN, certain, when any such incident takes place. So the RBI has asked bank what was the root cause of this particular data leak, what are the remedial actions that the bank has taken, and if the RBI feels that the bank did not act as per the cyber security framework, then it may also go ahead and impose monetary penalty on the bank.
track. Thanks so much, Piyush, for tracking that. And of course, we'll come back to you over the course of the morning and maybe later in the day as well to find out whether you get any more information on that. Parag bhai, public sector banks, incidentally, and actually I want to come to you also, Kush, on this, because public sector banks saw a bit of a pop in trade. So, of course, notwithstanding this latest update, which is a little negative for Bank of Baroda, how do you view the pack?
So basically, SBI is going to report numbers today, right? So it all depends on what SBI does. So credit growth, in my calculation, should be above 16%. And QOQ 2.5%.
But the NIM is the key.
NIM is the key, yeah. NIM is the key because asset quality anyway it is good. Apart if you just leave aside the agri slippages which happen in Q1. So NIM is the main thing.
What level would you be okay with?
So domestic NIM 3% and overall global NIM, which we call it 2.88 or 2.89%. So closer to 2.9.
So it was at 2.9.
So
right?
it will be at least a stable to slight improvement in NIM is what I am expecting. Now let's see what they deliver.
Okay. So 3% domestic NIM, but that's
3% domestic NIM, yeah.
That slipped in the fourth quarter, right?
Yeah. So therefore, I think what chairman should spell out is that we are almost close to the bottom of NIMs. In as far as SBI is concerned, we can take for all banks.
Okay. Okay, you saw the stock spike, and this was true for all public sector banks in the second half of trade yesterday, or most of them. Union Bank of India, Indian Bank, all of these stocks did particularly well. Would you suggest getting into a trade?
Alex, very rightly identified. In fact, I have an observation where in the PSU space, for now, you invest or trade either in SBI, or you go to the lower rung ones, comparatively lower rung ones, which is like you rightly said, the Union banks and the Indian banks of the world. By the way, Indian Bank is a call also that I've given today. Canara Bank, PNB, they're showing traction, but they've got immediate resistances from a technical standpoint. Bank of Baroda, you best avoid it, especially given that you've got a plethora of options right now. So very correctly identified. What I would trade is SBI. Of course, not today. I don't prefer to trade in result, on the result day, that. So I wouldn't really suggest right now. Once the event is over, you can still trade it. Then you've got Union Bank and Indian banks of the world that you should look after. For now, forget Canara, PNB, and Bank of Baroda for sure. Avoid.
Okay, strong messaging out there from Kush Bora today. Let's go across to Sumit Sarkar. It's 8:45, that time of the show, when we get you what dealing rooms are recommending in the session today. All the chatter from the dealing room from Sumit Sarkar this morning. Sumit, good morning.
Good morning, Neeraj. Firstly, it's Titan and Lupin. Now, there are buy flows on the large HNI and the PMS desk, and dealers are expecting a strong Q1 numbers to come in from both the. In fact, Lupin has come out with a strong set of numbers, and Titan will be reporting its numbers, so they are expecting a strong set of numbers coming in from Titan as well. So Lupin is one thing that has that was something that we did indicate yesterday as well, and that has come out to be true. For Cohen's Life, despite the weak set of numbers, stock was gaining in trade yesterday. Now dealers are indicating that a large prominent HNI was accumulating in trade, and now from going forward, the quarters could turn around for Cohen's Life was the rationale that the dealer was indicating. And multiple other news flow that we did indicate yesterday has come out to be true. Indigen was one where we did say that a private equity fund was a seller and multiple mutual funds were buyer. If you look at the bulk and the block deal data, ICICI, Peru, Quant were among the top buyers for Indigen. Credit Access Gambling, again a block deal happened. We mentioned that the promoter was one of the seller, could be one of the seller. And if you look at the bulk and block deal data, the promoter had sold as a part of its stake in Credit Access Grameen. And lastly, Shadowfax was also part of our segment yesterday, where we mentioned that there's a buzz of a potential block deal that could have happened. And yesterday, a big block deal happened where NewQuest sold some part of its stake in the company.
Okay, thank you, Sumit, for that. A couple of names. Titan will be reporting numbers today, but by any view, because their expectation is a 25-30% kind of increase in terms of profitability. Revenues are expected to rise as well, similar range. Margin somewhere is expected to be pressured in this time around, and that's what analysts are expecting. How are you looking at it, and do you think it will deliver to what you're seeing?
So I'm not sure about margins, as you rightly said. Business update has already given the indication of revenues and all. So only margin is to be seen in this. So if there is a disappointment on margin, it can fall. But it's a great company to own in any time. So if there is any big fall, definitely people will come and buy the stock.
Okay. Now, we normally talk about all the stocks which are in news, and that's rightfully that should be done. Sometimes some stocks slip under the radar, and there are a clutch of them. So if chemicals have been right at the top of the conversation, select auto anchors haven't been. And I was thinking of one name which came out where I was not 100% sure of the numbers, but it's a pedigreed name, and that's Sundaram Fasteners,
Absolutely.
right? What did you make of the numbers and all the halo surrounding it, Parag bhai?
So I think if you hear that call, you will not be able to resist buying the stock. And this is, as you very rightly said, it's a very high pedigree company, superb quality promoter, excellent balance sheet, strong cash flows. And this company was not able to deliver because of the external environment from last many, I think 2-3 years. This is the quarter where they have shown 20% revenue growth, 16% profit growth, and most importantly on the call they have said that due to the EV ramp-ups of General Motors, then ICE engine ramp-up of one of their client was Stentless in US. Europe is now 20% of their revenues in terms of so everything is growing for them. Class 8 truck is also doing well for them. In India also they are doing extremely well. So I would say that they have said clearly on the call that Q2 and Q3 will be equally strong. So if this company does 20% growth, the company of this kind of quality, it should get 30-35 PE, which means a significant re-rating from this level also. It can, so at 35 PE it will be say 1500 rupees. And today the stock price is 1080. So I think significant upside can come. And this is after huge consolidation. I think the way the results were declared, the stock price was 1000.
Now it's kind of now given a bit of a move, right? 5% up, I believe, yesterday as well. So Kushbora makes sense to ask about the charts as well here. Is there a trade too in Sundaram?
So I'm perhaps going to don Parag Bhai's hat right now and say that buy and hold this. Just bear with me for a while here. Let me share something with you. March 09, okay, March 2009, the stock was at 13 rupees. In about a year's time, it went to 60. Then for 3 years, nothing, okay. Then from about June 13 to March of 15, it went from 35 to about 200, okay. Then, of course, it did have its moves here and there. But then again from 2020, of course, this is cherry picking the 2020 data. But from 2020, 250 is the rate. And then it went to 1500. My point is that these are the kind of stocks that you want to keep in your portfolio. Remember we spoke about, how you, if there's a stock you want to marry, this falls under that category. I'm not saying I will, I'm saying it falls under that category, where if a stock is consolidating for a very long time and has a tendency of giving you multi-fold return in a very short span of time, and by that I mean years, 4 साल कुछ नहीं किया, 3 साल कुछ नहीं किया, लेकिन 1 साल में और 1.5 साल में it gives you 4x, 5x kind of returns. This is when you want to accumulate. Sundaram Fasteners is in that zone. You buy and hold for a long term. I will give you a deepish stop loss on this one, close to about 800, 850 levels. But this is something you want to buy and hold for multi-bagger returns.
So I think I'll just compliment what Kush said. Why this happens? Why there's a big, big consolidation and then a breakout? Why it happens is because this is a very hard-working business. This is a manufacturing, hardcore manufacturing business. So you keep on giving, trials to your customers. Then your customers approve the thing. For example, General Motors now is picking up for them. Last year was only 50 crores. This year it is going to be a 250 crore business for them. So then it scales up. And so then you see numbers, and then so the stock breaks out then. Right now, for example, wind energy, aerospace, defense are all the space where they are working on very hard. If everything clicks, then it can be in a different orbit altogether.
Interesting. That's Sundaram Fasteners. One more stock I want to talk to you about, Kush, is Tata Technologies. Now, yesterday you had Honda Motor, which they've said that they've outsourced the development of new vehicle programs to Tata Technologies. The volumes were also pretty strong in terms of Tata Tech versus the 20-day average, and the stock did see a good spike. Are you seeing further momentum there?
Rank underperformer for a long time.
Correct.
And hence, I have my apprehensions around it. But let's just keep those aside, the underperformance aside. If I look at what it's done in the last 6 months, right? good moves, stellar moves. Volumes here and there have been very, very encouraging to say the least, and the price action follow through is also very encouraging. So this is not something that's a buy and hold kind of a thing for me, but definitely a momentum play, because from a near to a medium term perspective, if you see 775, 780, that was a resistance for the last about 2 months, right? Finally broke out of that on the back of good volumes. If you have it, you should hold it with stop losses about 750 or so. If not, you could still enter with that as a stop loss. And on the upside, expect targets of about 875, 950 plus. That's the kind of momentum it's building up. But I would suggest book profits as and when the targets are hit.
Okay, so that's with regards to Tata Tech. And staying with the entire auto ank space as well, Hero Moto has reported a strong first quarter with revenues rising nearly 36%. Profits also double-digit growth. Puneet joins us with all the details. Puneet, good morning again. How have the numbers fared with regards to Hero Moto, and anything that you've picked up in terms of the commentary as well?
Well, thank you for that. Good morning to you as well as Neeraj and Alex as well. But we've seen, decent set of numbers come for the company on the back of volume growth, but margin picture is slightly tainted. So gross margins have been, impacted in this quarter, led by raw material pricing. But the margin actually at 13.3% is lower than the range that the management had given of 14 to 16%. And hence, I think commentary today in the con call today at 10:30 will be very crucial for the company. Net profit also has come in slightly higher than estimates, but the guidance of that margins will be something to watch as well, because there are expectations that yet again in the month of July we've seen raw material prices inch up. So quarter two also could see some bearing. That's been highlighted by the other two-wheeler makers as well. And importantly, then it becomes in focus of what happens in H2, because then you will have all the margin progression estimates and expectations from the second half at a time when the base effect will be quite higher. So that will be one key commentary to watch today. You also have to watch out for the volume part of things. 23% growth is quite stellar in this particular quarter, but the average selling price is also higher. So some commentary on the premium motorcycles as well as how the ICE scooter portfolio has been doing, because EVs have been doing well. Those will be some of the other key conversations as part of management, because they've given a high single-digit kind of industry growth expectations for FY27. So importantly, what segments could that lead to? And of course, coming back to the margin point will be something to watch.
Okay. Thanks so much, Puneet, for that. On OEMs, Parag bhai, you made your stance pretty clear, right? But how do things stand right now? Because there has been resilience in numbers as well. M&M we saw even in the tractor segment, CV sales have been decent.
Yes.
So how do you look at this pack right now?
No, I'm very constructive, but some of the stock prices have also moved up significantly. So that we have to, apart from Maruti, which declared a very muted result because of margin pressure, the stocks have rallied also nicely, I think. So, and now we'll have to watch out for monsoon, of course.
And festive season then kicks in.
Yeah. So I would say that, the auto pack and most importantly, auto components, X of tires are doing extremely well.
Did you see Apollo tires?
Yeah, because see, all these companies will have some raw material pressure because of, so once crude and rubber comes down and carbon black, then you will see very good numbers from tire companies.
But the other companies posted pretty decent EBITDA margin numbers.
No, I think Seat also disappointed only this time, and the commentary was also not that great. So I would say the X of tires, I'm saying auto components are like we just discussed, Sundaram Fasteners, Suprajit Engineering, ASK Auto, all these superb numbers from auto component
companies. As well, right?
Yeah, all auto component companies are just rocking. Samvardhana Motherson yesterday numbers, that was also very good number.
By the way, you will hear the management today at 9:50 on NDTV Profit, so you want to keep an eye out for that. What do you do, Parag bhai, with a shipping corporation of India? Because much like Great Eastern Shipping, those numbers have looked solid. Revenues were up 40%, margins expanded, net profit expanded, and effectively some bit of deferred revenue recognized in the quarter leads to this as well. But it is a seasonal business. Is it available at a good price for you to buy it today? Or if it goes higher today, and if you have it in your portfolio, you much rather sell it?
Yeah, I don't have it in the portfolio, but if it goes higher, I would have sold it, because I feel that market is very brutal when it comes to earning growth. So if the earnings are picking out, you should never buy the stock.
Yeah, and they are. They seemingly would be.
Yeah,
even if there is
dry bulk
another
rates have come down.
Yeah, but if there is another quarter of over 40% EBITDA margins, eventually it's going to revert to the mean, as everything does.
Yeah, so that's what I'm saying. I don't want to buy a cyclical stock where the earnings are at peak.
Okay. Let's talk about Britannia next. And while we're on the subject of earnings, we've got Mahima joining in. It was something we spoke about briefly early on in the show, but let's ask Mahima what she thought of the numbers. Mahima, on the one hand, you had resilience in margins, likely on account of pricing changes that they've done, and the management has said that the exit growth for the quarter was good. What do you think?
Right, so Alex, overall, the revenue and PAT was in line with what the street was expecting it to be like, but margin was a slight miss, and this was on account of higher other expenses, which is kind of weighed on the margins. The management did indicate that the last month of the quarter was the growth in terms of revenue was in mid-teens, and this was against the 9.5% that the quarter has done. And international business has also recovered sequentially, but in terms of where the numbers go, revenue saw an uptick of around 8.2%, EBITDA growth of around 11%. Margins were at 16.8% versus that of an expectation of 17.4%. So this could be one of the reasons as to why we could see some pressure in the counter. And net profit saw growth of around 13%. Now, what brokerages are making of this, and also, by the way, the con call is at 9:30. So commentary around whether this mid-teens revenue growth will sustain going forward in the quarter, price hikes, volume, etc., will be important to watch out for. But Morgan Stanley has maintained equal weight with a target price of 5848. They're saying that most categories have improved growth sequentially, and the company exiting the quarter is with mid-teens is something that they've liked. In terms of Goldman Sachs, they've maintained neutral with a target price of 6,000. They're saying it's been an inline quarter and there has been an improving trajectory from Britannia. Improving growth trajectory at exit of the quarter is something that they'll be watching out for as to whether that translates into Q2 as well. Macquarie, on the other hand, has maintained underperform with a target price of 4,800. What they're saying is that the comments indicating improving domestic demand as well as market share gains versus competition is something that they've liked in terms of where the management commentary goes. So this is the overall view of how things have fared for Q1, but I think the con call commentary is going to be crucial to watch out for.
Absolutely, con call going to be crucial because that's where you will get the fine print as well. But Mahima, with regards to trend, the numbers came during market hours. The stock did react slightly negatively at that point in time. What are brokerages penciling in now?
Yeah, so it was, a topsy-turvy ride for Trent yesterday post the numbers because we saw an uptick of almost 3.5%. It went down all the way to negative 1% then. But I think brokerages have largely remained constructive post the numbers. I'll start with what Morgan Stanley has to say. They've maintained buy with a target price of 3,151. What they're saying is that Q1 consumer sentiment was broadly positive, although the duration and intensity of the Middle East conflict may have the near-term implications on the counter. Plus, the company has kind of mitigated cost pressures, which is something that they've liked. Citi, on the other side, has maintained sell, but they've gone ahead and hiked the target price to 2,950. They've said that margins is something that continues to impress them. Faster growth remains elusive for now, and believe acceleration in growth will be key for valuation multiples to kind of sustain or maybe re-rate. The last one is from Jefferies. They've maintained hold and hiked the target price to 3,435 from 3,110 earlier. What they're saying is that like-for-like growth with steady was steady, while overall it remained at low single digit, particularly due to store densification, and this is going to be the case for FY27 because they are going ahead and expanding. Management commentary seemed cautious on near-term demand due to geopolitical uncertainties. What is something that they've kind of disliked. Macquarie has maintained outperforming the target price of 3,600, and they're saying that they believe the rising resilience on higher margin is something that should continue from here on. So this is the overall view of what brokerages are making of Trent earnings.
Trent under the brokerage radar, but I mean, just think that there's so many stocks which are in focus. Thanks, Mahima, for that. 901. So the pre-open rates have started. Let's just mark them because remember, the implied was suggesting about an 80-90 point downtick. And let's see if that is what it is coming to. Yes, very likely. Bring up some usual suspects this morning and see what's happening thereof. So LIC should come up on your screen first. And after 2 days of that supply going away as well, is there some upside? For now, looks like could start off higher. Shipping Corporation of India, blockbuster set of numbers. Is the market going to reward it as a durable rally? Let's see. For now, just it's sedate relative to how it looked. Other decent numbers. Crompton Greaves margin expansion was pretty decent. I wonder if that stock is doing okay. Suprajit, the margin expansion was fairly decent. Maybe that stock could be doing okay. Sula, well, a very disappointing set of numbers. And Alchem Labs, the US FDA has issued a Form 483 with 7 observations. For now, the stock is not quite reacting negatively. Let's wait and watch what it does. Incidentally, we're speaking about diagnostic companies doing well. Vijaya Diagnostic is no different. 22% uptick in revenue, 37% uptick in profit after tax. That stock seems to be starting okay. But guys, no major reaction. I don't know if you guys are spotting any.
Premier Energies is looking okay
good
on the basis of numbers.
Good numbers, yeah.
3.2% higher. I wonder what Muthoot Microfin is doing, because they had pretty decent disbursements. Of course, this was known during the quarter updates, but the stock is still up about 5.4%. Shivalik Biometal, or rather bimetal, not biometal, bimetal is the counter that we should look at. It's up about 4.5%. Strong execution seen. Fino Payments Bank had a decent operational update in the month of July, and I wonder if it's reacting. It's up about 1% or so. On the other end, you have Signature Global. Did we talk about it? I don't think we did.
No, we've not spoken.
HCC and Signature Global. Weaker pre-sales for Signature Global, so therefore it's reflecting there. And HCC, weak execution. It's still up about 2% or thereabouts. So, are you spotting anything else?
No, I mean, nothing major. I mean, Siemens, I think we already spoke about it on the back of earnings.
Yeah.
That stock is seeing a good reaction. I think it seems that stock-specific action that we've been seeing in the last couple of days, that seems to be missing in today's session. But before we get to anything else, I think we should be discussing as to what the markets are going to look like in that last hour of trade today as well. And I'm talking about the impact of CAS as well. Now, if you have to look at, if you can just get those graphics ready as well, you know, the reference rate that has come in over the last 3 trading sessions at 315 versus the closing rate that we got in at 330 as well. And I think Kush will be better to describe this for us as well. Kush, if you look at the difference, right, between the reference rate that was coming in at 315 and the closing time that you're booking up at 330 as well, the point differential is reducing. That's one of the trends that I'm picking up so far, at least in terms of Nifty 50. You can see that on the screens. And the differential in terms of percentage terms has also gone down. Likewise, if you look at Bank Nifty as well, and then look at Sensex. Bank Nifty, similar kind of trend is what you're seeing in terms of the differential. And lastly, if you have to look at Sensex. Now, this spike or the differential points is very different in terms of the Sensex, where it's slightly on the increasing end. So, what are you decoding out of this?
So the Nifty and the Bank Nifty trend for the last 4 days, especially what happened yesterday, somewhat misleading, I would say, somewhat. And I'll tell you why.
Okay.
Because what you rightly identified, look at Sensex. On the Sensex front, it's actually gone up, even if it is by, like 0.21 instead of 0.1. Yesterday was the Sensex expiry. Now, Alex, you'll recall we were there together on the closing show discussing precisely this, right? You know what happened? Something very interesting. Sensex at 315 was at 78,777.
Yeah.
Right? The 78,700 call option was at that time trading at 360.
It spiked.
It had no business trading at 360 rupees because it's just about to expire in the next few minutes. So the first point is that. Second, like you rightly said, as we were speaking,
went to 500 plus.
Exactly. We spoke of a rate 500 plus. Somebody bought this at 500 plus just during expiry. I can understand that, maybe someone wanted to participate given what was happening in the Nifty or what happened in the Nifty during the expiry session, where the call prices actually doubled, right? So maybe someone sold it at that rate. Correct, and they pocketed, a host of gains, on that call option. So my limited point here is that this, even if it appears that the difference is narrowing, it's not yet settled. This might perhaps take some more participation, some more awareness, some more time for the participants to come in, chime in, and then. Right now, I don't consider this settled. My concern is what will happen on the monthly expiry. We have 3 weeks more to go for it, right? We've got the entire month to get a hang of this. But if it doesn't happen, it can have serious ramifications on the monthly expiry day. Also on days when you've got big inflows or outflows for example, like the MSCI index. What happens on days like those? So this is still something that needs to settle.
Okay. Well. Needs to settle, and we'll wait for that as well. In fact, the pre-open rate will settle shortly, but we'll get in Amit Goel on the conversation too. At least I haven't asked him anything, so I'll ask him that too. But before all of that, let's get in Sharad, my colleague, Amit, just stay on. I want to get in my colleague Sharad to talk about the key brokerage call for the day today. Sharad, what are you picking up?
Neeraj, I picked up Kalyan Jewellers. Jefferies has initiated a buy rating on it and target price is at 830 rupees per share. Good significant upside potential coming in. Jefferies is bullish on the formalization wave and of course the core Indian business, that is where the bullishness is coming in. There's a differentiated growth engine and largely despite its overseas presence, the focus would be on the India business. Overall, looking at the balance sheet, it's largely net cash supported by rising free cash flows and strong return ratios. Jefferies has stated that for the next 3 years, the EPS growth will be around 21%. That's why the bullishness is coming in for Kalyan Jewellers.
Well, after a while, I'm seeing a fairly constructive note on Kalyan. Thanks for that, Sharad. Interesting one to observe. The other point, and I want to get in Amit Goel into this conversation as well. Amit, and I'm going to start off not with the index, but with a point that I want to make and then a review that I want from you. And then, of course, get in your stock recommendations too. But the view is on commodity names. And Hindalco ahead of the numbers, of course, but Novelis numbers are out and we know that presumably those numbers will be strong. How is the setup looking there? I'll add a Hindustan Copper there because what's happened, viewers, is that Sudan yesterday has reportedly banned the export of copper products and copper and copper products, and that might actually bring about a bit of a tailwind for the pricing of copper as well. So two names out there, Amit, to start off this conversation today with me. One is Hindalco and one is Hindustan Copper.
Yeah, good morning, Neeraj, and thanks for having me. In fact, last Friday when we had met and you had asked the same question as to what you see in the metals pack, my view was that the metals pack has been consolidating after a stellar run-up and a corrective move, and they are now primed for some bit of an up move. And that has kind of turned out to be true, and we have seen some sharp moves in these metal counters. And I see that the momentum, there is some bit of a profit booking, which we have seen in the last session. And any dip towards the moving averages, towards the supports on the daily time frames could be a good opportunity to pick up these counters, because I do see that the momentum could continue for some more time in these counters.
Okay, fair call. And Amit, that view having said, I would also want to know what are your stock recommendations for this morning?
Yeah, I'm purely going by the momentum that is present in the market, and I see a lot of momentum happening in the defense pack, and because of which I have chosen Cochin Shipyard to be one of my stock picks for the day. It has been consolidating at a weekly support zone of 1378 and 1168 and has now started moving up. It has also crossed the daily moving average of 21 EMA yesterday, with very strong price action and strong volumes. So I'd like to continue and try to ride this momentum, keeping a stop loss of about 1440 for targets of about 1540 to 1600 levels and trail from there.
Okay, well, Cochin Shipyard again. Today we are listening or hearing names, viewers, which which haven't discussed in the last 3 months. I mean, when did we last talk about Sundaram Fasteners in detail? When we last hear somebody give a trading call on Cochin Shipyard? Maybe they have, but I haven't observed that per se. So I think it's a nice little show today, and the pre-open rates have settled. I wonder what's happening to some of those names. Shipping Corp in particular, something that Alex pointed out earlier in the day. Keep an eye out for that one. And Sula Vineyards, whether that Ek Rukawa Faisla is seeing some more downside. Yes, it is, unfortunately. I mean, it has been unfortunately a wealth destroyer for a business which presumably held so much of promise, somehow has just failed to deliver and not looking good.
But it just goes to show how tough a consumption business is, because it's consumer preferences changing very quickly. If you thought that wine is something that people would migrate to on the upside, it just very quickly changed from buying relatively affordable wine to spending 300 or 400 rupees more and buying something that was a little more premium.
Yeah, that too. And
all the discounts that were being offered by the other guys.
The other piece is, the other piece in this alcohol business in particular, global trends have not necessarily stood tall in India. Beer is such a widely guzzled product abroad. India is a whiskey market.
Yes.
It is not a beer market either. Yeah. So even the beer makers, I mean, United Breweries is a different kettle of fish, but the others have struggled.
Yeah. You were saying?
No, absolutely. Exactly what my point was. And secondly, I think all of these alcohol consumption driven markets are very region specific,
Yes.
number one. And two, in terms of wine as well, it is moving to premiumization.
Yes.
And your imported wine
The FTAs are helping.
helping, right? So that's the reason why you're seeing the other companies or distributors are making the buck.
100%. And there's also the factor that the unlisted space, and there's Grover, for example, that is a vineyard, right? And our reporter Ridhima found out last quarter, not this quarter, not in the first quarter, that they were offering 2 bottles for the price of 1, effectively. And they were pricing it higher, but people were going for that. So there's strategies on the discount side, there's strategies on the premiumization side, which Sula seems to be missing.
And I think if you
Kush
go
has
to
a
a wine
point.
shop as well, I think it's evident.
And
Yes, Kush.
ladies and gentlemen, that's how you figure it's a Friday on a business channel.
No, we're talking about the...
Of course we are.
Consumption market.
Look at the passion with which we've spoken about this one.
Listen, we're talking about the fizzle in the sizzle of this winemaker.
That's how you figure it's a Friday.
Happy Friday to all of us.
Okay. Parag bhai, are you buying any liquor stocks?
No, right now not. But I would say that again, like in many sectors which I am seeing, there are some clear winners. Like for example, here Radico Khaitan has just hit the ball out of the park. Although I don't hold the stock, unfortunately, but Radico Khaitan just keeps doing well. So in every sector, you have a clear winners. So in Alcobev, I think Radico Khaitan has just, I don't know what they are doing so well. And every sector has some clear winners.
Yeah, true.
So all of them in their way of getting into that premiumization space. So there is an upgrade happening for their consumers as well.
But log wine listed Sula ke through nahi pee rahe hain. That's the simple point. Okay, top call very quickly from our experts. Kush, 10 seconds, your top call for the day today.
Yeah, I'll go with Indian Bank, 905, 940 targets, 855 stop loss.
Okay, Indian Bank, the stock should come up on your screen. That Kush Bora's top call. Amit Goel, your top call for the morning.
Samman Capital stop loss at 160, targets of 180.
Sorry, I missed that stock. Samman Capital. Samman Capital. Okay, interesting. 2 financial names today on a Friday when we are likely to start off lower. Those are the top 2 trading calls for the day today. Keep them at the back of your mind. And Parag Thakkar's table thumping call was LIC, likely to start off higher today. We'll keep an eye out for that as well. Let's get the markets this Friday morning and see what we are doing. Well, I'm speaking too loud, so it'll start off slow, I'm sure. That's what typically happens. Anecdotal evidence. But 90 points lower for the Nifty 50. Sensex about 0.5% or 460 points. Let's just put it that way. We'll get the breath going in a moment from now. Mid caps flattish, small caps flattish, or 0.25% lower. Let's get the heat map up on the screen and show you what's moving and what is not. Well, again, IT to the rescue, by the way. HCL Tech is a stock in news, but the top gainer is TCS, 1% higher. Tech Mahindra, there is HCL Tech, of course, doing well. M&M has a bit of a zing to it today. Some strength for ONGC because crude prices are up about 3% odd. That could well be the reason why Interglobe may be lower as well today. Is it? No, not quite seeing the top 10 losers. But Bajaj Finance, well, I don't know if there is a news flow surrounding it. There is a news flow surrounding it, Hiral tells me.
Stop to revolving credit facilities by NBFCs.
Okay.
And we will get Piyush on it soon as you finish.
Okay, so revolving credit facilities by NBFCs, there is a pause or a stop to it. That's the reason why Bajaj Finance, Bajaj Finserv, Shriram Finance, all of them are looking slightly soft. Maruti is soft as well today. Trent is a bit slow today. Grasim, SBI. Well, but even Stevens for now on the gainers and the losers because IT is coming to the rescue. God knows how many times it's done that in the last 2 weeks.
You know, but on Bajaj Finance and the Bajaj Twins, I would also contend that there's some element of a technical factor and we should check with Kush what he thinks as well. Because if I remember correctly, on Monday or even on last Friday, he had said that the rally was perhaps done and maybe you should take money off the table. But let's also take a look at the sectoral indices and let's see what the picture is. Quite a fair bit of green on the screen, and you have the Nifty IT, as Neeraj pointed out, that's doing reasonably well, up 0.75% or so. Auto is doing okay. FMCG is up about 0.4%. MNCs, energy is up about 1/3%. On the bottom end of the spectrum, you have the financial names that are losing a little bit of ground. PSU banks that saw a tailwind at the end of trade yesterday are losing a little bit of ground today, 0.5% lower. Bank Nifty down about 0.4%, and private banks down about 0.33%. Jumping straight into individual names and earnings front and center. Let's see whether the reactions have held out after that very interesting pre-open session. Shipping Corporation of India is something we should look at front and center, 2.7% higher. Suprajit Engineering, interesting name, interesting results, just 1% higher. Premier Energies not doing too much actually. It had a good set of numbers, decent start in the pre-open, just about 0.4% lower. Life Insurance Corporation of India, you heard both fundamental and technical targets of 500 plus. The stock is at 392, so there's plenty of upside if you buy into the ideas that we were discussing this morning. Siemens Energy, perhaps the stock of the morning this morning in terms of size, good set of numbers and recovery in its key business, and so therefore it's up about 7.4%. Muthoot Microfinance, strong updates have come through, highest ever quarterly disbursements in the first quarter, and that stock is up about 6%. Shivalik Bimetal, let's finally pull this one up, it's up about 8.7%. Britannia, surprise. The focus is not on the margin picture, it is in fact on the commentary from the management that says that the exit growth at the end of the quarter was double digit compared with the quarterly growth of 9.5%. The stock is being bought into, and how? 4.3% at this moment. Signature Global, not the best update, weaker pre-sales. The stock is down 2%. Quickly, Alchem Laboratories, US FDA classified Daman facility as OAI. And that's after 7 observations, not doing too much, and Dabur is also just about flat. The update there is that the US FDA has issued a warning letter for its Silvassa plant. And finally, Sula Vineyards. I wanted to check Sula Vineyards as well, and just to see if we have that, we should pull that up. Okay, 4%, since we spent so much time talking about it. But Hiral, what else are you picking up?
I think it's just the usual names that we're seeing right now, but yes, the one that is on the top is Siemens Energy, 7.5% up move. Pull up a Britannia as well on the screens and see what's happening with the Britannia. We'll be getting Mahima as well to talk to us about it, but Britannia is inching higher, 4.5% up move coming in there. You have Crompton, which is under pressure, 4% downtake. We've spoken about Bajaj Twins as well. Sai Life Sciences also reported numbers, so a 4% downtake coming in on Sai Life Sciences. And the Deepak Nitrite, that stock is up little over 3%. Amit, let me come to you with the way markets have opened right now. On the charts, if you have to look at a Siemens Energy, if you have to look at a Britannia, would you play the momentum on any of these two names?
Not on these two names, but if you allow me, I'd like to point out BSE, because I'm seeing some very sharp moves intraday. It's up by 2.5% with very strong volumes. The results were also decent, so I would probably suspect that we have kind of bottoming out over here and keeping a stop loss of about 3,400 odd levels. We could possibly see an up move towards 3,600 or 3,800 also.
Okay. Are you surprised at all, Parag Bhai, on Britannia reaction? Hiral has just pointed out, actually. Hiral, I'm just going to take the liberty of reading this out, what you've just shared. The Britannia management to Nuvama, 9% volume growth year on year versus estimates of 5 to 6%. Exit month sales growth at 15%. In fact, let's go across to Mahima. Mahima, I think the focus of the street is on the exit volume growth at the end of the quarter and the fact that it was significantly better than the rest of the quarter. Exactly what we were talking about before trade started. They're ignoring the margins.
So, Alex, I think what's something that the street is light is the volume growth number that has come in at 9% versus an expectation of 5.6%, and that is the whole and sole reason as to why the stock is buzzing. By the way, this information is exclusive to NDTV Profit, and the overall exit month sales has seen a growth of around 15% versus that of a 9.5% of the overall quarter. So that's also one of the reasons. And Nuvama says that the worst is behind, and they expect Q2 growth to further accelerate as well. And overall international business has also seen a good recovery in terms of where the sequential numbers go. So I think that could also be one of the reasons as to why the stock has been doing well. But the major factor is the volume growth number. Of course, we'll wait for the con call commentary to also come in and see as to whether that volume growth, what is the reason behind that volume growth that they've done this quarter.
Now that Okay, so Parag bhai, any view? I mean, you're talking about a volume growth of 15%, the exit one, and which averages out to 9% for full year, which is very strong.
Yeah. So I think market looks into future, and so when the exit momentum was very strong, market has taken it very positively, and stock has also consolidated.
So, is there a cause for a little bit of salt in that biscuit to say that? Okay, exit was good, but then at the same time there is pricing pressure. There is the fact that the company has to raise prices that could affect your demand going forward.
Nowadays, on the result day, what matters is positioning. If the positioning is very light ahead of the result, and if there is some little positive spark also, then stock price behaves on that day in a different way completely. So nowadays, I would also be in Kush's camp that many times, for example, SBI result is today. Yesterday we saw a very big rally.
2.8%.
Yeah. So then it might get sold off after the results. Even though the result will be good.
10-second answer. Would you take money off the table on Britannia?
On Britannia, no. I would continue to hold, in fact. Britannia and Colgate are the recovery candidates for me. Nestle and Marico are the momentum candidates. So Britannia, you could very well hold. Stop loss is deepish, about 54.50.
Amit, Parag, Kush, thanks so much for taking the time.
No, sorry to come in only because since we are talking consumption, I think we've got a really good voice coming up on a lot of things, including consumption. But Parag bhai, Kush, Amit, thank you so much for joining it today. And Rahul Arora, CEO of Ashika Institutional Equities, Johnson on the show. Rahul, great having you as always. Thanks so much for taking the time out. Although it's not been a while, it does seem like it's been a while, so you should come more often. But let's start, Rahul, with just the point that we were talking about, and then we'll get to the markets as well. That consumption, in many ways, is springing a surprise both on the positive side and in some cases the negative side as well. But FMCG, by and large, what have you made of those? Let's start with that since we are talking on that, and then we'll come to the other things.
Morning, Neeraj. Thank you for having me on the show. So I think, Neeraj, this all started with the GST cuts last year. I think what's also happened is what started off as a 42% rain deficit has now come down into the low double digits. I think the fact that crude has receded to a very large extent from when the war started and people were, pretty much writing off margin expansion for consumer companies, since crude is a very important component for most of them. I think now that the rate hike estimates have also come down, that has also helped. And like I said, I think the onset of the monsoons and the way the crop sowing has been, all of this put together, I think, has aided in consumption. And like I said, I think the trigger of it was the GST cuts that you saw. I think, Neeraj, with the exception of ITC, and I think we all know the reason for why, and there is a reason ITC gets the valuations that it does, because it is as regulated as it is and excise has hurt it. I think even if you look at the bellwether, something like a Hindustan Unilever, yes, of course, our own expectations were that volume should have grown about 8-9%. But even at 5% volume growth, it's not the worst number on the street for a company that was struggling to report anywhere between 0 to 2-3% kind of growth. Now, the space that you were discussing, Neeraj, a little while earlier is something that we have liked for the longest time in consumer staples. We've always been somebody who's advocated packaged foods as the only area to hide, and we've really liked Britannia, Tata Consumer, and Nestle. You've seen the results of all the three. Nestle, of the three of them, was clearly the best. I think the kind of growth that it has shown at 20% plus is quite remarkable, with the kind of return ratios in excess of 100%. I think the challenge with Nestle, Neeraj, lies in the valuations, and which is why I think, people are a little uncomfortable valuing it at 70-75 times. So therefore, you will see it as a whole recommendation across broking houses. But I think if you looked at a Britannia or a TCPL before they went into these results, Britannia was trading at about 41-42 times just about a couple of weeks back. Tata Consumer had come down to about 45-46 times. These are very sharp discounts, anywhere between 25 to 35% from what they have historically been trading at. And these are the only companies, Neeraj, where we can confidently say structurally, where we would expect, say, a 14-15% kind of profit growth. Of course, Nestle has done far more than that in this quarter. If you extend beyond packaged foods, I think Dabur was decent, Colgate was decent, Gillette was more than decent. I think, Gillette for, almost 38 times trailing. I think it's probably trading at 33 times on FY28 numbers for a 12-13% kind of growth. I think that's a remarkable number. And after a long time to see something like a Colgate come back to, mid-single digit volume growth was also a very, very heartening sign. The only problem, Neeraj, will be that the base effect is so high going into FY28 that I don't know how much this will be replicated going into next year.
That's the issue, right, Rahul? I'm interrupting because I want you to comment on that, to say that traditionally the expectations in this space have been sky high. And for a Nestle as well, the fact that it has reported 20+% growth for several quarters in a row is quite incredible. People say that quite often. And so therefore, the margin of safety and the ability to miss on expectations is very, very razor thin. Would you agree?
Yes, Alex, but I think the way to look at it, Alex, would be don't compare it to historical growth rates. Let me give you an example. Like, I don't think in the foreseeable future an HDFC Bank, ICICI Bank, Kotak Mahindra Bank are going back to those valuations of 4 times price to book. Those growth rates were very different. Now you have to align yourself to newer growth rates. So in that context, you have to look at valuation. So you may actually find somebody who's far more comfortable paying, 40, 45 times for a 12, 13% kind of growth than actually paying, say, a 20 times or a 15 times even for an IT company that's growing at 3, 4% kind of growth. So as a fund manager, I am not restricted to buy stocks in one particular sector. I can easily float between these 3 large sectors, which is banks, IT, and consumer. But I take your point. I think structurally, when I look at it, these are companies that are very mature companies, the large consumer staple companies in India. I think in a very good year, an aberration year, which is what this current fiscal year seems to be like, you'll probably have a situation where you'll get to high single digit growth. In bad years, it'll probably be like 0, 1%. But I think if you're taking a 3-5 year kind of view for mature consumer companies, you're best working with, say, a 4-5%, over a 5-10 year period in terms of volume growth. Now, what's going to happen, Alex, as a result of these couple of quarters of results is you're going to see very sharp upgrades. And then if the numbers don't come, very sharp downgrades as well. And I think this will be more, attributable towards companies that are priced to perfection. As we have seen in the past with, say, companies like D-Mart, Bajaj Finance, HDFC Bank, Asian Paints, where in one quarter, and even Trent most recently, you would remember just before we went into this result season, the expectation was that Trent would announce a 21, 22% growth pre-quarter. That number came in at 18, 19%, and the stock was down 14% in one day, just for a 2-3% miss. So that's, I think, where that margin of safety that you spoke about, Alex, comes more towards the discretionary side. I don't think that, margin of safety relative to historical valuations is there in consumer. I mean, like I said, Britannia was trading at 42 times. This is a stock that's traded north of 55 times. So I think the margin of safety in packaged foods, in Gillette, even in alcohol stocks, I think, if you look at a United Spirits, it becomes a great buy at around, say, 1200, 1250. I think, when you look at regulations, it seems far more in tobacco than alcohol. And alcohol seems to have a far more stable excise policy on a pan-India basis, I think, if you go from state to state. So I would say for this year, if your view is 1 year, you could potentially be about 100 to 150 basis points overweight on the consumption sector. But if you're taking a slightly elongated view, I think that the bias would tilt more towards consumer discretionary. And even platform companies, say like an Eternal or a Swiggy, you could throw that in there. And, since you're talking consumption, throw in the auto companies as well. Look at the kind of numbers that they have shown in the monthly sales numbers that have gone by. Passenger vehicles, tractors, two-wheelers, they've all grown anywhere between 20 to 30%. So looks like a great year. And before we know it, I think, the festive season starts next weekend with, Amazon, Flipkart starting their Independence Day. You go to Rakhi and then, Ganpati. So I think if you have a good festive season, this may well continue till December, which you might see in the Jan to March numbers as well.
Interesting, Rahul, point that you make about platform companies. Good morning, Hira here. The question then for me to you is, what do you make of the commentary that came in from Swiggy yesterday? I think what they are targeting is absolutely tall. I mean, adjusted EBITDA at 10,000 crores by FY31, gross order value which is up 30%, your food delivery gross order value to grow 2.5 to 3.5 times, and in consonance to what happened with a Zepto as well in terms of the IPO, do you think that could be a gain for a Zomato or a Swiggy? How would you place or prioritize in terms of your bets between the platform companies?
So incidentally, Hiral, I was there at the Swiggy analyst meet, so I heard them firsthand. And see, I think, Hiral, sometimes the proof of the pudding is in the eating. And I think, I would like to give the benefit of doubt to the management and believe that they could potentially execute this number that they have said. But let's look at it from the market perspective. This is a company that's currently doing annualized losses of somewhere around 1,500, 2,000 crores and is talking about going to a 10,000 crore number in the next 5 years. Now, ideally, that would be music to the ears. And in most cases, you would have seen the stock at a 20% up move on that particular day. But it managed at best to do a 5% up move before closing in the red yesterday. So I think your point is well made and well taken, that I think the market has discounted to a large extent how the execution is going to pan out. Now, Zepto's IPO is not completely shelved. I think if you see the commentary that they have come, yes, it may not go through. That's another matter. But they have said that they will try again in 2 to 3 quarters. And I think they have got Norges and Motilal Oswal that have come in for part of the investment in this round that they were on the street. So, but let's keep whether they list or don't list aside. The fact is that it is a competitor. This is a 7-player market. People are fighting for market share. And the only 2 ways that you're going to grow your business is either acquiring new customers or increasing the frequency of customers. Now, in that situation, you also have to look at which of these is best capitalized, because I think if you looked at Zomato, they have talked about increasing their capex per store from about 1.5 crores to about 2.5 crores, which is very similar to what Swiggy said in its analyst meet yesterday. So you have to look at companies that are well capitalized, that have good cash on the books. And in that backdrop, I think Eternal would probably be the best way to play it, which is growing its food delivery at 18-20%. And the quick com in, depending on the quarter, you pick up at anywhere between 40 to 70%. So I still think you could get 15-20% in Swiggy, but my sense is if you have to play, the top recommendation would be Eternal.
Okay, Eternal. Rahul, we have the management of Pearl Global who's just waiting by. But before we let you go, I want to take your 2 bits in terms of what you think of this entire CAS in terms of the closing auction session that happens in the last 15. How do you think the markets, institutions reading into it?
Well, I think we're still getting to terms with it. I think the first day was a bit of a shocker when you had the Nifty sort of, go up. And I think on a lighter note, the fund managers don't get access to their phones for at least another hour because of the market closing. But I still think it's a little early to call, Hiral. Obviously, the initial start has been a little jittery, but I think it's too soon to take a call on how this will eventually settle. I think I might have an answer for you on this maybe in a couple of weeks from now.
Pretty much what everyone's saying. Thanks so much, Rahul, for taking the time. The fact is that it's going to take a little bit of time for this to settle in. All right. And we'll get used to it as well, eventually. We'll figure out what data to show you and how to comment on it. In fact, Hiral already said that Pearl Global is joined in. And in fact, the company had a strong quarter with volume growth driving earnings, a better product mix as well, and operating leverage also playing into lifting those margins as the management maintains its FY28 growth target. We'll talk about that with Pallab Banerjee, the Managing Director and Chief Executive Officer of Pearl Global. Pallab, thanks so much for taking the time as always, and pleasure speaking with you on NDTV Profit. Good morning and congratulations on a pretty good set of numbers. Did it go along the lines of what you were anticipating? Did you face input pressures at all during the quarter, and how did you manage those? You seem to have managed them pretty fine. You might just be on mute.
Sorry, yeah. Good morning, first of all, and thank you for having me on this show. Yes, conditions are not easy and not simple at point of time, but something that we could forecast, and we have been taking actions to mitigate some of these risks that have been coming along. And yes, we have been discussing for last 1 year, like last full year, we had the tariff risk that was hanging on us. And now we have the problem of the macros that's not in favorable. And I think challenges will continue. That's how the world has become now. But we have to figure it out. And it seems like this quarter, like we have done well because order books have been good. And what we have seen, despite the issues of the Iran war or the inflation, the consumer sentiment was forecasted to be, going down. But the behavior has not changed as yet. The consumer has been buying. So that's the good part that we are seeing from the Western markets.
Right. Pallab, good morning. This is Hiral on this side. If I have to look at the first quarter, I think the best ever quarter when you talk about the revenue growth, profitability growth, and I'm happy that we're not talking to a company who belongs to a sector where in the last couple of months and years we've just spoken about the negative news and the impact of it when it comes to tariffs, when it comes to Strait of Hormuz being shut. So it's good to talk at a time where you're seeing those positive trends come in. Now, the kind of growth that you've seen in the first quarter, do you think this is something which will probably be the new normal for the rest of the quarters as well? Or Are you seeing some bit of normalization come through yet again?
See, the way the world is changing, it's changing very fast at this point of time. And the geopolitics and everything that we are seeing and the surprises that is coming up. Yes, Iran war has been off and on, like, the crude prices are going up and then coming down. That kind of seesaw also we are looking at. As I said, the consumer behavior in terms of the Western markets that we are catering to, let's say US is one of our biggest market, followed by the European, Japan, Australia. On these markets, what we are seeing is this quarter and even for the second quarter also, like how the consumer behavior has been. That's good. So that means the order books are fine. We have to definitely figure out how do we maneuver through the other challenges. Logistics is definitely a big challenge at this point of time. The energy prices and other inflation that is happening, that's a challenge. So we have to maneuver through all these challenges. It seems like the order book is fine. How do we get the deliveries made? How do we manufacture? How do we ship it out? So at least that's the focus at this point of time.
Pallab,
the question that you had, what's going to happen for the next 3 quarters? We have the visibility of the second quarter, definitely. The third quarter is just getting booked at this point of time, or just getting booked. It seems to be fine.
Guys, we can push.
Fourth quarter, we don't know as of now. That's yet to book.
I do want to ask about the gross margins, and that stood out as one of the key wins in the quarter gone by, and seemingly that's on account of the shift in the mix that you've been undertaking. Do you anticipate that will accelerate in the rest of the year? How do you end Q4? Do you anticipate that gross margins can climb even higher?
Gross margin depends on various factors of what kind of order book that we have, which client, what product. So this is the season, fashion is all about seasonal products. So this particular season is a lot of outerwear that gets shipped out from our factories, which are at higher price points. So yes, we see a little bit. I think this particular range that we have seen, that should be maintained, and we should be able to deliver in that range. A little bit of up and down always happens because the raw material prices, the cost of production, that's something we are seeing too much of variability that is happening in the market in these last few years. Otherwise, we are on track.
Well, in terms of volumes as well, little over 20% is the kind of growth that has come in. Are you seeing good visibility, at least in terms of where the order book goes? I know in terms of spends and what the clients are spending as well. What are you hearing from them?
So yes, that's the most important part. Order book is fine. We are seeing a healthy growth in the order book, and in the first quarter we have delivered that. For the rest few quarters also, we are seeing that this trend may continue or looks like it's continuing. Consumer spend, yes, US had some big events, like we had the World Cup there. And also, as I said, like the sentiment because of the war and the inflation didn't affect the actual consumer as of yet. We haven't seen that behavior. If you compare with 2022, when Ukraine war had started, that's the time as the fuel prices went up, the inflation came up, the consumer behavior was very different. So compared to that, this year we are seeing a much better response from the consumer. I think with that thing, if it continues, we are in a good position. We definitely have a backdrop of the overhang of the tariff which happened last year, which definitely affected our pricing because we had to give a lot of discounts. So this year, at least the tariff, what we are seeing is better. The retailers are getting some refunds from the US government. So at least their financial position is also getting better. So these two are good sign for this industry, especially if you talk of US market.
Okay. And Pallab, if you have to look at the various FTAs, you have the UK FTA. So what I want to understand is, what are the kind of benefits that could actually accrue to a company like yours? And you have the EU FTA as well, which is in the works. So on these aspects, any newer markets and potentials that you're developing?
So we already have a fair share of business with UK and European Union. As I said, our big 5 markets have been like US, UK, European Union, Australia, and Japan. So Japan and Australia, we already have an FTA. European Union and UK, we are looking for. UK has just started, and European Union is in the cards. I think by 2027, we should have it implemented. And UK also, there is a lot of trade negotiation at this point of time happening. And that's the market where the tariff was going up and down, a lot of variation that we have seen in the last 1 year. I think whenever a country like India, which has got a huge potential, and we have been talking about China plus one for some time, and this kind of FTA gives a very sound, I would say, a position where people can invest, especially in the raw materials. Like, India has been always very cotton heavy. Compared to that, if you look at the other big apparel manufacturing companies or countries like China, Vietnam, those kind of countries have really developed a huge amount of raw material base in terms of synthetics, polyesters, nylons. So those are things like India has missed upon. And these FTAs definitely helps to bring up that ecosystem within our country as well. So I would look forward to much better investments in India, much growth in India. And of course, I think the government also have realized and there have been so many PLI schemes. The states are definitely competing with each other at this point of time to draw investments. So those are, I think, very positive sign that's happening in India at this point of time.
Got it. All right.
Because we are in other countries as well. So we have been already servicing these markets. So what we are seeing from the customers a very positive response because they get one more, supplying country that we can provide to them from India as well at the similar kind of price points.
Yeah.
That's a good drive.
Certainly. The street is liking what they're seeing in the numbers. The stock is up as much as 4%. Thank you so much, Pallab, for taking the time. Pleasure speaking with you. Wish you all the best for FY27.
Thank you.
Right. Well, there you go. 4.6% now at the high point of the day, and quite a few others also reacting individually. So it continues to be a very stock-specific, very bottom-up market with some of the momentum from the broader markets also missing to a certain extent in trade today as well. Just about 0.2% higher for the mid-cap index and about 1/3% lower for the benchmark Sensex at this point, the Nifty 50 trading with cuts of about 0.1% or so. Let's talk about pharma as a pack now, and on the back of earnings, they've delivered their Q1 earnings with India remaining the growth engine during the quarter. Understandably so, you were expecting US to be a tad bit weak. Varsha joining in to give us some perspective on that before we speak to Vishal Manchanda of Systematics to find out what he thought of the numbers. Varsha, morning. What are the key details to focus on in your opinion?
Well, let us divide this into different segments. One is, of course, the India business, which saw a good growth when it comes to Q1. Domestic market delivered, another strong quarter, I would say. Chronic therapies continued to outperform. Talking about the US business, which was actually mixed. If you see, the US launches actually supported growth for Cipla and Mankind. Sun's US generic business remained weak. Generic price erosion continues, and the Revlimid drag also continued, to which Dr. Reddy's and many other companies saw that weakness. Talking about the CDMO and custom synthesis, which actually did very good when it comes to this quarter. Divi's delivered biggest surprise this quarter. Custom synthesis for the company grew almost 45% year on year. Shilpa's biologics and CDMO business gained momentum. Even yesterday, Navin Fluorine also saw good set of numbers, and Jeffries is actually expecting CDMO to be the main growth driver when it comes to Navin. So overall, India business and CDMO were the strong growth drivers when it comes to pharma.
Lots to watch out for the sector, though is trading absolutely flat. Thank you, Varsha, for setting this up for us as well. Vishal Manchanda, Senior VP Institutional Research at Systematics, joins in. Vishal, welcome to the show. Always a pleasure to speak to you and get your insights as well. Now, if you have to talk about the companies that have actually reported numbers so far, I think almost all of them, what has been the key highlights that you have picked up so far?
Right. So I think coming to India, that's doing pretty well for most companies. For some, it's because of the chronic business that they have, and GLP-1 launches are also helping companies. Licensing is another theme that's helping the India growth for some companies. Acute, I think, continues to be soft. No major changes there. it's probably around 7-8%. That's the growth that we are seeing in that segment. On US, I think US is always company specific, but for most companies, the US generics is a pain this quarter. It's a decline on a YOY basis. Cipla and Reddy's, we have seen a massive decline. So Shilpa Medicare and Divi's are two companies that outperformed. So Divi's is one that massively outperformed expectations, led primarily by their custom synthesis business. They got new. So for the first time, I think we saw custom synthesis giving about 60% of their top line, which usually has been around 50%. That has now gone to 60% of the top line. So that helped margins as well as growth both. Shilpa is doing well, but it was slightly lower than our expectation, while on a YOY basis, they did extremely well. And that was because of a few launches that they were able to ramp up in the US. So that helped them during the quarter.
Specifically on CDMO though, and Vishal, the point is that a lot of these companies have reported pretty good set of numbers. Would you say that that is replicable in the rest of the financial year? Are there headwinds that they might face?
So I think CDMO is, so there is always some seasonality in CDMO. Not every quarters are that strong for companies. So certain quarters you get to book supplies, while certain quarters you don't get to book those supplies. So we'll have to be cautious there. But I think as a theme, it's not the way it's not shaping up the way we would have expected across companies. It's only shaping up selectively. Only certain companies are meaningfully benefiting, and I think those companies which have large capacities in place, a strong balance sheet to invest in capacities, and very and long relationships with innovators are those that are performing in the CDMO opportunity.
Okay, so therefore, Vishal, in your opinion, not just in FY27, but heading further into FY28 as well, how do you play ideally the pharma space without necessarily going into details of which company stands out as the top of the pack or not? You would have to splice this, right? Some people have said that you should look at India-focused companies as those that will likely lead from the front, those that are making formulations that cater to chronic diseases. How should you look at it?
So India would probably be in that zone only, about say around 8 to 13% growth. Some companies are outperforming, but the challenge in picking up India-focused names is essentially valuations. So the valuations are kind of take care of the growth opportunity that we see in the space. US generics is going to be like is going to be a pain for most names, but there are. So US generics, if you look at, that's priced in for certain companies, like the pain that's expected is priced in for certain companies. But if they are able to kind of do something around biosimilars, like say a Dr. Reddy's, if they deliver on the biosimilar opportunity, probably that would be a name to look out for. But there are uncertainties to those approvals, whether they come through or not. There are compliance challenges, there are product levels challenges. All of those will need to be factored in. But I would say rather focus on themes where the pain is already factored in, rather than the opportunity being factored in.
Yeah, fair point. Vishal, thanks so much for taking the time. Pleasure speaking with you as always.
Thank you.
Let's head across now to Puneet, who's going to be speaking with the management of Samvardhana Motherson. Over to you, Puneet.
Well, thank you for that. We've seen good set of numbers come for the company at a time where there has been volatility come through for all these companies, and hence this conversation is very important because stocks are up and flying 5%. Let me welcome in our guest now, Pankaj Mittal. He is the whole-time director and president at SAMIL, and Gandhar Tongia. He is the group CFO of the company. Gentlemen, thanks so much for joining in. We've seen exceptional, cost increases in this quarter across geographies, across verticals for you as well. Talk us through how have you, looked at and navigated these challenges, because they have been more pronounced in certain raw materials like aluminum. Is this largely a pass-through, as you mentioned in the past, and are you expecting that to continue also in the first half of Q2, as well as any kind of guidance that you can give for the same?
You're absolutely right. This was the best ever performance as far as the top line of the company is concerned. We achieved our top line of 35,000 crore rupees. Generally speaking, June quarter is comparatively inferior in terms of top line than March quarter. But as a matter of fact, June quarter top line was better than the March 26 quarter. You're right. We, like other industries, also faced a bit of headwind because of commodity prices. And we also noticed a bit of a contraction in gross margin. But over the period, we have taken several cost optimization initiatives. We have also invested in technology. We also got some benefit of leverage because of the robust growth in top line by almost 17%. And as a result of that, between June 25 and June 26, we were able to expand our EBITDA margin by almost 16 bips. You are right. There are some costs which can be passed on. For example, in wiring harness business, in general, we are able to pass on the increase in copper prices between a quarter or two. And we anticipate that we continue with similar model in this business in quarters to come.
Also, let me just quickly get in the new businesses as well, because you are going to be seeing a new factory come up for the consumer side in Q3. But how did these businesses fare in Q1? You had aerospace that has grown 20%, 25% every quarter for the last few. Has that continued? As well as any kind of commentary that you can give us on the consumer side of things as well, because now that the Q3, we will see the plant come up, this year we'll have a very meaningful expansion in terms of revenue from that vertical.
Absolutely. Both of these businesses, consumer electronics as well as aero, are the best example of our demo capabilities beyond auto. Aero, which was started almost 4 years ago, delivered a top line of 2,500 crore rupees in the last financial year, and is continuing with a similar momentum even the current year. The order book has improved to almost $1.9 billion with healthy EBITDA margins. Consumer electronics is comparatively a younger business. We are into second year of operations. We already have 2 plants up and running. The third plant, which is equivalent of 33 football grounds, will be made operational later this year. In this particular plant, we are going to make additional investment, cumulatively almost 6,500 crore rupees in the next 2 to 3 years. So all the businesses are growing, and we anticipate that emerging businesses will continue to grow in healthy double digits.
But Mr. Mittal, let me get you into the conversation as well, because largely a top-down macro question, because do you feel that we've reached a point for the traditional auto ancillary business owners, they will need to diversify into these other precision engineering verticals or industries like aerospace, where they can use their manufacturing experience? Do you feel that that stage has already come through and is now more of a necessity? We've seen multiple key players enter the aerospace vertical, but what is your opinion?
Well, it's a question which has to be answered by each company as to what they're doing and what are their strengths. As far as Motherson is concerned, we always focused not on a particular component. As you see, our vision has been to be a globally preferred sustainable solutions provider. And in many of these cases, we have been handpicked by the customers. So when we went into consumer electronics sphere, that was not something which we had thought of at that point of time. The customer handpicked us and they asked us to do this business. They found us to be a good partner, and we embarked the journey together with them. So Motherson's growth has been built on relationships which have been over a period of time built on trust because of continuous performance with all their car makers, and that led to relationship with OEMs from other industries as well. So we continue to pursue that path, growing both in the automotive side, and as we set the next 5-year vision of being a 108 billion revenue company, we also had step by step, if you see over the last 5-year plans, deliberately focused to keep growing these new businesses which were non-auto as well. Because then they give us growth momentum that we can keep growing, not just in the automotive side, but also on the non-automotive side. It doesn't mean that we stop growing on the automotive side. We continue to grow very well. And in these dynamic market environment, we do get a lot more opportunities from the customers because there are a lot of difficulties. It's a lot of pain in the market.
And most certainly, Mr. Mittal, that was exactly my next question, because we've seen globally also the impact coming through in markets like China. Europe also has seen very specific only model lying growth, while Japanese for your is the next growth phase for you. How are you looking at things now within these specific markets, and is that demand momentum expected to come back anytime soon?
See, as we mentioned that China has slowed down, while South Asia remains a bright spot. The European OEMs are launching new vehicles, which are expected to support the industry growth. And on the North American side, we have seen quite a stable passenger car market, and the CV market is growing again at a rapid pace, which had gone down earlier. So it's been a good growth market for us in that sense. We see India growing at a very rapid pace. So we had one of the healthiest growth in the Indian passenger car and other segments, two-wheelers as well as CVs, because after the GST corrections amendments last year, the growth momentum has carried forward. We are a powertrain agnostic company, so our products are going into whether it's a hybrid vehicle, it's a pure ICE or a pure electric, or any kind of vehicle. So we continue to support our customers in all their new launches, whichever way they are. Of course, if we are on a particular model and that goes down or the volumes goes down, there are certain impacts which will take place. But you have seen also that in the last 1 year, we have restructured our operations in Europe, which have yielded results. And the results which we see today are also testimony to those actions which the teams have taken globally.
And most certainly, Mr. Mittal, because you went global a couple of decades ago, but the India opportunity now, even in Q1, was very surprising, right? Because generally a slow quarter, but led by the GST benefits that's continued, that's been a big market. Do you see that change as structural, because India contributes roughly 20-22% of your revenues? Do you feel that given what the changes, given the launch pipeline of the car makers over the next 3 to 4 years being so strong, that percentage can go to that 20, 25, 27 odd in percentages as your revenue contribution?
Yes, we are present in all the segments, and we support both EVs, hybrids, ICE engine powered vehicles. As I mentioned, we are mostly powertrain agnostic. And so far, we see the car makers growing. We see them setting up new plants. So announcements of new plants are already there. We are also, we follow suit with them and plan our capacities. So we have never let them down, and we have always supported our customers in this growth trajectory, and we will continue to do so.
No, but Mr. Mittal, my question largely being that, it's never been a time where you've seen all the top 4 car makers have 10 plus launches each for the next 4 years, as well as the refreshes coming in, the EV cycle coming through as well. So the question coming in from that side, because you're seeing a very strong momentum there, so are you seeing that as more structural in nature is where the question is coming from?
Motherson's viewpoint has always been that never second guess the customer. So we just follow our customers, whatever volume projections they give, because they have also a lot of stake and they do share what best they see at that point of time. So we follow them, and that's how we have invested in greenfield sites. The sites which we are investing in today are mostly in the emerging market segment. They are both also for vertical integration, because we need to do a lot to make ourselves competitive and provide most optimized solutions. Also de-risk our supply chains. So wherever we see risk, we have invested in our own vertical space. There are new facilities, new competences which we are adding in India, like our PCBA facility we have added, so that we can do more and more in-house as well as to support to our external customers. We are expanding and setting up facilities in the aerospace side, elastomer side, and also to become more and more optimal supplier to the customers. We have invested in logistics as well as in packaging. So we have made joint venture with the best packaging company in Japan, and we are setting up 2 facilities, one in India and one in Hungary, to provide solutions both in India as well as in Europe in terms of packaging solutions, because they are all very important, both from sustainability point of view as well as for having the best knowledge to support the customers with the best packaging materials.
Well, Mr. Mittal as well as Mr. Rongia, thanks so much for joining in and giving us your perspective about the result. We wish you the best. Look forward to our next conversation. But that was the management of Samvardhana Motherson. Stay tuned, a lot more action on the other side after this very short break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal.
Welcome back. You're watching India Market Open, and it's been a bit of a quiet start to trade this Friday, and this is in line with what you're seeing in risk assets around the world. Just about 1/10% lower for the Nifty 50. It's been a pretty narrow range, barring that initial move downward. We've recovered from that a very short time that the Nifty 50 spent lower, and we're trading just about flat. The broader markets have also recovered. The mid-cap index now trading with gains of about 0.25%, and the small-cap index just about flat. But NBFC stocks under a tad bit of pressure now. There's an RBI circular that is prohibiting a revolving line of credit by NBFCs as well. In fact, that's exactly what Neeraj is going to be speaking about. Neeraj?
So what's happened, and why is it that NBFCs are down today? I think the one reason is an RBI circular which prohibits revolving line of credit by NBFCs, which effectively impacts growth and gains. Now, are you confused with this? Let me try and simplify this for you. What's happened is that RBI has released a draft direction proposing a significant overhaul of the lending framework as it exists right now. And what does this do, therefore? The draft prohibits revolving credit products by NBFCs and housing finance companies. Effectively, what NBFCs can do is only offer credit products which are in the nature of a term loan. Now, what is a term loan? Let's try and get that cleared as well. I think that definition will come up on your screen. It's defined as the one with a predetermined repayment schedule and a non-replenishing sanctioned limit. The definition, of course, goes on to say that this is only with RBI authorized credit card issuers which are exempt. Bullet repayment structures remain permissible. So therefore, only term loan products are allowed, or the predefined term is allowed. Revolving credit products are prohibited now. What does this do? This effectively it hits a very prevalent line of business across the product line items for many NBFCs, not all, but many. It can impact new customer acquisition as well, growth as well as stickiness that NBFCs currently enjoy with a bunch of customers. In fact, IIFL believes that the fee or the yields could be impacted for lenders having meaningful exposure to this line. Now, which are the ones which have got this meaningful exposure? As per brokerages, Bajaj Finance, the consolidated number 15%, the standalone number 20%, which is why it's amongst the top losers today. Tata Capital, high single digit to low double-digit exposure. I think there are some other names as well. CIFC Chola about less than 1%, LTF nil. So maybe these won't get impacted too much. Poonawalla is not impacted. SBI Cards apparently is marginally positively impacted as a result of this. Now, of course, IIFL also goes on to say that the long-term demand for the long-term demand impact is seen very, very limited. So that will not have a big view per se. NBFCs are likely to launch compliant products soon. They will kind of take over what has been a prevalent line, let's say, for example, for a Bajaj Finance, etc. And revolving credit ban may not dent demand too much because consumers as well eventually want credit. At some point of time, if they do not get the credit that they desire, they'll go for the credit which is available as long as they get to consume the products that they want. But near term, NBFC numbers could take a bit of a hit, which is why if you just pull up those stocks, Bajaj Finance principally, and it started off about 4.5% lower, will come up on your screen. It is still down about 3.85%, and then a couple of others, Shriram Finance, etc., could all be in that wake as well. So that's the reason why NBFCs are down in trade today.
Okay, so this is very interesting because with the stocks that Neeraj was actually mentioning, let's just pull up our SBI Cards as well, because as for what the brokerage is indicating, it will be marginally positive when it comes to SBI Cards, and that stock has cooled off from the day's highest levels, but still seeing gains of around 0.3% as we speak. In fact, let's just quickly pull up Nifty 50 as well and see what's happening in terms of markets as we speak. If you see, I mean, no major moves, 24,617. Pretty much flat. Let's pull up Bank Nifty as well, and then we look at the sectoral heat map quickly to understand what's really trying to balance it out in terms of trade today. I mean, there you go. IT top gainer, exactly what Alex was mentioning, 1.8%. Auto is also pretty strong in trade as we speak. But what's losing out is with regards to where the defense space, if I'm not mistaken, goes. That's
it's the financial services.
Financial services.
Yeah, financial
that is
services
under pressure. You have banks which are down almost 0.2% as well. So, but clearly, IT is hogging the limelight, followed by auto as we speak right now. But moving on from the secondary to the primary markets, you have two IPOs which actually open up in today's day of trade. Leap India. Now, this is a 2,500 crore IPO which opens up with strong leadership in the pallet pooling business. It's backed by a 90% market share and growth potential, though raw material volatility and rising competition remains key risks here on. Puneet joins us with more details, and this is a company which is backed by KKR. Puneet, what are you picking up in terms of Leap?
Well, thank you for that. It's definitely in a very interesting place of supply chain as well as asset pooling, and hence the IPO becomes very important. Opens up on August 7th to 11th with a price band of 151 to 159 rupees. Now, the total issue size is roughly 2,480 crores, but almost 2,000 crore of that is an offer for sale. So you have to watch out for the company's commentary going forward. But when you look at the SWOT analysis of the company, asset pooling as well as the focus on asset sweating continues to be an important factor that the IPO as well as the company will continue to focus on. They also have almost 90% market share in a particular segment of pallet pooling business, and hence that is one of its key strengths as well. When you also look at, it's not very easy to break into this industry given the high investments that are required as well as the technological expertise, and that will be one of the company's strengths as well. But there is, of course, receivables that may be impacted because of delayed of payments, and that has been an issue for the company in the past too. So that's a key weakness, as well as the volatility, as you mentioned, in both the raw material prices as well as in timber as well as in plastics as well for the company. any delay in receiving of pallets will also be something to watch in the near term for the company. While opportunities, there are multiple key ones. The data which is very, very important in this industry to plan their purchases as well as business going forward is a key raw material for them essentially, as well as the asset light model for them. They don't own it, they are pooling the assets together, and hence much more easier on the balance sheet. But finally, you have to watch out for some of the threats as well, because the global majors have now started to come into India. You've seen logistics as well as supply chain being a key focal point, and hence and a key choke point also at this point of time. So a lot of global players entering the market as well as contracted labor that could have some impact. In Q1, we saw that for most players, something to watch. So this is the SWOT analysis for Leap India.
Got it. All right, Piyush, thanks so much. Puneet, thanks so much for that. Sorry, I was thinking about something that I was speaking to Piyush about earlier. All right, Technocraft Ventures IPO opens for subscription today, and Parth is joining us with a SWOT analysis of the company. Parth?
So another IPO that is opening today is Technocraft Ventures, and if we do a quick SWOT analysis of the company, starting with the strengths, they have a strong order book of 1300 crores, which gives them a good enough visibility on the earnings side going ahead. Also, their return ratios are pretty strong. ROE stands at 26.5, ROCE stands at 27.7. It shows that the company is able to efficiently use capital in its operations. Now, coming to the weaknesses, just two states, that is Uttar Pradesh and Rajasthan, contribute to around 88.6% of their revenue. That was back in FY26, so that is going to be a key concentration risk for them going forward. Also, when it comes to solo bids, the company was able to win only 8 from the 17 bids that they did in FY26. They have a low conversion rate of just 29.4%, so that is going to be something that we need to watch out for. Coming to the opportunities, well, this is a huge industry. From FY27 to FY31, government is planning to spend around 7.6 lakh crores, and that is towards the water infrastructure. So this is a huge opportunity for them, and they've already started winning some orders, like an L1 order of 196 crores for the Delhi Jal Board project. So if they're able to win more such orders in the coming time, that's going to be pretty good for them. And lastly, on the threat side, government is 100% of their revenue, so there is risk of some receivables, some policy issues that is going to be there. And also they have a debt of 76.7 crores, so that keeps that leverage risk in the picture. So that's the quick SWOT analysis of Technocraft Ventures.
Thank you, Parth, so much for joining in always. Sorry, again, I've got into the muscle memory, but thank you, Parth, for getting us the details in terms of the IPO. Both of them looking very interesting.
Anant Narayan, former whole-time member of SEBI, but more importantly, a very astute mind on a lot of things, including the topic that we're going to talk today, joins us really. And Anant, it's been a raging debate, considering this just started, but from the looks of it, will probably continue for a while, and that is the CAS, or the closing auction session. And what does it do to a market which is full of opinions about whether a particular move is good or bad? I would love to know from you, though, as you join in, thank you so much for joining in, about whether it's a case of the intent being right, but the first draft of the executed law not quite being up there, because the whole of Asia does this, the closing auction session. So it's not something that India is an outlier when it's introduced it.
Yeah, thanks for having me, Neeraj. Look, you're right. There are multiple reasons explained over 2 consultation papers that SEBI issued, I think in December 24 and August 25, why we considered this, why SEBI considered this. Amongst them, of course, were representations from global passive funds, which, by the way, constitute 30% of FPI assets under management in India, and active funds globally, saying that, no, this is something which is there in every major market, not just in Asia, but every major market across the world, and India is kind of an aberration. And for their own tracking errors, it's important that something like a CAS be available. Beyond that, Neeraj, there were a couple of other reasons as well. One is, of course, that index providers, they look at and they rate markets based on multiple parameters, microstructure parameters. One of them is the availability of CAS. So, India comes as restricted in respect of not having a CAS till now. And therefore, that was kind of, in a small way, weighing down on the weightage given to India. And finally, there was also, of course, it was not the primary reason, but, there were always some murmurs in the market about the activity in the market, particularly on rebalancing days and on expiry days, right? And the point being that sometimes the market moves seem unnatural in the cash market. And then there would be a lot of whispers and murmurs about something happening. So the question was, how do we improve trust in the ecosystem? And that's why SEBI conducted this very comprehensive study across, looking multiple jurisdictions, and came to the conclusion that yes, cash does happen everywhere, and it does, literature suggests it does improve the trust in the closing and reduce volatility quite a bit. And it also said that implementation can be very tough, which we put out in the first consultation paper in December. In fact, countries like Hong Kong went through a torrid time implementing this. Thereafter, there were multiple rounds of consultations. And yes, there were many domestic players, some brokers, proprietary traders, mutual funds who were not in favor of this. And of course, the global market participants were hugely in favor of this. So based on all the feedback, a second consultation paper was brought out, I think sometime around August 2025, which tried to address all of these issues. So I think it's the right design. But while I think SEBI and the market participants tried to prepare for this, clearly the first few days tell us that there are some tweaks required or some changes required. I'm not so bothered about the lower volume per se, but the fact that your prices seem to move beyond what it was at 315 and beyond what is indicated in the open derivative markets, that is definitely a matter of concern, which I'm sure SEBI and all stakeholders will get together to figure out what is it that is preventing people to come into the cash and ensure that aberrations of this kind are simply arbitraged away by general participation.
Yeah, no, Anand, but I want to probe that point a bit because you've spoken to a few people in the trade over the last 48 hours, multiple conversations, and one of the things that comes up right now is that on the volume part and the participation part, that retail may not completely understand right now. They will at some point of time and then therefore start participating. But the two immediate issues or two issues of immediacy right now, one seem to be that the two exchanges have very varied participation, even at the numbers as they stand right now are low, part one. And part two, that a very small volume, a dealer from a large brokerage was making this point that on expiry days, it's not a fair game bang for the buck, simply because the eventual pricing gets decided by a very low volume of quantum traded. How would you respond to both?
So you've packed in a lot of points there, Neeraj. Let me try and address some of them. So this point about mismatches between exchanges, frankly, was there during the volume weighted average price as well. And your market participants would know this. In the larger exchange, the volumes would be in the region of 8,000, 9,000 crores. If my memory serves me right, in the smaller exchange, it would be a tiny fraction of that anyway. So it's not as if it's something which has come up only in cash. Now, on the point about participation, I think there are, as I said, on a look-forward basis, and I'm sure SEBI will be having lots of consultations with all the participants to figure out, how can we improve participation and ensure that these swings don't really happen. I would expect that some of the larger institutional participants, including mutual funds, maybe even some PMSs, should be watching the cash very closely and stepping in whenever they see an aberration, step in. If a price of a stock is showing 0.5% higher or lower than where the futures is indicating or where they think is a fair value, why wouldn't you step in given the amount of stock that you have or the positions and risks that you have? In terms of retail participation, you're right. It will take time for the retail to digest this. But I'm also given to understand that in certain broker front ends, two crucial pieces of information are not readily available. The first thing is the indicative price, where the auction will actually land in case it was to be held at that particular instant. And the second is, what is the order mismatch looking like in the book for that particular stock? These are two crucial pieces of information for two reasons. One, it gives the information to the derivative market so that they have some kind of an anchor knowing where is the price looking like right now, knowing that it's not the final price. The second, whenever you see an aberration in terms of indicative price moving away from what you think is a fair value, it allows for participants to come in. In fact, in the SEBI circular that came out, it was made very clear that this piece of information should be made available at all times. I think there is some technology changes which have to be made to make this perfect. I'm hoping it will get done very quickly, in which case you and I will be able to see aberrations and quickly just see. That's the whole point of this game. In an efficient market, the moment you see aberrations jump in or throwing up, automatically players should flood in to arbitrage away whatever those dislocations are.
And then the argument that some people would make is that if the depth of Indian market or the lack of depth relative to other markets could be a reason for ensuring that there is certain set of short selling, etc., not being allowed, the same yardstick should hold true for introducing a globally accepted norm, because it may not be in the Indian market may not have the right depth to be able to absorb it in its entirety right now. I mean, I'm sure this has been thought through, but implementation teaches us a lot of things, right? Almost everybody who's come, Anant, talks about this 3% band, as carefully as it may have been chosen, needing to be tweaked for the time being to allow the markets to adjust, for example, but it doesn't seem like it's going to go that way.
Look, I'm sure SEBI is having multiple conversations, and I'm sure the system as a whole will co-create whatever changes are required to ensure greater participation and greater trust in the ecosystem. Just a couple of points I want to make, Neeraj. Look, you make a good point, and I'm sure your market participants make a good point, that the volumes in the derivative markets, especially on expiry day, are far higher than the volumes in the cash market. Again, I want to emphasize, this is nothing new. Even in the VWAP process, we had a situation, and I remember when I left SEBI in October, I was doing the analysis that time. The volumes that we were seeing in the index option market on expiry day, in cash equivalent terms, was 700 to 800 times the underlying volume in the cash market. So this mismatch that you have, which, by the way, many SEBI officials have spoken about in the past as well, is a matter of a bit of concern, which we as a system have to look at. Now, your second point, just to correct you a little bit, shorting is not disallowed in India. SLBM does exist. The problem is the SLBM, the stock lending and borrowing mechanism, which facilitates shorting, is not really used, because anybody who wanted to short would use the derivative market, which is far more liquid and offered leverage, to do shorting rather than going through the SLBM process. I'm actually hoping that with this cash coming through, SLBM will get a fillip. In fact, I'm told SEBI is working on improving the SLBM mechanism, making it more easier. I'm hoping, therefore, that actually cash market volumes go up. Finally, again, I don't want to presuppose what the people in India want to do. We are a free country. We can do what we have to do. But globally, Neeraj, most contracts in derivatives are not held to expiry. What happens is people either close out their positions or roll over their positions well before expiry. Okay? India is kind of unique in the sense that not only are our volumes in derivatives far higher than the underlying cash market, numbers I gave you, it's also a market where many people carry their open interest into expiry, despite this mismatches. So the risk that we have is quite large, and I would frankly be happier if this imbalance was addressed a little bit and more people, close positions earlier rather than wait till. And this has nothing to do with cash. I'm saying it is a generic issue, even if you're taking cash.
Yeah. No, and I'm sure that, and your point's well made. I'm sure the SLBM norms as well. I wouldn't be surprised if there are reforms on the horizon out there to make sure.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's
Good morning. You're watching Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Shreyanshi Singh. First up, let's take a look at the top headlines. Bitcoin trading in a range of $64,000 to $65,000. US and UK formalized joint stablecoin framework. Tokenized RWA DeFi deposits tripled to $7.4 billion in the second quarter. And lastly, Moscow Exchange plans standalone digital custody platform. Time now to take a closer look at some of these headlines as well. Let's talk about Bitcoin in terms of the trading range, and you're looking at $64,000 to $65,000 levels on lower volumes. You do have US listed spot Bitcoin ETFs that took in about $244 million, while Ether funds also added roughly $61 million in just one session, the third straight day of net inflows that too. Let's also move on and talk about US and UK regulators, and they've agreed on a shared policy framework for stablecoins and digital assets as a whole, aligning standards for reserves, payments, and tokenization across the two markets for issuers and users. It basically signals long-run support for fully backed payment stablecoins and tokenized assets. Let's move on and talk about tokenized RWA, or real-world asset. DeFi, or decentralized finance deposits, that have tripled on a year-on-year basis. You're looking at $7.4 billion in the second quarter, and the growth largely is driven mainly by conventional financial products, the likes of tokenized treasury funds, multi-strategy funds, and private credit as well. Lastly, let's also move on and talk about Moscow Exchange, that is developing an independent digital depository and custody platform for crypto trading and asset storage, with a launch also targeted for late 2026 or early 2027 for that matter. The initiative is emerging alongside Russia's new digital asset framework, which starts taking effect in this September of this year as well, and is intended to really regulate exchanges, depositories, and investor access to crypto. And before we wrap, here's a quick check on some of the changes to crypto prices over the last 24 hours as well. Some bit of consolidation that you're seeing coming in, and that's across the board when you talk about Bitcoin, Ethereum, XRP, or Solana for that matter. $63,000 to $64,000 levels remain a key level really for Bitcoin when you're looking at support and resistance zones. For Ethereum, that's at $1,600 and $1,800 respectively. Let's move on and talk about the crypto strategy for the day as well. Here's what to keep in mind today in terms of the crypto strategy. First things first, the market sentiment is cautiously fearful at the moment right now. You do have some of those low volumes that are seen, so that's something that you should be looking at in terms of avoiding taking larger positions, at least at the moment. All eyes are going to be on the imminent US Clarity Act vote as well. So do keep an eye on that. But in terms of two other key events, let's talk about that as well. There's, of course, the Senate deadline that you have and the US jobs data. So those are the two important crypto events to really watch out for as well. And as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry as a whole. The team is available to really provide guidance and help users make informed decisions. And that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani, and with me is Puneet Zaveri, and this is a show, of course, that gets all your stock-related queries answered. Let's take a quick look as to how the markets are doing at the moment. The Nifty 50 is tad bit under pressure, down by about 0.3%. 24,400 levels is where we are sitting at right now. It'll be an interesting session to watch out for today because it's weekend, and we'd have to see whether we close below the 24,600 levels or we're able to manage to surpass those levels or not. But some stock specific names that are putting pressure on the Nifty, especially the Bajaj twins, because both of them are seeing profit taking in trade today. Trent is the other one which is down for that 2% despite of brokerages being constructive on this one. It's taking a knock. Shriram Finance is the other one that's seeing profit taking coming in. Geo Financial Services also seeing profit taking coming in. But on the flip side, you have names like TCS, which was in the red yesterday significantly, is now seeing some buying action up 2.3%. ONGC is the other one which is also up 1.5%. HCL Tech is up 1.2% as well. Tech Mahindra also doing fairly well. So IT names are again back in action today. Some auto names like Mahindra and Mahindra and Eicher Motors are also doing well, and you also have consumption names like Nestle and HUL also slightly in the green. But let's try to pull up the Bank Nifty and see as to what are the levels we're seeing on the Bank Nifty, because yesterday we did try to cross the 58,000 levels for the Bank Nifty, but we have slid back again, down by about 0.4%, mirroring the Nifty 50. 57,800 levels is where we're sitting at for the Bank Nifty. Let's try to pull up the mid cap 150 and the small cap 250 quickly. The mid cap 150 in the green, doing better than the benchmarks, but the small cap 250 today is almost flat, but off from the day's high point as we speak. So broad end of spectrum not looking very strong as well, just the mid cap 150 outperforming versus the benchmark. So that's with regards to where the markets go, but Transrate Lighting is the one that we're putting spotlight on the back of numbers. And to discuss as to how things have shaped up in the quarter, what the order book execution is looking like, we're now joined by Randeep Narang, who's the Managing Director and CEO of Transrate Lighting, joining us now. And Randeep, thank you so much for taking out the time. Mahima this side. I think I'm going to start by asking about the order book, because around your order book now sits at around that 16,000 odd crores, and versus that of sequentially in last quarter it was sitting at around 16,300 odd crores. So does that mean that despite of over 1,000 plus order wins that you've seen this quarter, the slippage that you've seen is on account of execution, or is there something else that we need to watch out for?
So actually, there is no slippage. We are waiting awards and the announcement of awards. We bid for around 20,000 odd crores of orders in the last quarter, and we are waiting those results. So it's a delay because normally it takes 3 to 4 months to get to know the announcement of the award. So we will definitely have opportunities to shore up our order intake in this quarter.
Narang, a very good morning to you, sir. Thank you for joining in. It's Puneet this side. So when I look at your order inflow of almost 1,000 crores this quarter, 63% coming in from the international side, and I'm sure these were bid and looked at very aggressively in the last few quarters. But how, where has the distribution come from? The question being because we've seen the geopolitical crisis in the Middle East. So I just want to understand, where is that order inflow coming from? And how much is that price and cost escalations built into those orders so as to secure your margins going forward?
So firstly, we don't bid if we are not sure and secure about our margins, and we cost it accordingly. So these are actually very healthy margin projects we have won, both in international and domestic. And principally, we have bid for around 20,000 odd crores of jobs in the last quarter, and we are hopeful that we will get 10 to 15% of this fructifying for us in our favor in this quarter. So the order book will be balanced, both domestic and international. We are looking at a 50-50 ratio going forward for the year.
Would that be, Mr. Narang? Is this more GCC, rest of Asia, Africa? Where have the international orders inflow come from for this quarter?
Yeah, basically Africa, and then we're talking about in GCC, Jordan in particular.
Okay.
Randeep, in terms of your margins, because you've slightly done better versus what you've guided for this quarter, but for the whole year, where do you expect your blended margins to be at? That's one. And you know, with regards to the overall order book that we were talking about, in terms of you know, you've said that there are some order delays that have happened, but going forward in FY27, what is the exact inflow of order or any estimate that you have in place as to what is it that you're expecting in terms of order inflows for FY27 as a whole?
So I'll start with the last question first. So we're looking at 9 to 10,000 crores of new orders, which will give our unexecuted order book as of 1st April to be around 16 to 18,000 crores. Your second question in terms of the margin guidance, we are very happy to talk about 11.7% EBITDA margin. We had talked about 11%. We said if we can do better, we will definitely try and strive for that. Despite the economic disruptions, the team has done excellently well in terms of the project mix, the execution, and making sure that the margin remains in the vicinity of 11.5% plus. And we are hopeful that we will definitely, for the full year, do 11%, and hopefully, as we have done in Q1, a better 11% guidance.
How much of this order book are you expecting to be executed in FY27?
So we looked at 22% growth over our last year numbers of 6,800. So we're looking at, let's say, 8,000 plus odd crores of revenue, and we'll build another 10,000 crores of new orders. So as I mentioned, we'll be at 18,000 crores of unexecuted order book at the end of the year, and which is typically a runway for 2 years clear for us.
Well, got that, Mr. Narang. Also, Mr. Narang, a lot of your order inflow, almost 88% in this quarter, 92% overall, continues to be from the power T&D space. If you can give us a breakup, how much of that is EPC and how much of that is within the towers and the conductor manufacturing as well? Because you have had new greenfield as well as the brownfield plant in phase 1 come through. So if you can give us some overall perspective of that, as well as your plans for utilization of the new capacity. Where is it right now? Where are you expecting it to go by the end of the year?
Okay. So principally, we've got 88% from T&D. The rest is poles, civils. And what we're looking at is this ratio will be maintained. We're looking at around 300 odd to 500 odd crores of product orders going forward in this year. So our mainstay being T&D, 85% will be transmission and substations.
And sorry, sir, if you could just give us the plan for ramping up your. So you mentioned 88% is coming in from the power T&D side. So does that include the towers, or is that reported separately for you?
No, it's including the towers, that's part of the T&D business.
So the question largely was, Mr. Narang, that how much of it is within that manufacturing vertical of yours in the power T&D side for your current order inflow, and how much of it is EPCs, and for the margins for both, are those like to like, or do you have more margin cushion in the manufacturing side of things?
So predominantly, most of our tower manufacturing gets into our EPC business. Around 85% is EPC. We do composite turnkey jobs as we bid, and towers and conductors come as part of our backward integration, which is very robust and unique, including monopoles. Now we're looking at product sales around 3 to 5%, which is what we are targeting in our towers and conductor category, which is what will help us to look at planned growth and with healthy margins. Now, the margin profile actually remains pretty similar in both. We are looking at decent margin in the level of the EBITDA margin we've just achieved. So both product and EPC are similar in nature.
Okay, all right, Randeep, thank you so much for taking out the time and speaking with us at NDTV Profit. All the best for the rest of FY27.
My pleasure. Thank you for having me.
Thank you, sir. Let's move on and let's start taking your stock-related questions. And viewers who are tuning in, you can either give us a call or send us your queries on the WhatsApp number that's flashing on your screen up there. And to answer them, we're now joined by Saumil Mehta, Head Alternate Research at Mirae Asset Sharekhan, and Samir Dalal of Nakolar & Sons Stockbrokers joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll start with the first question, which is coming in from Nanda Gopal, who's writing us from Bengaluru, asking about Angel One. He's got around 100 shares and says that it's given him good returns in the past 2 years. Wants to know if any other peers in the similar space look good to kind of enter into right now. Samir, I'll come to you on this one. What is your view on Angel One, as well as any other peers that you're looking at right now to make an entry into?
So good morning, Mahima, Puneet, and viewers, and thank you for inviting me. So yeah, this space is actually very exciting. Unfortunately for me, Angel One is the one stock that I'm not a big fan of, for the simple reason that they rely very heavily on transactional revenue and not recurring revenue. So there are many companies in this financial capital market space which rely heavily on recurring revenue and moving more towards that, which is the wealth management, the AMCs. And if you can get all of that encompassed in a single entity, then that is something that is exciting. So the two stocks that I would recommend to you from investment perspective in this space, one is Motilal Oswal Financial Services. They have a great alternative business. They have a great mutual fund business, which is growing, scaling up. They have wealth management, which is also doing extremely well. So the recurring revenue side of the business is very strong. And then they have, of course, they have the transactional, which is the stock broking and all of those, which is there. But I mean, that is something that will be okay over a period. But if you ask me, this is the kind of business you want to invest from 3-year point of view. As the AUMs grow, what we will see is the profitability will keep increasing with very limited fresh capital investments in those businesses. So that is one. And the second is 360 ONE. Yes, the valuations are a little bit on the higher side in 360 ONE. But if you look at the alternatives business that they set up, which is the private wealth, the credit funds, I think there's a lot of growth opportunity there. They are scaling that operation quite well. They also have the mutual fund business, which is at very nascent stage, which will scale up. So I think that is one of the plays that you can make. But yes, the valuations are expensive. Wait for small corrections, and then you can probably enter it.
Got that view, Samir, and welcome to the show. But next question is coming in from Jaydeep, who's from Mumbai. Wants to know actually about Transtrail Lighting. We were in conversation with the management. He's bought these shares at 690 and he's bought considerable amount of 2,600 shares. So currently he's sitting at a loss. Wants to know if he should continue to hold. Samir, you heard the management as well. Now we just had the conversation on the order book. It's giving them a good visibility as well. Stock's not performing though. It's underperformed in the last 1 year, down almost 40%. What do you make of it, and what's your advice to Jaydeep? Should he average down since he's bought it at elevated levels?
So yeah, I mean, one of the things that he can do is averaging. So we remain very constructive and positive on the entire EPC for the power T&D space. We think over the next few years, as more and more of these solar grids get put up, these wind grids get put up, what you will see is the requirement for further T&D operations, and that is where all of these companies will come into play. Now, if you look at it, the entire space has got butchered. KEC, but KEC has international orders. Then you have Transtrail. Then you have, I mean, there are multiple companies, Skipper. They're all down who are doing this T&D business because these are EPC businesses, and EPC businesses sometimes they say don't command very high PEs. But if you look at the price to earning multiple on a trailing basis, I think it's trading at about 13 times, which is relatively cheap. So downside risk from here seems limited. If they are able to scale up their order book and get further growth going, I think this stock has potential to move up to 550 to 600 in a year and a half. So you can average, but definitely hold on. If you don't want to average and want to look at something outside of EPC, you can definitely hold on to this one. I think there is upside.
Okay, all right. So that's the view on Transtrail Lighting. The next one that we have is coming in on Cyient Limited. Venkat from Hyderabad has bought the stock at the levels of 1264. He's got around 190 odd shares. But slightly from a long-term perspective, Somil, how do you see the charts for Cyient?
Good morning to everyone. My view would be positive on Cyient in the very short term. I would be expecting the short-term trend to continue towards 1000, which is very close to 200 daily exponential moving average. And once it closes about 200 daily exponential moving average, probably I'll be expecting more confirmation on the medium-term side. In the very long term, we've seen a very sharp correction overall from the levels of 2400 towards 800. So I think there's a meaningful correction, and now it's been consolidating around those 800, 850 mark. And I'll be expecting this consolidation to break on the upside. So I'll be positive in the short term, but wait for the medium term, confirmation about 200 daily moving average, and then add more.
All right. Okay. So that's the view coming in on Cyient Limited. I think we've got our first call for the day. Manav is calling us from Gurugram. Manav, a very good morning to you. Go ahead, ask your question.
Hi, good morning to everyone. So today I have query on Britannia. So I've been holding these 10 shares of Britannia for the past 2 years at an average price of 5,800. The Q1 results are also out. So I was thinking to, if I could average at the current point, I am ready to hold on for more longer period. I have no intentions, to, get off the table for this one.
Okay.
So would it be advisable?
Okay, got it. Got your question, Manav. I'll take this up with Samir. Samir, overall, I think the reason as to why the stock is seeing that uptick is because of the volume number that's coming at that 9% mark, right? And overall, even in the commentary, they have suggested that as of now, the demand is looking positive, but going forward, they're not promising anything. But from what I gathered from the call was that it was a little cautious approach that they're taking, but volume number definitely has come in as a surprise. What do you make of Britannia numbers, and do you think that Manav should continue to hold and maybe add more?
Yeah, so Mahima, you're right. The 9% volume growth is what excited the market, right? And they are also right in saying that we can't promise anything. Why? Because B2C business is consumption. If consumption slows down, it can affect their business, right? Of course, they are FMCG, so it's not as discretionary in nature. but there is increasing competition from this space. Now, the simple reason why Manav has unfortunately not made a return is he bought it 2 years ago at very high valuation multiples. And this is a risk I always keep discussing with you all on your channel whenever I get an opportunity, that you've got to buy a good company at a good price. You can't just buy quality at any price, right? This is a quality company. There's no questions asked about it. FMCG growing the depth, growing their depth of products also, so diversifying their base. But when you paid 2 years ago, I think the stock was at 65 or 67 times earnings. You were never going to make that kind of great money, because at some point rationality does hit the market, and look, valuations have corrected down. Now, even at this current valuation, I think it's trading at about 44 times current year forward, which is not cheap in any way, but it's more or less in line with a lot of the other FMCG players. So unless they can get their act together and ensure that the growth continues, I don't see the stock performing too well in the next 1.5 years. The one counter, again, valuations are mad expensive, but on corrections, I would recommend is Nestle, because they are adding a new category, then adding new products within their basket. So not only are they going to get volume growth, but as they add more products, that part of the business, because they have the same distribution reach, which they're going to utilize, can lead to operating leverages and profits growing. So Nestle closer to maybe 1400 if you get it, or 1350, 1400 would be the one I recommend. But in the FMCG space, I still am a little concerned with valuations. The one stock which stands out purely on valuation, but because of the cigarette business is going slow, is ITC. I think that is one company that valuation comfort is there, but we got to see how the growth in the cigarette business goes. The FMCG business continues to do extremely well.
Got that view. And we pulled up the 1 week chart for Nestle. That dip that you saw was because of commentary posts in that analysts, as well as the conference that they held this week. So post quarter one, actually very strong results. You saw that up move, but then the dip that got bought into actually very quickly, just in a couple of days, was following through that one as well. But let's go across to Bengaluru now. Kumar is dialing in for a stock related query. Kumar, very good morning. Welcome to the show. What's your query?
Yeah, hi all. Good morning. I'm a fan of Fast Profit program. Every day I'm watching. So I have bought a KEC International shares at the rate of 467 rupees. I am holding 220 shares. So a few days back it went up to 530, 545. Now it is oscillating between 467 and 480.
Right.
So can you tell me whether I have to hold or exit, because I am planning to move to some other one? It's like Sona Comstar. At what price I need to enter into that price?
Kumar. Well, Kumar, Sameer did address it a little bit while we asked him the question on Transtrail as well. But Sameer, I think you spoke about the first half of the question on KEC. But what's your view? If should he switch out now, or should he wait on and probably deploy some other capital in Sona BLW as well? What's your view?
Unfortunately, short-term trades we don't give, but yes, from a longer-term perspective, KEC International is a buying opportunity. They have a lot of orders from the Middle East, which have slowed down, right? The operations and the execution of that, which has hurt the stock, and which is why you're seeing the stock correcting from 1,000 levels down all the way below 500. We believe that in the next year and a half, all of these orders will see an uptake and things will recover and the stock will move up. But to give a 1 week call or 2 week call, I think it's better you take the technical view. Fundamentally, very positive. Technicals, I think from a shorter term perspective, it's his call. Sona BLW, unfortunately, has run up too much, too fast. I love the company. I think it's great. It was great at 550, 600, not at 800.
That's the view coming in on KC International. The next one that we have is coming in on Dalmia Bharat. Savita from Hyderabad is holding at the levels of 350 and wants to know the short-term target on this one. Saumil, sugar stocks were in action, just on Monday, Tuesday or so, and then there was profit taking that came in the last 2 days. What do you make of Dalmia Bharat? Because this is one of the stock that was the top gainers in the space.
Yeah, I'm positive on Dalmia Bharat overall in the medium term, in the or long term. Very attractive levels at this point of time. It has taken support around 1600, 1700 levels couple of times in the last couple of years. So now that becomes a base for this stock. Now confirmation will only come above closing about 1900, 1910 levels, which is a 200 daily moving average, and a break above the monthly highs as well, previous monthly highs. So I'll be watching out this stock. only entering above 1910 levels. So right now, avoid this if you can. However, if you want to enter above 1910. If you are holding into the stock, keep a stop loss around 1700 levels, which is a previous swing high. Keep a stop loss around there and you can hold on to the stock.
Got it. Well, Saumil, we'll let you go on that note. Thanks so much for joining in and giving us your views. Viewers, a very short break. Come back and get some perspective on Akasa Air, and then we'll start the rapid fire round. Stay tuned, a lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
Welcome back. You're watching Ask Profit here at NDTV Profit. A quick look as to how the markets are looking like at this hour. The Nifty 50 is trading around the 24,500 levels. Slight 5 points uptick is what we've seen since we last talked about the markets. But like I said, if we're able to cross that 24,600 levels, then it will sure be a positive one going forward. The Nifty Bank is trading around the 57,800. Here also, I think the crucial levels to watch out for will be 58,000. The mid cap 150, although is doing very well today, up by about 0.3 odd %, but the small cap 250 is turned into the green now, up by about just 0.06 odd %, but has recovered. But you know what? Profitability over market share, that's Akasa's mantra as it scales up operations. In a conversation, in fact, with my colleague Hiral, CEO Vinay Dubey says the airline remains well capitalized financially ahead of plan and focused on long-term growth rather than chasing market share. Listening.
Our view is if we continue to grow in a disciplined manner, we will get to profitability. And I'll tell you, in the 4 years that we have been in operation, our financial metrics have gone not just on track, but perhaps a little better than track. And so we're very pleased with the way we are progressing and very happy, with what the future has to hold for us.
In terms of the scale as well, if you have to look at operations, right? The number of aircrafts that you already have right now, and you have put out a number in terms of where you would want to reach by 2032.
Correct.
Would it be right to say that with the fleet that is going to get onboarded, that's the scale so far that you're looking at? Because if I have to look at the IPO also, which is 3 to 5 years, it somewhere just matches those two timelines.
That's correct. So we have 40 aircraft today. We've got 186 more on order between now and 2032. And by the way, 2032 is not that far away. And I can also tell you that the pace of delivery is only growing. So you can do the math in terms of how large we're going to be in 2 years, 3 years, 4, 5 years. It's going to be a sizable airline. In fact, I think in the early 2030s we will be one of the top 30 airlines in the world. So we will have quite a large scale in terms of aircraft size, and that's super exciting.
Taking the current scenario into consideration, yes, there are challenges for the industries. And it's not only aviation, right? How important is liquidity as an aspect from a business perspective right now for you to actually prioritize on your expansion plans? And how are you generating that liquidity within your system right now? Is it becoming simple to raise funds? And is it your existing investors who are helping you do that?
Yeah, sure. So I'll say that when we talked about our strategy, I had 5 pillars: service excellence, cost leadership, employee centricity, world-class safety, and to be well capitalized, right? So being well capitalized, which means having adequate liquidity, has always been and will always continue to be an important element of our strategy. The other part, and this is not my wisdom, but this is worldly wisdom that says, please don't raise money when you absolutely need it. Raise money well before you need it, right? And that's been our philosophy, that's been our ethos, and that's what's going to allow us to get through the ups and downs that are inevitable in our business. I will tell you, given that we have announced Akasa Elevate, and we've announced it on the 7th of August, we're still in the midst of the Iran war, which is not settled. Yeah. To think that that's been our focus over the last 3 months gives you a sense of our liquidity position. We're not running around focused on liquidity today, we're running around focused on our business.
Well, that was the management of Akasa. You can catch the full conversation at 11:30 a.m. only on NDTV Profit. But let's now start the rapid fire round. We of course have Sameer Dalal. Let me also welcome in Devin Mehta, Manager Technical and Derivative Analyst at IDBI Capital Market and Securities. Devin, welcome to the show, as well as Sameer. You both know the drill. Let me first go across to the first question on BSC. Rohan from Bengaluru holding shares at 3,600. Sameer, would you recommend him if he wants to add more? Is this the good price to do that?
No, I would say any rally you get a chance, sell.
Okay.
The next one that we have is coming in on Ircon International. Soumyan Mukherjee is holding 100 odd shares at the levels of 63. Says he's a long-term investor. Sameer, should he continue to hold?
No, don't stay invested. Find other companies to invest in.
RK Developers, Ramesh from Bengaluru is holding these shares at 140. Devin, he wants to know if he should continue to hold.
Yeah, one can hold with a stop loss of 135.
Okay, Mopen Labs is the other one. Mr. Reddy from Hyderabad is holding 2,000 shares, bought at the levels of 55. Devin, what are the charts indicating for this one?
I think exit on bounce.
Restaurant Brands Asia, our viewer Mohit is holding shares at 106, which he bought a while ago. Wants to know, Sameer, if now is a good time to average. We had a good update come through from the company. What's your view?
Yeah, so it's an add for me. Unfortunately, it didn't average it at 60, but yeah, you can add it. I think the longer term perspective is for the QSR space is extremely strong.
Okay, the next one is on pharma. Which is the best bet right now to kind of enter into in this pharma space for the next 2 years is what our viewer wants to know. Sameer, any particular pick?
For me, so I'd say Sun Pharma.
Got next one's on Devyani International. Lalita is holding shares at 118. Devin wants to know a target and a stop loss.
I think one can hold with a stop loss of 115 the low side. We can see a target of around 137 in a short term.
Lenskart is the other one. Devin Venkatramani from Bengaluru has bought 50 shares at the levels of 525. Continue to add more, hold, sell. What's the 6 months outlook?
Hold. I think hold with a stop loss of 530.
Sriram Raghuraman, who's a senior citizen and a regular view of the show, holding shares at 368 of Honasa. Sameer wants to know a 1 year view of the counter.
1 year will be flattish. Nothing major on the upside.
Kalyan Jewellers is the next one. Ashwini from Chennai wants to know the short-term target on this one. 3 months is her time horizon. Devin, the stock has already climbed to 620. 830 is what the Jeffrey's target is, but what is the view on the charts?
Hold. I think on charts, 790 is the immediate next target for next 3 to 6 months.
Wow, 790. Interesting.
Exide is the other one. Our viewer wants to know about this particular counter. He's holding at 517. Devin, what should be a short-term target for him?
I think hold. The next target is around 530.
Okay, Bank of Maharashtra is the other one. Our viewer is holding a large quantity, 26,500 odd shares at the levels of 75. Wants to know if whether it should partially book profits or continue to hold this one. Devin, on the charts?
On the charts, I think one should try to book profits as it is moving downward.
The next one's on Cohance Life Science. Our viewer holding shares at 550, so slightly elevated levels. Samir, we've seen a management change there, but a horrid Q1 number. Should she keep the faith? What would be your recommendation?
Yeah, absolutely horrid. But they said this is the worst of the quarter, so hopefully things turn better. Look, if you want to look at it from a 1 year perspective, I think it's going to go to recalibration. But longer term, 2 years, I think it's definitely a buy.
Okay, the next one is on ITC Hotels. Swati Narayan is holding 285 shares at an average price of 176. Continue to hold from a long-term perspective, Samir?
Absolutely, hold on and buy more.
Next one's Union Bank. Venkatesh bought the shares actually at 48 rupees. So way back, probably post that COVID era. He wants to know what he should do with his 145 shares, Samir.
Book profits and get into another bank or private sector. I like IndusInd and IDFC, which I've been saying on the channel multiple times. Do that.
Okay, the next one is on Hero MotoCorp. Rajiv Mukherjee is bought it at the levels of 4880. 100 shares is what he's holding. Continue to hold or wait till the next quarter to book profits considering the numbers. Samir, what do you make of Hero MotoCorp?
Hold on for dear life.
Next one, SBI Cards. Our viewer Ronak bought it at 650, Devin, and he wants to know what he should do for the next 1 to 3 months.
I think hold with a stop loss of 630. It can reach higher towards 700 level.
And what about Nykaa, Devin? Neelam from Jaipur is holding 140 odd shares at the levels of 241. Targets for the next 1 to 3 months and even stop loss.
Hold with a stop loss of 310. The immediate target is 350. Above that, it can move towards 375.
Narayani from Coimbatore is holding on to Aditya Birla Fashion, roughly at around 74 rupees per share. Samir wants to know what she should do with her over 2,000 shares. Is there a possibility of a turnaround similar to Trent as a question? But I'll let you take the answer for this one.
So I hope it's not a similar turnaround to Trent because Trent stock has actually just gone down. But having said that, we've been very hopeful that ABFRL does turn around their business operations. They have a lot of in-house brands which are showing this traction, but the profitability is not coming through, right? So that is the bigger problem. Once the SSSG starts picking up, and if they can get some sort of base like which Trent has of cult-based kind of buying, I think ABFRL also has scope of.
All right, okay, so that's the view coming in on ABFRL, but that's the end of course, the rapid fire round, and Ixigo is what we're putting spotlight on. Let's try to pull up the stock and see as to what it's doing, because overall, this quarter has been a resilient one, but margins is where we've seen a slight impact. Though revenue was up by about 13%, margins were at 6% to kind of understand, because a lot of money that the management is making from the OTA part is investing into hotels and AI. To kind of decode more about this, we're now joined by Alok Bajpai, who's the co-founder and group CEO of Ixigo, joining us now. Alok, a very good morning to you. Mahima this side. My first question to you is going to be about this fact that, you have mentioned that whatever operating leverage that you're making, out of the OTA business is what you plan to go ahead and invest in the hotels and as well as the AI part of the business. Just want to get more sense in terms of how this is going to play out for you, and when is it that investors can actually expect in terms of this hotel business to start making money as compared to versus what you're actually investing into it. What do you make of that?
Yeah, hi Mahima, thank you for having me here. I think if I just step back and walk through our story, Ixigo has entered every category very thoughtfully, right from the time when we got into trains and then into flights and buses. There is a phase where we understand the market, understand the consumer needs, understand what the supply wants, and then build out our product. enhance our supply capabilities, and build our peace of mind stack on top of the core product. And typically, if you look at the journey, whether it was on train or flight or bus, the first 2 to 3 years, we build out, we invest, we create, we grow, and then the product hits critical mass, operating leverage starts coming in. And I think from that perspective, hotels is the one where the gestation period typically for any OTA is longer, because building out the supply takes longer. And also, there is no product market fit that any OTA has actually discovered yet in India on the mid-market or budget side. And that's why the penetration of online, if you look at 3-star and below, there's a less than 10% penetration the moment you go towards the long tail. And overall penetration in the overall online hotel category is still around 15, 17 odd percent. And therefore, there is still a lot of potential for OTAs to come in and create that market, right? So our thesis is that we will end up creating, and that's what gives us the right to win over the long term, because we have 85 million monthly active users. We have almost half of the internet population in the country using at least one of our apps once in a year. ixigo, Confirm Ticket, Abhibus, and these apps are growing. We have $2 billion of tickets that we sold last year. The GTV for buses is still growing at 39%, for flights growing at 27%. So I think there's a lot of cross-selling, upselling possibility within our ecosystem. And that is what makes us believe that this will not require as much burn as it used to, let's say, take 10 years ago. If a new entrant entered the category, it would need a lot more burn than for a player like ixigo, which already has a very large user base.
Okay, understood. Got that part. But in terms of your train GTV, that has slightly been impacted because of the Tatkal norms that were changed, right? Do you think that this could be just a temporary hit, or do you think that this could structurally impact? I mean, we've spoken about this earlier, but now that we're actually seeing the impact, what is it that you're making of it?
Yeah, so two things happened there. One was obviously the Tatkal timings, but the other was the fact that user verification and Aadhaar authentication was introduced, and that led to some friction in the flows. We are very hopeful of having OTP-based authentication flows soon from IRCTC and CRIS, right? And I can't comment on the timeline because it's not in my control, but as and when we get access to that, we believe that the next upcycle starts there on the train side as well. I think you have to understand the capacity growth on trains historically, over the last decade has been 4 to 5% only year on year. And we already have 63% market share of the OTA market there. In fact, we've gained share. So we were 60% a few quarters ago. Now we're 63. And despite that, we are, margin wise doing okay on that side of the business, where the margins were growing, in a healthy sort of 20s growth rate, right? So I think net, the macros of the Iran crisis are impacting our sector more than any other sector because of the oil prices leading to higher airfares. And you are seeing this, if you talk to the management of airlines, you will realize that they have cut capacity, and therefore, at least for JAS quarter, they are guiding that capacity will be constrained. I think those things are impacting the sector more at this point of time. Otherwise, the long-term story remains intact. The fact that we have a right to win on hotels in the mid-market remains intact. AI, we are investing in the short term, but that's you can look at it as more of a one-off or front-loaded investment. The payoffs of that will start appearing from next year onwards.
Just, one last question from my end. For take rates, especially for flights and buses, that has seen an impact. And this, I'm guessing, is on account of competitive pricing as well as, ad spends probably going up, and also an impact of the geopolitical issue, especially for the flight side of business. But in FY27, do you think that take rates will stabilize for both of these segments, or do you think that the impact could continue?
See, I think the gross take rate on flight is a bit mathematical because it's linked to the fare value, right? Because a lot of the take is in the convenience fee part, and that is fixed, right? So as fares go up, optically the take rates shrink a little bit. But once the fares normalize, you will see the take rates also normalize there. On the bus side, the take rates have been fairly stable. We've operated in the 11.5% range or 11.7% range, in that range bound manner for the last few quarters. I don't see any major sort of change happening there because it's a fairly stable take rate that we've observed.
Very good morning. Thank you for joining in. It's Puneet this side. Just one question from my side. We've seen your revenues double over the last couple of years to 1,200 odd crores. Your profitability has largely remained stable at that 70 crores in the last 3 years. So, question being, when do you feel like the 2,500 crore revenue target you can achieve, or that revenue mark you can achieve essentially? Is that something that probably can by FY28 you can do, or that will spill over to FY29? And what's your guidance on profitability as well over the next 2 to 3 years?
See, I think we have to look at a scenario where macros are stable to begin with, right? Because if the flight industry is degrowing as we speak, right, year on year, it is very hard for me to give any guidance on that part of the business, right? It becomes very, very difficult for any OTA. However, if we assume that a double-digit growth rate comes back on the flight market and the OTA market starts growing faster than that, remember, we've been the fastest growing OTA across the lines of business we operate in. So our aspiration is to maintain that momentum. Right now, we are fighting the tide in some sense as to what's happening on the macros. But if the macros improve, we will come back to trajectories that we were at, let's say, a couple of quarters ago, right? And that is going to be very visible, once the hotel story starts playing out over the next few quarters. We've already called out 500,000 heads on beds that happened last quarter. And we will soon, at some point disclose more information about how the hotels business is building out. But we are very confident about gaining share there and growing materially there. Revenue guidance, we don't typically give, but what I can tell you is that on the GTV level, our aspiration remains to be the fastest growing OTA in the country.
Alok, thank you so much for taking out the time, and all the best for the remaining FY27. Viewers, that's of course the management of ixigo. Let's try to see as to where the stock is trading at right now, down by about 8%. Is certainly under pressure. But let's again start taking all your stock related questions. The next one that we have is coming in from I don't think if we've taken this. Okay, we've not taken this. Nagraj from Hubli is holding 500 odd shares at the levels of 345 of Cello and wants to know whether to continue to hold this one or exit from a long-term perspective. Devin, I'll come to you on Cello. What do you make of the charts for this one?
No, I think one should try to exit on bounce. It has a resistance around 400 and a support is placed at 350. So try to exit on bounce.
Samir, do you have a view on Cello? We actually had the clarification come from the company, right? They're not looking to sell out at this point of time, responding to media reports. But just everything that has been going on with the underperformance, any view on the counter?
This one we don't have under coverage, but we believe the discretionary spend, the space that they're in, is something that will grow. I haven't covered this company, so I don't know what the difficulties they're facing or anything. But I think this, if they can get their act together, this is a space that's going to grow. So just focus on whether they can get something going.
The next one's from Shobha, who's from Bengaluru, holding on to Motherson Sumi. Devin, she's been holding at 129, currently sitting on good gains. Wants to know if she should continue to hold based on the charts.
I think hold. Overall structure is positive. We can see stock moving towards 180.
Okay, all right. The next one that we have is coming in on L&T Finance. Vijay from Chennai wants to know the short-term targets on this one. Devin, I'll stick with you. Stock is down 2% today, but what do you make of the charts?
I think overall structure is positive. One can hold with a stop loss of 298. We can see again a bounce back towards 330 odd levels.
Correct. The next one coming through, and this one's on Gabriel India. Our viewer, George, has actually bought the shares at 415. So probably before you saw those unlisted companies come into the listed ones, stocks trading at almost 1500 odd. Samir, we've seen a second round of that happening, right? In this quarter, 2 more companies got added into the listed entity and a big target. Would you recommend George to just ride that wave? He bought it at very attractive levels.
Honestly, I find valuations receive. I'm not denying the fact that all these companies got merged in. And, even at 1200, if you remember, I don't know, we may have spoken, I said I'm not convinced on the story. So I continue to remain of the view that this is a sell right away, not even on rises. there are far better companies with more growth that you can invest in. When you merge businesses in, you're also ensuring that, look, the profitability of those entities is becoming one. But that doesn't mean the entire pool of profit is going up, which means the share to shareholders as well. So keep that in mind and just.
Okay, all right. Okay, I think Samir's video is stuck, but we'll get to him again on Gabriel. But the next one that we have, I think, is coming in from Prashant. Is Samir back? Okay, he's back. Samir, if you want to complete your answer on Gabriel.
So I was just saying, look, the profits get distributed amongst the new shareholders as well, right? So from that perspective, I think it's an avoid at this point.
All right, okay, so that's the view on Gabriel, but it's time for a rapid fire round. Samir and Devin, try to keep your answers as short as possible. The first one is from Prashant, who is asking about CG Power. He's holding 55 shares at the levels of 896. Continue to hold, Devin, your view on the charts?
Yeah, I think hold and try to exit on bounce near 890.
Shakti Pumps is the other one. Satish from Bengaluru is holding shares at 763. Wants to know, Samir, if he should wait on for that the PM Kusum 2.0 to come through, and he's been following the stock. What's your view?
So at this point, it's just a hold, not a buy.
Okay, the next one that we have is coming on Ease My Trip. Raghav from Bengaluru is holding 1500 shares at the rate of around 8 rupees and wants to know whether to continue to hold or exit. I mean, Devin, your view on the charts?
No, I think exit on bounce near 8.
Happiest Mind is the other one. Radhakrishnan has bought it at 339. What should he continue to hold here, Samir?
No coverage on this one, sorry.
Okay, any view on the charts, Devin?
I think hold. There is a support around 375 levels. This can move towards 450.
Okay, and what about IRDA? 1 year targets for this one, entry price and the exit price also?
I think one should try to avoid this counter. The overall structure is weak.
Okay.
Got it. Well, Samir, I'm surprised you don't have coverage on Happiest All Seller. You always look at these deep discount bargains. So, what is the rationale for not looking at these ones?
There are too many companies. Sometimes you can't cover all of that, right, Puneet?
Got it. Well, let me go across to the next question. This one is on Kalyan Jewellers. Also, Samir, something we've spoken about in the past. Should our viewer continue to hold? He bought it at 490.
You know, I should be bragging. I remember discussing this stock with you at 400, saying I'm very, very positive on this. Anyways, having said that, I still remain long-term constructive. But in the near term, what's happened is the stock has run up too much too quickly. So I'm not saying it's going to go up further in the short term. But yes, if you have a 2-year investment horizon, the kind of growth that's going to come from their franchisee business is fabulous. So hold on to it.
The next one is on HDFC shares. Mohan from Visakhapatnam has bought it at the levels of 785. Next 3 months target on this one, Devin?
I think hold. It is trading near very crucial support of 730. I think hold, try to exit on bounce.
Next one's Power Grid. Subrata wants to know right time to buy. Devin, is this it?
Which stock?
Power Grid.
Okay, Power Grid, I think one should avoid this counter buying. We have seen a breakdown below 280 levels, so try to avoid.
Okay, the next one is on Infosys. Is this the right time to add, is what our viewer is specifically asking to ask in the rapid fire round. Devin, what do you make of the charts?
Yeah, definitely. I think Infosys can be added at current levels. Stop loss will be 1110. The target will be 1290.
Okay.
Sundar from Madurai wants to know if he can sell Tata Motors CV and PV right now, Samir, because he wants to invest into Mazagon Dock. Either of those trades that you would recommend?
So I say do not sell either Tata Motors CV or PV. In fact, I have a buy on both of them from a longer term perspective. Mazagon Dock, if you want to add, if you have fresh funds, please do it. But don't sell this to buy that, because you're buying something that's trading attractive versus something that's trading at extremely high valuation.
Okay, GE Vernova is the other one. Vijay from Hyderabad is holding 30 shares at the levels of 4550. Devin, your view on the charts for GE Vernova?
No, I think try to exit on bounce. The overall structure has got weak after earnings.
Got it. The next one coming through, and this one's on Endurance. Our viewer Sushant wants to buy into this counter right now. Samir, would you recommend that? Endurance Tech?
No, I wouldn't recommend buying. At best, if you don't have it, don't worry, but find other counters.
What about MTAR Tech, Devin? Our viewers bought it at an average price of 2054. 50 shares is what Nita from Bengaluru has been holding. Continue to hold.
I think hold 6,300 is a good support. Hold with a stop loss of 6,300. This can gradually move towards 7,800.
Got the next one coming through, and this one's on HDFC Bank. Our viewer wants to know if he can enter the counter for the short term, though. Devin, what's your view?
No, I think as I said, it is trading around the strong support of 730. If it breaches down, we'll see some further correction. So try to avoid this stock.
Okay, then the next one is on Dr. Reddy's, bought at the levels of 1269. Continue to hold, sell. Samir?
Hold on to it.
Got it. The next one's Indo MIM. Ishwar is holding. He got allotment and now is in big gains. Samir's question being, if not on the stock, would you recommend him to book the profits?
I don't know anything about this company. I can study the IPO.
Okay, got it. And last one coming in on Loris Labs. Vipul wants to know at 1100 he's bought these shares. Should he exit in the next couple of quarters? Is his question, Samir, or should he continue to hold?
Couple quarters, yes. If he has longer term, stay put. But couple quarters, given the run-up, definitely yes. Valuations are expensive.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. Samir as well as Devin, thank you so much for joining in, giving us your views. But viewers, out of time on this edition of the show, thanks so much for watching. Stay tuned. Lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital.
4 years into the skies, someone is actually turning 4. I'm sure you would want to know, guess who? We are talking about Akasa. We have with us Vinay Dubey, the CEO of Akasa, who's joining us in the studio as well to talk to us about what's in store, what's the strategy from here on. Welcome to NDTV Profit, Vinay, and
Thank
congratulations. 4 years into the skies.
Yes, thank you.
More than anything else, I'm sure everyone wants to know what's in it for the commuters, for the passengers, as a gift for 4 years?
Well, thank you for having me here. Yes, it's been 4 wonderful years, certainly extremely rewarding. We've served just shy of 30 million customers, which we're very, very proud of. On behalf of all of our 5,500 employees or so, we thought this was the right time to give something back. And so on the 7th of August, we will announce the Akasa's loyalty program called Akasa Elevate, as a way of saying thank you for all the customers that continue to choose Akasa again and again and again. And so that's something that we are really looking forward to.
This is interesting. A loyalty program for the consumers is what you're announcing. What would that actually entail? Because the question is, do we get free flights? Do we get free food? What is the loyalty program going to look like?
You know, it's a portion of everything. That there are benefits in terms of free flights that you will be able to accrue over time. There are discounts on food. There are discounts on seat selections. One is able to get flexibility in terms of changing. So we're, for example, one of the only airlines that would provide our top tier customers with an ability to get to the airport early and without, any expense whatsoever, take an earlier flight should their travel plans change. And these are, some of the unique elements of Akasa's loyalty program. We're also, as we launch this, we're allowing people to make retro claims all the way back to the start of our fiscal year, which is the 1st of April. So that's something interesting. And the other thing is your tier benefits are independent of where you book from. So, for example, if you're a platinum tier customer, you can book on any platform and your tier benefits are preserved. So there's some interesting things that we have built into our program really as a way of recognizing people that continue to choose Akasa time and time again.
How big a revenue generator will the loyalty program even be for an Akasa? Because that is somewhere going to be the end game as well. That yes, benefits do accrue to your customers, but something should be there for an Akasa in it.
From day one, we have had the ethos that if you create an experience that our customers like, they will reward you. So the reward is really in developing something for our consumers, as opposed to saying that the loyalty program has to have a particular P&L. That's not the lens through which we're looking at this. From day one, Akasa is an experience-led carrier. Whether you look at the quality of our seats, the USB ports, the larger overhead bins, the quality of our food, the on-time performance, all of this from day one has been fashioned because we know at the end of the day, if you're not providing that experience to customers, no one's going to want to fly you. And so the loyalty program is just a way of saying thank you, as opposed to really, finding some P&L benefits in this. The P&L benefits will come just by winning the hearts and minds and the travel of the consumer every single day.
Okay. So let's leave that aspect aside and then let's talk about what's happening from a business perspective. I'm sure there was a strategy when Akasa came into picture. It's been 4 years. How have you been in terms of the strategy that was planned to executing it with the kind of deviations that would have come your way, right? I mean, because I don't think so there is any strategy that gets formulated which is execution to the T.
Right.
And at this stage, if you were to look at the next 4 to 5 years of your journey, what is that expected to look like?
Sure. So there are, 4 or 5 pillars of the Akasa strategy that were true when we launched and are true today. You're absolutely right. It's not that, we are perfect, and so there are always ways in which we can improve, and we try and continuously improve on that. But the strategic elements, and I'll describe the 4 or 5 pillars of strategy, those we don't think have fundamentally changed today, although we're open to reviewing them periodically. So, for example, we started with service excellence as one of the core pillars of strategy. That very much remains the way we are today. We looked at cost leadership and the business model centered around cost leadership, so we can provide affordable fares for our consumers and keeping our business model simple, again, to with a view to providing affordable fares. those elements have remained the same. World-class safety is something that is all pervasive in everything that we do, or being employee-centric. That is core to who we are, because it's our employees, our 5,500 employees today, that really are building the company. It's not one or two of 5 people. And so treat them with dignity and respect, and really build this company for them, with them. These are elements of our strategy and ethos that remain alive today. And part of that, in order to sort of execute that, we've also had this view that we have to always be well capitalized through this process, because there are going to be many ups and downs. So these elements remain the same. It does not mean that execution is ever easy. No, there are always things that are thrown at us, but these elements of strategy are just as alive today as they always have been.
You know, but this industry, Vinay, as a whole is absolutely capital intensive. So the question then is, how regularly do you get yourself capitalized in terms of fundraisers? But before we get there, from a strategy perspective, because you will need money, either you raise money or you get it from internal accruals, right? So then the question comes down to, is it going to be profitability that you're going to chase as an airline, as a company, or is it going to be chasing the market share first, which will then lead to profitability, right?
Yeah.
Because if I'm looking at Akasa, we're still in single digits. I wouldn't say high single digits also, but somewhere in between in terms of single digits.
Right.
And you have competitors who've achieved that kind of market share much faster. But I'm sure there is a strategy in place of the way Akasa wants to do it.
Yeah, so I'll tell you that we're not chasing market share, we're chasing profitability. And it's not that market share drives profitability, it is scale that drives profitability. So you could be a scaled airline. You could, have 60, 70, 100 aircraft and have a 2% market share. Or you could have a 60, 70, 100 aircraft airline and have a 25% market share. These are, and I'm talking, by the way, I'm talking about different countries in different parts of the world. It is the scale that drives profitability more than market share. And that's the reason why, for us, we don't wake up every morning and look at market share. So our competitors can grow, at 8,000%. It makes no difference to us. We will continue to grow in a disciplined manner. At the end of that, we'll get scale in a disciplined manner. And at the end of that, we'll achieve profitability independent of how fast or slow anyone grows, right? Because market share is not just a function of your own growth, it's also a function of somebody else's growth. And so our view is, if we continue to grow in a disciplined manner, we will get to profitability. And I'll tell you, in the 4 years that we have been in operation, our financial metrics have gone not just on track, but perhaps a little better than track. And so we're very pleased with the way we are progressing. And very happy, with what the future has to hold for us.
So we've spoken about what you have for consumers. We've spoken about the strategy that you have in place as well, in terms of the pillars that you've carried forward. What is most important to you versus, if you have to compare market share versus profitability, where you're saying it's going to be scale, which will help you achieve profitability.
Correct.
3 to 5 years from now, what is that scale that you intend to achieve, which will tell you that, okay, at this scale is where I will hit that profitability kind of number that we want to see?
Yeah, so we don't put out numbers from a scale perspective of number of aircraft, but I can tell you, well within that time frame, we'll achieve the right kind of scale to be able to deliver financial
what will that
results.
time frame look like?
For us, I hope it's much less than a 5-year limit. But again, these are not things that we put out predictions for.
Sure.
We certainly say that we want to be listed in a 2 to 4 year time frame. So I'll give you that as an understanding. Obviously,
Absolutely.
From a listing perspective, you have to have a sense of what your profitability will look like, and be able to have a very coherent story for an IPO. So we're well on track for that.
Okay, well on track on that. And in terms of the scale as well, if you have to look at operations, right? The number of aircrafts that you already have right now, and you have put out a number in terms of where you would want to reach by 2032.
Correct.
Would it be right to say that with the fleet that is going to get onboarded, that's the scale so far that you're looking at? Because if I have to look at the IPO also, which is 3 to 5 years, it somewhere just matches those two timelines.
That's correct. So we have 40 aircraft today. We've got 186 more on order. between now and 2032. And by the way, 2032 is not that far away. And I can also tell you that the pace of delivery is only growing. So you can do the math in terms of, how large we're going to be in 2 years, 3 years, 4, 5 years. It's going to be a sizable airline. In fact, I think, in the early 2030s, we will be one of the top 30 airlines in the world. So we will have quite a large scale in terms of aircraft size, and that's super exciting.
So with aircrafts as well, you have the number in your mind in terms of strategy, but is it going to be sticking only to Boeings because that's what you are onboarding right now? Is there already a plan in place which would say that, okay, if needed, if we have to shift to another player, we are agile enough to shift to another player, and yes, we'll be open to it?
So we're always open to options and alternatives. As of right now, the 186 more aircraft that we have in order are Boeing. We're extremely happy with that. We've got one of the world's most fuel-efficient aircraft. It's a great aircraft for passengers to travel on in terms of not just our configuration, in terms of seats and USB port and bins, etc., but noise levels, pressurization, the quality of the air. These are the most modern aircraft and come with those kinds of amenities. So we're extremely pleased with every aspect of this. At this point, we have no plans to deviate from it. But as you would imagine, every year we will revisit our plans, and if there's a course correction needed, we will be happy to do that. But at this point, no.
Okay. So sticking to Boeing right now, happy with that.
Correct.
When it comes to maintaining the business side of it as well, liquidity absolutely important in a business like yours. Now, taking the current scenario into consideration, yes, there are challenges for the industries. And it's not only aviation, right? How important is liquidity as an aspect from a business perspective right now for you to actually prioritize on your expansion plans? And how are you generating that liquidity within your system right now? Is it becoming simple to raise funds? And is it your existing investors who are helping you do that?
Yeah, sure. So I'll say that, when we talked about our strategy, I had 5 pillars: service excellence, cost leadership, employee centricity, world-class safety, and to be well capitalized, right? So being well capitalized, which means having adequate liquidity, has always been and will always continue to be an important element of our strategy. The other part, and this is not my wisdom, but this is worldly wisdom that says, please don't raise money when you absolutely need it. Raise money well before you need it, right? And that's been our philosophy, that's been our ethos, and that's what's going to allow us to get through the ups and downs that are inevitable in our business. I will tell you, given that we have announced Akasa Elevate, and we've announced it on the 7th of August, we're still in the midst of, the Iran war, which is not settled. To think that that's been our focus over the last 3 months gives you a sense of our liquidity position. We're not running around focused on liquidity today, we're running around focused on our business. In the April, May, June quarter, our year-over-year growth was just shy of 30%, right? So we're one of the few airlines that grew at that kind of pace. And in this quarter, given all what's going on in the world, we're announcing Akasa Elevate. Right, so that should give you some sense of what our liquidity position, what our priorities are, and how we're thinking. Always thinking for the long term, always preparing well in advance.
To add to that, let's talk about your international expansion. Yes, very exciting when you talk about international expansion, but in the hindsight, you have to absolutely look at what's happening in the domestic markets as well. And the domestic market, to a certain extent, is becoming fiercely competitive. My question then to you is, how do you decide in terms of your deployment strategy then? Because on one side, you have the excitement of going international. On the other side, you're looking at competition which is just increasing.
Yeah, so I'll tell you, Hiral, competition has been fierce from a long time ago. It's not today. We've got very strong competitors. And by the way, we should. I mean, the country deserves choices. And the country, has choices today, and I hope over time these choices will only increase. So competition has always been fierce. We've launched Akasa to be able to withstand that competition and create an airline for the ages. And that's what we're doing. Domestic will always be the vast majority of what we fly, right? We're incredibly proud. And by the way, the properties that are being built today in terms of Navi Mumbai, Noida International Airport, these are only going to fuel our domestic ambition as well. And so, sure, there's the international element of it, but today it's 25% of our capacity deployment is international. That may go to 30, 35, 40. But the vast majority will always be domestic, proudly for us.
And when it comes to domestic, you're participating in UDAN as well, right? So then how do you manage the balance between achieving that regional connectivity and maintaining profitability on those routes?
Yeah, so I would tell you upfront that today we don't have, a particular route that is an UDAN route.
UDAN route. But you have shown interest there.
We will continue to study it, and we will continue to show interest. As of today, we don't, but I think it's a great scheme from the government. This is, to develop the nation, you need very strong air transportation links. I mean, air transport, any form of transport, this is sort of the backbone of economic growth. And we're very happy to participate in it. But, to the extent that it makes sense for us to participate in it. And so we got a highly professional network development team, and, this team is always studying where to fly, where to place our assets, and I'm sure over time they'll make the right decisions. Part of that may be in Iran. I'm sure a large part of that will not be in Iran, but we're happy with that.
Okay. The other question, when it comes to looking at competition, etc., a lot of murmurs that we heard about airport operators owning airlines. What are your comments? What are your thoughts on it?
Look, I think India needs many airlines. India needs more competition. We're very comfortable being part of one of 5, 7, 10 airlines. That's what India holds. We've got a mature regulator. We've got a mature competition commission. I'm sure there'll be considerations that they'll keep in mind as they're executed. So we're very comfortable with this. Okay. I mean, our view is that as we focus on the consumer, and Akasa is this experience-led carrier, as we add Akasa, elevate to this as a frequent flyer program, these are the elements that we need to compete happily. So we welcome more choices for the Indian consumer.
Okay, but we'll have to wait and watch. Anything that you're hearing on it as to how soon that could happen or not?
I don't know.
Okay.
I don't know.
The other thing is that the government did come out with a fuel price scheme as well, right? I don't think so anyone really participated in the scheme that the government came up with. Any reason for that as to what is the drawback? Because if the government is trying to give in something, I mean, how is the industry looking at it?
Yeah, so first, the government's fuel price scheme is just one of several initiatives that the government has taken place, right? And this scheme is one. But there are many other things related to fuel that they've done. For example, reducing the VAT in 2 principal cities, right? So when it comes to fuel, that's one. Then, the subsidies that were provided to airlines for the month of April, May for domestic fuel, that was the other. This is just one element of it. The other element, by the way, which is fantastic, is this, emergency credit guarantee scheme, which Akasa is a beneficiary of as well. So as pertains the sum total of government actions, I think we've in India, had one of the most proactive governments when it comes to aviation, has stepped in, to the great fortune and good fortune of the airlines. For this particular scheme, I think it was just a timing, right? Which is that there were a number of things that they did, but as they launched this scheme, fuel price went down.
Okay.
Right, so it's just a timing thing. And by the way, with fuel price up again, the government, I'm sure, is very open to refloating the scheme, but there's nothing more sinister other than the good fortune of fuel price dropping. Okay. And that's all.
So if this is revisited, would Akasa look at
100%. I think as a scheme, it was a wonderful scheme, right? Which is to be able to price some stability of fuel into the market. And so this is a great scheme for us. It's just that, when fuel prices plummet the way they did, it didn't work. God forbid, if fuel prices were to stay at elevated levels for multiple months, I think it'll be a wonderful scheme to participate in.
To add to this, you're also seeing airfares which are on a rise, correct? I mean, a lot of times where the government has intervened, given out a cap, are you seeing anything of that sorts that the government could come out with?
Yeah, so I'd say two or three things. First, India today still remains one of the most reasonable and affordable air travel, markets in the world. If you look at a ticket price for 1,000 kilometers in India compared to 1,000 kilometers in most other, mature aviation jurisdictions, Indian fares are still much lower compared to other parts of the world. And by the way, we pay the same US dollar denominated, fuel and aircraft maintenance and ownership, et cetera. So I'd say fuel prices are extremely reasonable. I'd say the government never has a, problem or a view of controlling fares. The government, as it should, only has concerns if any party decides to gouge customers by charging, 50,000 rupees for a 500 kilometer fare, and that's never been the case. So I'd say no, absolutely. As long as airlines and airlines haven't partaked in that kind of exploitative fare regime, I think the government is very happy to let the markets dictate what fare prices are.
Okay. So to add to those fair price point, you've spoken about growing your capacity as well, but we're talking about 30 to 40% kind of an uptick. Now, given the challenges that we've already spoken about, where you're saying that, okay, we're still comfortable, we have the liquidity that we've kept dry powder to expand. How difficult is it going to be to actually get the right talent as well to run the operations, number one, or create that sustainable demand? And this is coming in at a time where, I'll name competition, Air India is revamping, Indigo has expanded, SpiceJet probably a new lifeline that we're talking about. So how do these dynamics actually look like to figure out how the industry is going to really settle down?
Yeah. So, look, I can only talk about Akasa, and you talked about two aspects.
Absolutely. And I just, that's why I said I'll mention competition just to get a fair bit of an idea.
And there were two aspects of your question, one related to demand and one related to talent to be able to execute Akasa's future strategy. When it comes to demand, we're intricately linked to India, right? Which is the nascency of aviation, the massive growth in India's GDP, which fuels air travel demand. And so from that perspective, you may have one slow quarter, two slow quarters, but we'll have 30 great years, right? And so the next 30 great years, there's this insatiable appetite for air travel demand that the country is going to grow on the backs of what's happening to India Inc., the economy. There's no shortage of demand, right? And I would not look at 1 or 2 quarters. That's not the way Akasa thinks. We think for the long term, and we have the ability to withstand 1 or 2 or 3 or 4 bad quarters, not a problem, right? So just to put that demand, it's wonderful to run an airline in a country that has this kind of demand profile. In terms of talent, we're 5,500 people today. The most difficult part is to go from 0 to 40 in this environment. And we've got the team that has done that. Right? And just the most amazing team that you have at every level, whether it's, the flight attendant, the pilot group, the engineers, the airport staff, or whether it's the sort of the back office, folks, people running strategy or pricing and revenue management, any way you look at it, the operations control people, finance team, any way you look at it, I think we've got world-class talent. And by the way, this is also a reflection of India Inc., right? If you look at some of the most, the largest companies in the world, they're being run by Indians. So India has the talent right here, and that's what we're benefiting from.
Interesting. My last question to you here is, everything said and done, you've spoken about the IPO, you've spoken about strategy. If someone has to look at Akasa very closely right now, I know it's not a listed entity, but I'm sure someone who wants to look at investing in Akasa 3 years down the line, what are those 2 to 3 metrics that you will ask them to actually focus on?
I think it's the same thing that I would focus on as CEO. It's, what's our revenue profile looking like, and what's our cost profile looking like, our ability to generate cash, profitability. Those are the financial metrics. But I think the most important one, once you have some base of that, comes back to the way consumers look at you, the way the traveler looks at you, because you can have all of that. But if people don't want to travel, it's a short-lived set of finances that you're doing. And so, I'll bring us back to Akasa Elevate. I'll bring us back to the consumer experience that we have built worked so hard to build over the last 4 years. And I would tell people, try us, taste our food, sit in our seats, plug your phone, and get it charged. And that's the difference. That's the reason why we've launched Akasa Elevate, is because people have done that repeatedly. And that's really, what I think is going to propel us for the next, multiple decades.
Very interesting. Thank you, Vinay, so much for this conversation. In fact, with the experience that you have in the industry with Akasa, for all our viewers, one trivia question for the industry or from the industry or about Akasa that you would want to ask the viewers. Let them respond to it.
Let them respond to it. Okay, I'll say, this is an interesting one. This will give consumers, people perhaps who don't have this broad view of how demand is going to expand over the last, the next 10, 12 years. And I say, if dhania can travel on an aircraft, then every Indian over a period of time will have the right to travel on an aircraft, right?
Okay.
And so the question I'll ask the viewers is, how many tons of dhania did Akasa carry in its belly in the last fiscal year?
This is going to be interesting, and let people find that out.
Correct.
And I'm going to make sure you respond to them as well. I'm going to put this out.
Absolutely.
Thank you so much, Vinay. Always a pleasure to speak to you.
Thank you. Thank you.
पीओके के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect. only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage.
Lackluster day of trade on the Dalal Street as Nifty fails to sustain above the 24,600 level. Broader markets see mixed moves. Tech stocks lead the gains while auto lends some support. On the other hand, pharma and financials continue to sulk. Shares of Samvardhana Motherson surged to hit a fresh record high amid strong Q1 and positive views. Britannia sees volume surge, healthy quarter and brokerage note boost the counter. NBFC stocks like Bajaj Finance come under pressure after RBI's draft lending norms proposed banning revolving credit lines allowing only term loans. Brokerages warn the move could hurt customer acquisition, growth and yields for lenders with meaningful exposure to such products. The RBI is examining Tata Sons' request for deregistration as a core investment company non-NBFC, even as the conglomerate continues to feature in the central bank's latest list of upper layer NBFCs. Good afternoon. The Nifty continues to fall below the 24,600 level. Nifty Bank even down around 300 points in trade, led by largely the private banking names like ICICI Bank. In fact, on the other hand, PSU Bank, SBI, which will be reporting its numbers today, continues to gain. The stock was also up around 3% in trade yesterday. Today also it's gaining in trade. Crompton Greaves is another counter on the F&O side, which has been falling post the Q1 numbers. While on the gaining side, we have Samvardhana Motherson, which is up nearly 9%. But Godrej Consumer has come out with their numbers. If you look at the overall number, the revenue has come in at close to 4,225 crore, which is around 1.5% more than what the street was anticipating. Analyst estimates was close to 4,162. EBITDA came in at 801 crore. Again, a 1% beat on the analyst estimates. Margins have come in slightly lower at close to 18.96. Analysts were estimating this number to be close to 19.05%, while the net profit number, that's a mess of around 6% has come in at close to 505 crore as against 537 crore that the analysts were estimating. The stock is down nearly 2.5% in trade. Overall, the numbers look largely in line, but it's the volume growth number that we still need to watch out for. Now, street was expecting that the volume growth could be anywhere around double digit, but we are yet to get that number. So we'll be waiting out for that number. The stock is down now 2% odd in trade, but volume growth is still pending. But apart from that, overall the numbers look pretty much in line. But let's get in Mahima with finer details on Godrej Consumer.
Right, Samit, as you mentioned, largely seems to be an inline set of numbers in terms of where Godrej Consumer is concerned. I mean, if we take a look at the overall, operating revenue that's came in at 4,225 odd crore, even in terms of net profit, largely, slightly, of course, lower than what the street was expecting, but revenue at that 4,200 odd crore versus the estimate of 4,162 odd crore. In terms of where the commentary goes, that will be an interesting one to watch out for, because for Godrej Consumer, we are kind of expecting the business update kind of did suggest that overall the Q1 underlying volume growth was expected to be in high single digits, but the fine print, of course, we'll get as to what that number looks like. In terms of the EBITDA, again, largely with what the street was expecting it to be like. International business, I think Indonesia is where the surprise was when the business update also came out in that mid-teens with a double-digit volume growth. So that volume growth will also be a key one to watch out for. And the Guam business, though, is the one where the Middle East, of course, will be impacted because of the West Asia conflict. But overall, it's been, that region as a whole has seen a double-digit growth. So that's with regards to where, the segments go. But once the press release comes out, we'll get more and better understanding as to how the volume growth looks like for the overall business and also for the Indonesia business, because that has seen a good recovery this quarter. So that's the, whole and soul of what you can make of the first quarter of Godrej Consumer.
Thank you, Mahima, for that. So we'll be waiting for the press list to come out so that we get the volume growth numbers for Godrej Consumer. Well, moving on, let's welcome in Aman Chauhan, the fund manager with Bacchus Asset Managers, to understand more of how to deal with the current volatility in the markets. Sir, firstly to start off with, despite the fact that crude has now come down, earnings have been better than what the street was anticipating. Markets still continue to consolidate. What do you think, what has been holding down the markets currently?
The markets always move in anticipation. They are always ahead of the news, right? So the recovery that we saw in the market in the month of April, May, June, which was ahead of the fall in crude price, is now fairly capturing in the upsides, right? So investors felt that crude is not going to stay 100 plus for longer. The war situation won't continue for longer. And markets rallied before the war ended, right? So when the war started, we all felt maybe week 10 days the war will end, but it did not. Yet markets rallied, right? So they already in anticipation captured the upsides. Now crude is below, which is already factored in by the market, I believe, and that's the reason from these levels, market is consolidation. They are waiting for fresh triggers. Plus, I believe too much of supply is there in the market. Lots of block deals from the PE sellers. Uh, every day there's a new IPO which is coming in, which is also absorbing a lot of liquidity. So it's a combination of these factors, which I think is can say responsible for the flattish or the consolidation in the markets over the last say few days, weeks.
So then, as per you, as you were mentioning that markets are waiting for few triggers, as per you, what could be that trigger which could take the market to the next level?
Earnings is not going to be a very major trigger because there's not going to be an earnings upgrade, right? So whatever we have, we might see a scenario that you fear the earnings downgrade due to margin pressures, due to higher transportation and higher crude prices. That may not happen, but upgrade is not going to happen in a hurry because we are also facing a much weaker monsoon this year than compared to what has been the general trend in the past. Uh, there has to be something coming from the government, some kind of policy action. There is some kind of things either to support the rupee, to encourage exports, or some kind of conclusion on tariffs with US. We did conclude, but then again, there is kind of uncertainty because they want to put on new tariffs, or maybe a proper stability in the geopolitical scenario. That is something also which can be a meaningful trigger for Indian equities to do well. Uh, Unwinding of AI trade, which is being talked about because there has been quite a bit of volatility in the Korean Kospi, even in the US markets. I don't think that's going to be a positive trigger for the markets in the near term. It's not going to happen that the people will book profits in the AI trade and then the money will come to India in a hurry, right? So it will, but it will take time. So that is not no longer trigger. But if US markets continue to do well, then maybe there can be catch up rally in India also. So it's I think broadly some government action or something from the global front is what I believe the markets would be waiting for.
So talking about AI, sir, for the first half of this calendar year, IT was the worst performing sector. July month was very strong for the IT sector. I believe we saw 20% upside, 20% gains when it comes to the Nifty IT index. But right now, do you see there is more room for further upside, or it is now priced to perfection?
It's not priced to perfection. It's value even now, but with very few triggers. So somebody with a benchmark fund or somebody seeking value, for them IT still makes sense. Somebody who's seeking growth, for them this sector is still not the one. Somebody seeking momentum, also this is not the sector, because what will happen is every 3-6 months there is going to be a new AI module launch that is going to happen, or a new version that is going to come, right? So the news flow for this sector is continue to be weak, and for that reason we almost exited the traditional IT services more than 6 months back, and are not in a hurry to come back, even though stocks have corrected and there has been some technical bounce back also. We are staying away from this sector.
Right. And sir, we are seeing some signs of FII coming back, but overall, how do you see the global capital flows to be into the country for the rest of this financial year?
I think there's a fair chance that FIs will come back because at 95, the risk of further currency depreciation is behind us. On the fringe, demand is holding on in India. Middle East has continued for long, but now even if the war doesn't end or the issue doesn't end, oil has come off, so it's no longer a worry for us. We are one of the worst relative performers. So on an absolute basis, we might not, but on a relative basis, other markets have done much well over the last 12, 15 months. So from that point, the relative underperformance, you can say mean reversion trade can also come into India. So there's a fair chance once things stabilize globally, there is less of uncertainty. FI monies can flow back into India in the second half. That's broadly what we also feel. It's a fair chance the money can come in.
Sir, just a minute. We have Mahima joining with us to give us more details on Godrej Consumers' volume growth and what has come out from the press release.
Right. So, Amit, the volume growth on a consolidated basis has come in at that 9% mark, and on standalone basis has come at that 7% mark. So, slightly better versus what the street was expecting. But in terms of where the Africa business goes, that's been a beat. But Indonesia business has seen a growth of around 15%. In terms of India business, the growth has come in at 11.5%, and the Africa business has seen a growth of around 46%. I think India business growth coming in at 11.5% is probably the reason as to what the street is not liked, and that's why we're seeing the stock tank. But volume growth at that 9%, slightly less than the street estimate, but not a very bad volume number per se.
Okay. Thank you, Mahima, for that. Aman sir, when it comes to the macro variables, what is that one thing that you'll be watching out for most? Will it be interest rates, liquidity, oil, currency, or something else?
I think currency is now behind us, so I don't think currency is that big an issue. Interest rates maybe not headed lower in the near term, but they are not rising either. So that is also not something that is. Inflation could be a number, I believe, which one should be closely working because that is also something which is linked to crude price. So if crude stays higher for longer or for some reason the price of crude gets reflected into the inflation number, then eventually it will get looked into the interest rate scenario also. So for me, monsoon also is something that needs to be very closely watched because that will also impact inflation. So I believe inflation would be the number closely watched for.
And lastly, sir, just wanted to check with you one thing. Which are the three stocks that could outperform as per you, say, over the next 1 to 2 years?
Sorry, we don't discuss stock specific because of
sectors. I mean sectors. Sorry. I mean sectors.
Sectors, I believe pharma will continue to do well. It's been relatively insulated both from the global uncertainty plus a big beneficiary of the currency depreciation. So that is one sector which we are positive on. We feel should continue to do well. Domestic manufacturing is a multi-year theme that should continue to do well. So bearing the next 1-2 quarters where we see a margin pressure due to higher metal prices, but cap good companies, engineering companies should do well. EPC companies should do well. And financials, within financials, we are positive on NBFCs and then private banks and then PSU banks. So in that range, feel NBFCs can also continue their outperformance in the near term.
Okay. Well, thank you, sir. Thank you for joining us and giving us your perspective on the markets. Moving on to Britannia. Now, Britannia has delivered an inline June quarter, but it was the volume growth number that surprised the street and led the stock higher. Let's get in Mahima with more details on the same.
Right, so Amit, as you rightly mentioned, a 9% volume growth is what is excited this street, but the stock has of course come off from the day's high point. But I think the key highlights from the conference call was that going forward, they're expecting price hikes to be around that 1.5% mark. This quarter, they've mitigated half of the inflation by shrinkflation and half they've done it by absorbing by themselves. In terms of the overall approach and commentary suggests that it is going to be a cautious approach where margins are concerned because raw material costs are going up, inflation in terms of LPG plus other raw materials are also going up. They're cautious overall in terms of El Nino monsoon effect as well. So there also it'll be a wait and watch out for demand. They've said that right now the demand is very steady, but going forward they're not sure of how macro factors will pan out, and that's why they've said that it's a wait and watch watch out situation for it. Overall, for sales headwinds in the Middle East market, they have seen. In terms of the Middle East conflict, they said that they'll be closely monitoring this, and international business, though, has seen a flat growth. It's been a resilient one despite of the geopolitical situation, and e-commerce has led a strong double-digit growth in Q1. So this is the overall summary of what the conference call commentary looks like.
Right. Right. Well, Samvardhana Motherson, that counter has been gaining in trade up around 9% after reporting a strong quarter. Let's listen into what the management had to say about the quarter and cost optimization measures that could drive the future growth for the company.
This was the best ever performance as far as the top line of the company is concerned. We achieved our top line of 35,000 crore rupees. Generally speaking, June quarter is comparatively inferior in terms of top line than March quarter. But as a matter of fact, June quarter top line was better than the March 26 quarter. You're right. We, like other industries, also faced a bit of headwind because of commodity prices. And we also noticed a bit of a contraction in gross margin. But over the period, we have taken several cost optimization initiatives. We have also invested in technology. We also got some benefit of leverage because of the robust growth in top line by almost 17%. And as a result of that, between June 25 and June 26, we were able to expand our EBITDA margin by almost 60 bips. You are right. There are some costs which can be passed on. For example, in wiring harness business, in general, we are able to pass on the increase in copper prices between a quarter or two. And we anticipate that we continue with a similar model in this business in quarters to come.
Moving on to an exclusive chat with NDTV Profit, Pharma Secretary Manoj Joshi says India must move beyond assembly of medical devices and increase local value addition, expanding domestic API production as well. Listen into what he has to say.
What is the way ahead for the India medical devices sector? What sort of growth we've seen, given the fact that we have had one PLI scheme already come out, second one in the works? Talk to us about what the growth is.
I think we need, in high-end medical devices, we have seen a lot of assembly happening in India. Now we would like to see more value addition, domestic value addition happening in India to at least say 40-45%. And a lot of growth in component manufacturing in India. We would like more and more units to produce components in India so that we can cater not just to Indian market but to export market. And also in consumables and disposable side, where India has some strength and we do export products also, we would like to see more and more exports of quality products to happen in India. Diagnostic side, we would like some companies to set up production facilities here because we don't have much of a production in India. And implants is another area where we are done quite well, and we would like a larger share in export markets for India.
So what are the sort of incentives we are working towards to attract these? Like you said, we need to set up these manufacturing, end-to-end manufacturing in India, not just assembly.
I think the government's focus is, one is the production-linked incentive schemes which are there for electronic industry, for printed circuit boards, for medical devices, because it's across different sectors, components which are used in medical devices. So all of those PLI schemes are supporting component industry in medical devices. We are working on medical devices parks also, and the development of labs and testing facilities so that it's easier for industry to access to these facilities.
Well, that was an exclusive chat with the Pharma Secretary. Moving on, the standoff between restaurant bodies and food delivery platforms continue. But talks are gathering pace. While Zomato has been giving more time to find a resolution, Swiggy still faces the original August 15 deadline. Ridhima is standing by with more details on the same.
National Restaurant Association and Bangalore and Karnataka Restaurant Associations are all set to meet Swiggy and Zomato representatives today, and this is after the ongoing tussle between the food apps and the Restaurant Association with respect to platform practices. Now, NRAI and Bangalore Association have extended the deadline given to Zomato for halting their orders from 15th August to now September 1st. The association has said that Zomato CEO will be willing to resolve the issue before September the 1st, and Restaurant Association hasn't extended any deadline for Swiggy. So the deadline for Swiggy for halting the operation stands at August 15. This is as per the information from NRAI and Restaurant Associations of Bangalore and Karnataka. Now, their main demands include that they want greater transparency with respect to commission structures and also end to force discounts and deep discounting by the platforms. And thirdly, they also want timely and transparent payment settlements and no unilateral deductions from these platforms. Now, the background of this issue so far, the issue started happening around late July when the restaurant bodies had raised issues with the concerns over platform practices, and on July 28th to 30th, they warned of possible boycott if the demands are not met, and on August 6th, they've extended the deadline with Zomato, but they've not extended any deadline for Swiggy. Now, how important are these platforms for these restaurants? Around 100% of the revenue for these dark kitchens comes from these online apps or food apps, and about 5 to 30% of the revenue for these other restaurants comes from these food apps. So which makes it very important for them. Now, sources tell us that there has been negligible impact on the companies so far, and there's a way forward which is being going on with respect to the talks between these food apps and these companies and the associations.
Right, thank you, Rizma, for that. Moving on to RateGain Technologies. Now, that company reported a strong June quarter. In fact, they have also hiked their guidance. To understand more about this, let's welcome in Bhanu Chopra, the founder of RateGain. So, firstly, to start off with, you have increased your revenue guidance, you have increased your margin guidance. What are the factors that are giving you this confidence?
Yeah, so as you saw our Q1 results, we came in almost 3x on the revenue and 4x on the EBITDA, and our results actually exceeded our expectations for Q1. And the kind of visibility that we see in the numbers, the momentum that we see in sales, and there's a lots of exciting stuff that we're doing using AI native products. So just the overall momentum of the business, our integration with the company that we acquired, Sojourn, is running ahead of schedule as well. And we've been able to realize all the cost synergies, and now we're working on the revenue synergies. And just as an example, this first quarter, our APAC team started selling the combined offering between Sojourn and RateGain, and we had a bumper quarter. In fact, we sold 200% more in APAC region versus last year. So lots of good signals, and that gave us the confidence to up the guidance.
Conservative here? Because 3x revenue growth in one quarter, 70% for the full financial year. Are you being conservative, or the base is high? What is the reason behind this?
So if you look at our numbers from last year, they are standalone numbers, and this year we have Sojourn numbers. It's the numbers of the acquired company. So organically, if you look at it, our growth is about 17.5%. So combined with the acquired company, the the overall numbers for the year come out at 70%.
Okay. So one thing I just wanted to check with you, how much was the revenue in Q1 from allied services, like the credit card companies that you receive from credit card companies for data analytics? Because I believe that is not part of your core business as of now, but contribute high on the margin front.
From a contribution perspective, no, they're not higher, they're in fact lower. So just to remind you and the audience, we are the largest travel intent data company in the world today. So what does that mean? That means we know where people are traveling, and we can build out travel audiences for our customers so that they can get more out of their performance marketing dollars. And um, and this data is quite useful for lots of other industries. So let's say, when you take an example of a credit card company, we had the FIFA World Cup, and they were interested in being top of mind of their users. So they used our data to understand who's traveling to the US and would want to advertise to them, so that whenever they take out their credit card for any charges, they're using, their specific card, whether it's Visa or MasterCard, etc. So we do sell this data for running campaigns to travel audiences of interest to different companies, and that revenue is about 4 to 5% of the overall revenue that we have. So you can say on a base of almost 800 crores, maybe 35-40 crores worth to these ancillary customer segments.
Okay, and one thing on the organic growth, I believe the organic growth excluding the FIFA and Middle East disruption was largely flat for the company. What are the top 3 operational levers that can sustainably move organic growth into the mid-teens, say, over the next 6 to 8 quarters?
Yeah, that's actually factually incorrect. The organic growth landed up at 17.5%, and as I explained in the earnings call, there was an uplift with one-time uplift through FIFA, which was around 2.5 million, but we also had an offsetting because of the Middle East of war. So I would say organically, we have guided the market at 12 to 15% for the whole year, and we came ahead of that at 17.5%. But as I was stating earlier, given what we are seeing in the business right now and the momentum, we should come in at the upper end of that range of 12 to 15% organic.
Okay.
Yeah.
Cool. Thank you, sir. Thank you for joining us and giving us the way forward for rate gain. Well, that was the management quite optimistic on achieving the increased guidance. Well, with that, it's a wrap on this edition of Markets at 12. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year.
We are joined in by Sri R. Doraswamy. He's the MD and CEO at LIC. And congratulations, sir, on the Q1 numbers. They were standout here.
Thank you.
What led to this, sir? And is there more profit levers going ahead?
We have been maintaining that ever since we went for IPO. We have embarked on a directional shift in terms of product mix. So all the products that we launched after 2022 have been on the non-par side, and with a continued focus, we have improved the contribution from non-par products. And that is something which has helped in the corporation coming up to these numbers. We have been able to do well. Particularly in the first quarter of current year, we found that the contribution from non-par savings and non-par protection have gone up, which have helped in the improvement in margins and VNB numbers.
Yes, sir. Speaking of the VNB numbers, these margins are improving, and it seems like the tone of the management is that it will go up on the higher side. Just wanted to understand, is the gap coming closer towards your private peers now?
Yeah, we have always been maintaining that we'll be improving our margins in such a way that we can be one among the best in the industry. Right. That has been our focus. When it comes to VNB margins, there are multiple components. One is the product mix. The product mix change that we have been bringing about has helped in this. Two is our improvement in the operational efficiency. Our expenses ratio has been continuously on the decline, and we have been focused on that as well. These two are under our control, which will be continuing to work, and I think there will be further improvements on that. Given that the interest rate scenario remains the same way, I think we can see some more improvement in this area.
Fair enough. The AP segment, annualized premium equivalent, that is steady this quarter, not very great as compared to VNB. What are the key reasons behind it?
No, we had a difficulty in terms of maintaining the kind of volumes that we had in ULIPs and annuity, given the market situation that was there in the first quarter.
So is it because of the West Asia crisis?
Yes. When there is an uncertainty in the market, when income of the people get affected, naturally it results in with an impact on the savings capability. When income of somebody goes up, the first thing to get affected will be the savings. So we had difficulty, and particularly the kind of volatility that we saw in the capital markets brought the ULIPs into clear focus. So we could not show the kind of growth that we are expecting in ULIPs and annuities.
Fair enough. But let's talk about a little bit about par versus non-par segment. What's the ratio right now? And what kind of target we can expect 2 to 3 years down the line?
We started at around 8% share of non-par when the IPO time was there. And from there, we have been continuously focusing on improving. We have now reached 32% non-par and 68% par. That's what we have reached. We are looking at a ratio between 30 and 35 as a non-par, and it can go up a bit more. We can
by when it can be achieved, do you think?
It's almost consolidating now. For the year, last year itself, we touched 34, 35, and that's the range we would like to keep.
Well, fair enough. But the average ticket size, I'm hearing or I'm seeing the numbers, has gone up as well. Do you think this trend will continue going ahead?
Yes. See, we are trying to improve the focus on high ticket sales. In October 24, when the new master circular on products was rolled out by the regulator, we had to align our products to be compliant with that. So one step that we took was to increase the minimum ticket size of the policy in terms of sum assured from 1 lakh to 2 lakh for the highly selling products. That has helped. And also we would like to see that our agents are trained to talk about focusing on the protection gap. So what is the amount of insurance a person should have given the income and the other liability that a person has. So that is something which is slowly starting to pay off. We would like to have further improvement in the ticket size in the days to come.
Nicely explained, sir. But I want to understand, IRDAI expected to come with regulations maybe in the next couple of weeks. What's the industry buzz? What's the expectations looking like? On which area it might be?
See, the next change in regulations is expected on distribution sector. So the regulator has been talking about the distribution sector reforms for quite some time. The focus of the regulator has been rightly on improving the accessibility, improving the distribution efficiency, and ensuring that the customer interests are well protected.
So customer wins.
Customer benefit. So that's the main focus. If the costs on distributions are high, it will result in the benefits payable to the customer being reduced. So that is the one area which is the focus, and a lot of deliberations have happened. The regulator has had individual discussions with
So it will be like a white paper coming out.
No, it will be a discussion paper.
It will be a discussion
paper on the kind of sector, the reforms that the regulator is thinking of. We are expecting it in the immediate future. The regulator has also been talking about how the distribution costs need to be optimized, and particularly how it should be aligned to effort-based remuneration kind of a thing. And sure, when it comes to LIC, we have been having the least ratio in terms of commission to total premium
as
income
compared to the private
as
players.
compared to the industry and the private players. So we don't expect too much of an impact on LIC given this position of LIC. But whatever changes are going to be brought, we are fully confident that we'll be able to act upon it, ensure that we are compliant, and also protect the interest of the customers and our agents.
Fair enough, sir. And the agency business, 93% of that business is coming from there. But alternate channels have started increasing, even though it's a low base. So which are the alternate channels looking like for growth?
No, we have both. We have the banks as partners, as well as the corporate agents, brokers, IMFs, and other such organizations which can do. The web aggregators and others. Okay. So our focus has been to keep our strength strong. So agents training, agents handholding, and ensuring that a good improvement in the productivity of agents is one of our key result areas where we are working on. At the same time, we found that the opportunity that was being available in terms of getting premium through banks and alternate channel has to be fully utilized. So we started focusing on that for the last 2 years. We have improved from a 2.5% ratio, which was there at the time of IPO, to 8.2% through banks, alternate channel, and digital in the last financial year. We expect it to go further because the potential is still high, but we are ensuring that we get the best out of agents as well as the alternate channels and banks. So our ratio of business done through banks and alternate channels is expected to increase to close to double digit in the current year, and still further improvement is possible in the years to come.
So the last question is on the guidances. Any important numbers we should be tracking for the end of FY27? Any numbers which have been discussed?
No, we are looking at enhancing our margins to the best of the industry, or to the industry average level at least. That is something which we will continue to work on. Our improvement will be on the contribution from bancassurance and alternate channel. That is one more area which we are looking at. On the product front, we have been doing well on savings, which will continue to improve. We have been doing well on the annuity side, which is a pension market, which is an emerging market, which is required for the country. We'll continue to do well in that also. Last 2 years, we saw a good growth in ULIPs. The market fare has also been good for it. The first quarter did not see a good growth there because of the market uncertainty, but we expect to come back in that also in a good way. And the fourth bucket, which is the protection bucket, that is also something which we have started increasing our focus. It has seen a good growth in the first quarter. In the current year, we expect to see something more, some good growth in protection and savings. That's also something.
Well, that was the management of LIC. Hello and welcome. You're watching Trending Stocks right here on NDTV Profit. My name is Puneet Zaveri. With me is Hiral Dadia. And over the next half an hour, we'll continue to focus on those key stories as well as what's happening with the market today as well. But let's take a quick check of that as well, because you've seen largely that 77 to 80 point kind of a correction on the Nifty 50. The Bank Nifty too has largely remained volatile as well as softer as we end a week which was led by cash amongst other reasons which we've been tracking at the end of the day. But overall, those are some of the key aspects that drive on this Friday afternoon. Let's look at the key factors now that we're tracking right now. Both, of course, on the index, Nifty remains volatile. Bank Nifty also at 57,700 has been in that midpoint range now. 58,200, 58,800 are those higher resistance levels that we are watching out for as well. But buying has been seen in certain segments like the IT as well as the auto segment that continues to be in focus. We've had a good set of results over the last couple of weeks for the auto pack, and new launches expected in the next week too. NBFCs are under pressure after the RBI proposals. You saw a sharp downtake on Bajaj Finance, and that has continued to be down. Shriram Finance also trading down by almost 2% right now. But the rupee also marginally remaining weaker at this point of time. Crude has been volatile too over the last couple of days. We first saw a deceleration and then yet again. But quarter one earnings today, these are some big ones that we're tracking. SBI will come during market hours. So the next couple of hours will be crucial for this counter. Hindalco as well as Titan, another big counter that will come through as well, because you saw some good updates from Kalyan. But post results, we've seen some correction on that stock as well. Ola Electric, of course, continues to be in focus on the back of results. So is Keynes Tech and PFC. For Keynes Tech, you will watch out for all those advances that the company has done in terms of resolving those cash flow issues. So that's something to watch out for. Also, what to watch has been the US July non-farm payroll data, which will come in India time in the evening, and the July unemployment data that will also come through will be something to watch as well. But Hiral, back to you as to what you're tracking and the company that we have on our focus now.
Thank you, Puneet, for that. Muthoot Microfinance, that's the stock we're focusing on today. Let's pull up that one on the screens and see what the counter is doing in trade with regards to the impact on the back of the earnings, because there has been a sharp rebound in terms of profitability as well. The stock actually opened higher if you check your screens, and from there it's corrected quite a bit. Now, the question is, AUM growth is accelerating, credit costs are normalizing. In terms of FY27 guidance as well, what is achievable, and whether the recovery in the microfinance cycle is sustainable or not? Sadaf Saeed, CEO at Muthoot Microfinance, joins in. Sadaf, welcome to the show. Always a pleasure to speak to you. You know, my question is, a sharp improvement is what we've seen in terms of where the profitability goes off in the first quarter, and has been driven by lower costs as well. Can you confidently say that the worst of the asset quality cycle stress is now behind the industry?
Yeah, good afternoon, Veeral. Thank you for having me here. Definitely, I think the worst of the cycle is over. In fact, in the industry, we are seeing a good uptick in numbers in terms of disbursement as well as improvement in the asset quality. And of course, Muthoot Microfinance has been on the forefront of the revival of the industry. And we have specifically identified a strategy of diversification, and which is what we are playing out here. And this is showing in our numbers. If you look at the disbursement, we had the best first quarter disbursement ever, 2,644 crores of disbursement. The same number was around 1775 crores last year. So it's a 50% almost improvement on the disbursement number. And if you look at that, translates into year-on-year asset under management growth of around 18%, and our income growth of around 20%. And most importantly, if you look at the PPOP, it has also improved by 43% year-on-year. So our diversification strategy is really helping us to improve asset quality and continue to maintain the growth. And that is our effort to ensure that there is a sustainability across cycles. So because microfinance as a business faces challenges if there is a macroeconomic event or any external event. With the diversification, which is in the individual loan, gold loans, as well as loan against property, trying to build that stability into the portfolio.
So diversification is the key over here. And my question then is, are you seeing any pockets of stress that continue to worry you? Either it could be geographically or any specific borrowing segments that you would be tracking closely so that there is no derailment happening?
So as of now, I think all of the asset qualities are behaving really, really well. If you look at our individual loan portfolio, the delinquency there is 30 plus is 0.02%. And gold being a secured loan, there is no delinquency at all. And loan against property also, the asset that we have built, the delinquency is less than 20 bips. So from that perspective, we are quite stable. Even in JLG business, we are seeing collection really, really improving. Our overall collection has improved to almost 98%, and our X-bucket collection is 99.9%. So we are seeing a very, very good improvement in collections. The cash flow in the hand of the rural borrowers are improving. And as a result, the collection is also improving. I think we are actually at a very, very sweet spot. We have a very good asset quality improvement, and the diversification, all the things have been put in place. We have a strong liquidity available in the market. We are sitting on a 5,000 crores of sanction in hand. around 1,300 crores of liquidity in hand. Our cost of fund is coming down. It has come down from 10.27% to 10.13%, 14 bips in just one quarter. We have also been upgraded in terms of our rating. We are now AA minus company. The benefit of that rating will translate in the coming year, so cost of fund will further come down. So I think all four fronts, whether it's growth, whether it's asset quality, whether it's cost of fund, availability of fund, we are really doing well. Hence, we have revised the growth targets also from 15% to 20% for the current financial year.
Absolutely. So that's the revision we're talking about, at least in terms of AUM growth, 12 to 15 to 18 to 20. What about the non-JLG products? I'm talking about the joint liability group products. That has continued to rise as well. So what is that ultimate mix that you're looking at between the JLG and non-JLG portfolios over the next 2 to 3 years? And what will that do in terms of impact on the financial side of it?
Yeah, that's a very important question. I think right now we had given a guidance of for the financial year around 75% JLG and 25% non-JLG. We are already at 76% JLG and 24% non-JLG. So by the end of the year, we will be at around 70-30% kind of a mix. Our long-term target is to have a 55-45 mix at the AUM level, and at the balance sheet level around 60-40 as permitted by RBI. Definitely this will have a huge impact on the asset quality as well as on the operating efficiency, because these products that we have introduced, which are non-JLG, these are all based on e-NACH collection. So this is all digital collection. We are able to serve more customer with the same number of branches and same number of people. And that is really helping us to bring in the efficiency. Our productivity per branch, where we used to manage around 7 crore per branch, now we are managing 8.5 crore per branch. So almost 20% improvement in the branch AUM also we have seen. And as a result, the efficiency in the operating cost will also come in. We have already reduced our cost by 10 bips from the last quarter. It was 6.4% to 6.3%. And all of this will translate into better operating efficiency, better credit cost, and higher ROA. Hence, we have guided an ROA of around 3.3%. And in the long run, for the 30,000 crore AUM, we are guiding around 5% ROA. And this is what I think diversification will help us to lead to.
Okay, quick question in terms of fundraise and cash position. CRISIL has upgraded your credit rating as well. So what are the benefits that you're seeing on that front in terms of your borrowing costs and funding access? And that 4,000 crore fundraise that you've got an approval for NCDs as well. How much growth can be supported through the existing capital versus your fresh borrowings?
So we are looking to disperse around 3,000 crores per quarter, and going forward in the quarters that we will be in the last 2 quarters, it will be around 4,000 crores. So in the balance period, we will disperse around 11,000 crores more. In terms of our liquidity, as I said, we have 5,000 crores of sanction in hand. Plus, we have not yet done any NCD because we were waiting for this rating upgrade, which upgrade has already come, and there's a huge amount of NCD demand. Also, we have a 4,000 crore approval. We can go for that as well. And we have certain ECB approvals also sanctions in hand. The ECB we are not drawing right now because of the volatility in the foreign exchange prices and the hedging cost. So once that stabilizes, definitely we will borrow that also. But more importantly, the benefit of our rating upgrade will start accruing to us in the Q2, Q3 onwards. As we borrow more funds, definitely we anticipate that 25 to 30 bips of rate reduction we can further bring in. And the year we will finish in single digit in terms of our cost of fund. That is definitely likely to happen this financial year.
Last question is, you've received a perpetual authorized dealer category foreign exchange license from the RBI as well. What would this actually mean in terms of getting the license, and what does this mean from a business perspective? What will be the vision here?
See, the idea is to access capital from different sources. We have a lot of DFIs, which are foreign entities, which are lending to us. And they continue to support our growth and continue to lend to us. The challenge there is basically the hedging cost, and we think that as the dollar stabilizes against rupee and we are able to get a stable kind of a hedging cost, we should definitely be able to borrow more, and this facility will definitely help us to borrow that dollar loans, and we would be able to maintain our margin and improve on our NIM and ensure we are able to deliver and cater to the demand that the customer is creating.
Okay, thank you so much for that. I mean, lots to actually watch out for as well, and that uptick in guidance is something that the street is now watching out for. Thank you, Sadav. Always a pleasure to speak to you. So that's the management of Muthoot Microfinance. That stock is up 0.7%. But now it's the time for the rapid fire, which we always do it at the start of the show. Today we're going to do it at the end of the show, and Puneet will take you through that one with Sachin Janardhan Sarvade. Puneet, over to you.
Well, thank you for that. Sachin, good afternoon and welcome to the show. The first stock, Bajaj Finance. Now, of course, we've seen on the fundamental side of things, those regulation changes could have an impact on the stock. Is that visible on the charts as well?
Basically, we have seen on a chart, it is just a normal profit only. Support levels for the stock is around 1050 levels and 1020 levels. So in that area, we are seeing some kind of a buying interest. One can buy at that level.
The other ones, Samvardhana Motherson as well, strong set of numbers, good commentary. But Sachin, does this momentum continue? It's not reached this level for quite some time now.
We are actually seeing breakout on a monthly basis, so it is accompanying with good volumes basically. So we will see some kind of a profit booking, but yeah, the momentum will be able to continue on the upside. We can see 190 and 200 levels.
The other one's Hero Motor Corp. Yet again, you've seen good commentary from the company in the con call this morning. But how are you looking at this on the charts as well? We've seen some correction from the highs, Sachin. But what are you picking up?
That is a normal correction in an ongoing process. The stock is actually trying to change trend from down to up on a daily charts. So it will have some kind of a pull push, but overall what we are seeing on a higher time frame on a weekly and monthly, we can see some kind of a good upside in coming months basically. So our targets for Hero Motor Corp is around 7600. We can see that levels as well.
Also, Sachin, on PG Electroplast as well, another one that's buzzing on the back of results. How do the charts look for this counter?
PG Electroplast, overall what we see on a daily, monthly and weekly time frame, it is trying to change on a daily time frame from down to up. We have to be cautious because this is the first change what we are seeing on the charts. It need to be closed around about 650 levels. If we are getting that and a follow-up buying, then we can see 700 and 750 levels on the upside. On the downside, around 550 levels is very much important. If it is again closing below that level, then again the trend will change.
Got it. And also, as we look at Siemens Energy as well. Another high flyer in trade today as well, Sachin. Stock has continued to maintain that 12 to 14% uptick. Are the targets still ahead on the charts, or is it a good time to book profits?
No, we can hold the stock, and what we are seeing in the charts is around 4300 and 5100 targets as well. So buy on this will be a very good strategy in this stock.
Also, what's your view on Kalyan Jewellers, Sachin?
So Kalyan, I have already given on your NDTV Profit. I am very much optimistic in this stock, and we can see at least a 5 to 10% more in this stock.
Also on Ixigo as well. Now this counter again on the back of results, but it's bleeding in trade today right now. Sachin, how are you looking at Ixigo as well? Seen some massive correction since October 2025 levels. Is there any stop loss in sight?
We are not optimistic on this stock because the stock has taken a resistance around 200 and SMA basically, and we are seeing a lower high, lower low from that level. So one should exit if they are holding it.
And the final one, Sachin, on Crompton as well. What are you picking up?
So Crompton today, what we are seeing on a derivatives basically chart as well, there is a short built up. Even the trend is down, and the On chart, the volumes are very much higher. So this sell-off is with volumes. So one should exit this.
Got it. Well, that was the last question of the rapid fire. Sachin, thank you for joining in, giving us your perspective as well. But back to you, Hiral.
Thank you so much for that, Puneet and Sachin. In fact, let's just quickly pull up the markets as well once again. Let's pull up Nifty 50. We'll look at Bank Nifty sectoral indices and then what's happening with the broader markets as well. Nifty 50 trying to inch higher from the day's lowest levels, but there is some movement there, 0.3% lower as we speak, but we are below that 24,600 mark. Let's just quickly also pull up Bank Nifty on the screens and then we'll look at individual sectors as well as to what's happening on that front. Bank Nifty also a similar kind of chart, 0.5% downtick coming in there. If we can just have the sectoral heat map and then we'll have the Nifty 50 heat map as we speak to understand what are the stocks which are actually pulling Nifty lower. IT was the one which was the top gainer in today's session. If you look at Nifty, okay, then we have the Nifty 50 heat map first, but TCS continues to be the top gainer followed by an M&M. Hindalco will be reporting numbers today, so ahead of the numbers that stock is up around 1%. Indigo, Reliance Industries, HUL, Nestle, a few of the top gainers. What's losing out? Bajaj Finserv and Bajaj Finance, both of these counters are under pressure, and the reason why you're seeing this kind of pressure in terms of where Bajaj Twins goes is on the back of the RBI circular which has come in for the NBFC space, and there you go, 4 to 5% downtick coming in there. So that's what the markets are doing at this hour. But completely out of time on this edition of Trending Stocks from Puneet, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned. It's time for a quick break from the NDTV Profit Suzlon studio. We'll be right back.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best on-ground coverage of the year. Operation Sindoor coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one.
Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at what the markets are up to right now. And when you talk about Nifty 50, some bit of pressure that you're really seeing coming in, about 80 odd points pressure also coming in there. When you talk about Sensex as well, somewhere close to 450 point decline also is what you're seeing coming in there as well. And when you talk about the sectoral picture, it's actually autos, IT and India defense and perhaps energy that is just a little bit resilient at the moment. What's not doing so well is financial services, Nifty bank, Nifty pharma, rural, oil and gas. Some of those sectors on the back foot. What's not doing so well from within the Nifty 50 pack is something like a Bajaj Finance, Bajaj Finserv also for that matter. So the Bajaj twins, Trend, Shriram Finance, ICICI Bank and Jio Financial Services. Some of those counters on the back foot just a tad bit, and some of your IT counters are holding up quite resilient, like I said. So something like a TCS, Infosys, HCL Tech, all of those counters doing quite well for themselves, and Reliance also quite resilient with that 0.5% thereabout uptick also coming in. With that said and done, let's also talk about Keval Kiran, and that's in focus on account of its quarterly numbers. The company has delivered a strong first quarter with growth also driven largely by some of those higher volumes and improving execution as well. In fact, Pat, this is quite the interesting set of numbers that you're looking at.
Absolutely. They have reported a strong set of Q1 numbers, and we have the management as well. We are joined by Mr. Pankaj Jain, who is the president at Keval Kiran Clothing. Let's start with I wanted to ask about the volumes, sir. In the first quarter of FY27, our volume growth was 18%. So what is the demand outlook that is there for the next quarters? Is 18% sustainable at this point?
The market is challenging as of today, okay, but I think the strategies where Keval Kiran is playing into, will be able to achieve double-digit growth in the coming quarters also.
Is that double-digit growth going to be on the higher double-digit side or the lower double-digit side, sir?
See, as we gave an estimate, we look at our revenue growth are close to around anywhere between 15 to 18%.
The retail channel in the first quarter was at 59%, the channel mix versus 54% in the first quarter of last year. So how do you expect this mix to change going forward, and how does it impact our margins?
So our retail mix comprises of our own EBOs, and chain stores. Our non-retail comprises of distribution, which is general trade, exports and online. We have been focusing on increasing our scale in retail. The composite blend on both on the EBITDA level for retail as well as non-retail is almost similar.
Okay, and also on this retail channel, do we expect this mix to grow further in the coming quarters?
Our focus is to concentrate more on retail.
Also, sir, you have given a vision 2028 where the company is targeting around 900 EBOs, but in this quarter the addition was just at 4. So when can we expect this pace of store additions to pick up?
Generally, the store opening happens generally in Q2 and Q3. Majority of the store openings happening in Q2 and
and also, how much net store addition can we expect by the end of this year, which is FY27?
Anywhere between 50 to 70.
Understood. And also, since the company has a very strong net cash position at this point of time, how are we planning to deploy those cash flows? Are we looking towards any expansions or acquisitions?
We have been okay, as we explained in our last con call. We have changed the growth strategy from 15 to 18%, where we feel that 15% can be touched organically. Okay, we are also looking at inorganic opportunities. So we are also in touch talks with some of the people. Okay, anything regarding the inorganic perspective? Okay,
Understood,
we will
sir.
let you
And
know.
also on the share of apparels that has increased in our overall volumes, it has increased quite meaningfully. So how does that affect our margins?
As compared to a non-apparel mix, apparel has a higher GM contribution, and we feel that okay, the volume growth will be more on the apparel mix.
A follow-up on that, do we have any guidance for the volume growth in apparels?
When we say that okay, we'll be able to achieve anywhere between 15 to 18%. Generally, it's 10% volume growth to a 5 to 6% realization growth.
Well, thank you so much, Mr. Pankaj, for joining us. So that was Keval Kiran Clothing guiding top line in the range of 15 to 18%. And over to you, Shreyansi.
No, absolutely, and Parth, it does look like a strong set of numbers overall. Even when you talk about the guidance, looking like quite a healthy guidance as well going forward.
Right.
Thank you so much for joining us with that conversation also. So that was quite enlightening to say the least when you talk about Keval Kiran as well. But let's also move on to some more enlightenment and talk about a year of extremes coming in for gold prices as well. Let's talk about that as well in terms of what's been happening. So now when you talk about gold, it's up nearly 5% on a weekly basis. You're looking at it still down almost a fifth since the war has begun in late February as well. So you're looking at a little bit of tale of two triggers really coming in as far as gold prices are concerned. Let's also make sense of some of these and get you some more insights. In fact, NS Ramaswamy, Head Commodity Desk and CRM Ventura is joining us right now on the show. Thank you so much, Mr. Ramaswamy, for taking time out and joining us. As always, it's a pleasure to be speaking to you. But, you know, when you talk about gold as well right now, it's quite the interesting setup, which is why this makes this conversation so much more interesting, right? When you talk about the weekly basis, you're looking at a 5% gain. When you talk about gold thus far this year, especially since late February, it's down by almost a fifth. You did have that rally coming in January. But, you know, first things first, just wanted to get a sense of what you think about the week gone by first.
Yeah, basically, gold's consolidation is almost come to an end and it has started to rise. That's what we have been observing, mainly through the Chinese demand, which is very strong, and also the US Fed's uncertainty. Basically, the US Fed is not at all in a hurry to raise the rates. If you were to see, the treasury yields are rising, and also the US dollar is a bit of weakening trend which has been observed. So Fed doesn't require any adjustment as regards the inflation. It's because it's behaving as expected. So the consensus is about 56% of the consensus is talking of only a 125% hike in the interest rate, which was during the year end, and this was expected. Almost two such hikes were expected. So what is really happening is July FOMC, post July FOMC, we have got only September. So now this is a lean period where the Fed related monetary policy is not going to influence gold. So this is the time when the geopolitical part of it is really acting on it. So the progress that has been seen in the Middle East, conflicts and the peace talks and whatever we are seeing on the oil prices is probably indicating that there is no much worry on the inflation side of it, which is giving a great support for gold. And central bank interest rate hike is also actually expecting only one such hike for the year 2026.
No, absolutely. And, you know, moving on, just also quickly wanted to try and understand if there's one interesting sort of statement that I found in some of the analyst commentaries as well, which is borrowed momentum is what they're calling it from the Iran talks as well. So how much of this week's rally do you think is genuine de-escalation and how much of it is just short-term technical buying then?
It is not. It's more of a technical, because we were all we always saw that gold had got a floor at around $4,000 in the COMEX level, and from that we were all expecting that probably the entire buying basket anywhere between 3,950 and 4,000 being a floor. We were expecting around 4,180 going to be a technical background where which we can establish that the rally can begin. And then subsequent to that, we have seen that the consolidation phase has completely come to an end, and it is actually building up on the rally. So it's basically a combination of fundamental and technical. As I told you about the monetary policy part of it, we aren't expecting anything till September. So all that is happening now in gold is this consolidation. Will that, after it has ended, will this rally cross the 4500 barrier, which is giving a positive trend from 4180? It is already crossed, and now today we are at 4350. So 4350 levels, or in MCX Indian rupee terms, 1,50,000, which has been crossed, which is giving a very, very great support and an indication that gold is going to rally further. So it's a technical combination as well as, and today, as regards the economic data, we have the non-farm payroll, which can further give you a sign of how weakening the labor market is. It will expect interest rate cuts, which would give supportive to gold and silver.
No, absolutely, and point taken there, in terms of the setup that we've got at hand. Let's also delve a little deeper in terms of this from a contrarian perspective right now, because we do have Naresh Kataria, private investor, joining us on the show right now. Mr. Kataria, as always, a pleasure speaking to you, right? And a very good afternoon. It is a very interesting afternoon for those who track gold prices, and especially for you, since you do have that little bit of contrarian view also coming in terms of some of your recent commentary that I'm going through. You've talked about how sentiment has also bombed out in gold in the recent months, and which is especially a good setup coming in from a contrarian perspective. Let's talk about that first, and then we'll get to the other insights a little bit later.
Pleasure to be here again, Shreyansi. So on gold, the sentiment is exactly opposite of what it is right now, is opposite of what it was in start of 2026, when there was mass participation and a frenzy or a euphoria. So right now, I think the flows into the gold ETFs, all ETFs combined globally, actually outflows compared to the flows which they were there in 25 and 26. The gold bull market, this leg started in 22 when the Ukraine war started and US weaponized USD reserves of Russia. I think that was the triggered by central bank buying. And then the retail joined in later via ETFs in 25 and 26, 24 and 25, sorry. But 26, we have seen outflows in all gold ETFs combined. And I think the correction has been run through enough.
No, absolutely, and that little bit of run through that we've seen, it's actually quite perplexing, to say the least, when you talk about some of those support and resistance levels being a little fluid when you talk about gold, right? And Mr. Ramaswamy, I also wanted to just take it across to you and try and understand what you think about the scale of this year's swings, which is just something we just talked about as well. Is gold still behaving like a safe haven asset, or something more speculative? And it almost seems like I'm asking you a rhetorical question right now, right? Given the way that it's been trading in a very different sense than a traditional safe haven asset would.
It's been very, very cautious move in gold. If you were to see rightly, like how the guest just now pointed out about the global gold ETF, what is very remarkable is about the global ETF. If you see, it has attracted actually almost $3 billion US in inflows in July. It has actually reversed the last 2 months of outflow. This is as per the World Gold Council's report. And also, mind you, that Indian physical demand is a season which really starts from August. So that's a festival accumulation which begins. So we expect that over the period of 2026, if the euphoria and things should, after it crosses $4,500 per ounce, we are expecting it to greatly rally even up to close to 4,700 levels. And that is what we are expecting by almost 2026. So it's not more of a speculative, but it is an accumulation phase which has crossed now, and the rally has bound to begin now after this fundamental impact on maybe the interest rate and other things. So we need to wait and watch till September, but by then we are expecting it would have already crossed 4,500 mark.
Absolutely, and we wait and watch, we will, because it's quite the interesting setup right now that's been unfolding when you talk about gold as well. Mr. Kataria, just wanted to get in a word here in terms of the ETF tonnage that you were talking about, for some more color on that as well. And when you talk about central bank buying, both of those triggers have been quite important in terms of what investors have been tracking. Your 2 cents on this.
So stepping back, if you see this gold bull market started this in 2022 when central banks accelerated their buying and retail were actually net sellers on ETF. If you see the ETF tonnage drop between 22 and 23 and then it picked up in 24 and 25, but central banks have continued to be buyers. They've been buying about 800 to 1000 tons a year. Annual production is 3700 tons. So central banks have been steady buyers. It is the retail and ETFs which took the gold market into, and silver, of course, into a different orbit in 2025. That over enthusiasm, I believe, has been removed, corrected. ETFs, there are no great total inflows. There's actually net outflows across all ETFs. So I believe the sentiment is well placed. Stepping back, also, Shreyansi, if you see, even in 2022, when the war started in Ukraine, gold initially corrected, like it's corrected now with this war in Iran, because there is a scramble for liquidity. If you see, even India's political leadership has advised Indians to kind of go slow on gold. Why? Because we want as a nation to save dollars. So there is a scramble for dollar liquidity. And I think that's what has prompted the correction like it prompted in 2022. Just one more point on the last bull market, which was 2000 to 2011. Even within that, in the 2008 market correction, gold had corrected 30% in 2008 from the peak. And then, of course, it tripled from that level. So if there is economic dislocation, if there is a scramble for liquidity, gold also initially takes a hit on the chin. And I think this is what has happened.
Absolutely. And Mr. Kataria, just a quick follow-up question when it comes to central bank buying, right? Do you think that there's the pace, does that worry you a little bit in terms of how that seems to have reduced just a tad bit? Because in 2025, that seemed to be all you were hearing about gold, right? And that was definitely a key feather in its cap as well in terms of the tailwinds. So what are you thinking about the pace and in terms of central bank buying in 2026?
So I believe more than the pace, it is the press coverage which has come down more. 25, they bought about 1000 tons. I think the H1 of 26, they bought about roughly 400 tons. So yeah, it's reasonably good buying compared to pre-22. Pre-22 average was about 500 tons a year. And I think the pace is, of course, they are also very cautious buyers or very selective buyers. And prices went up all the way, so they slowed down. And the Q2 buying has been in quite good. I believe they are the key players, they are the key insiders, if you will, in the gold market. And because their currencies are competitors for gold. Gold's competition is other currencies. And if those insiders are buying, then obviously it's saying something on what they think the reserve currency setup is moving towards.
Absolutely. And, Mr. Kataria, I'm tempted to say that don't shoot the messenger. But then, that is actually true, right? In terms of central bank buying, we've seen a massive change in terms of the way that it's been reported, be it through the sheer scale at which we saw coming in 2025, of course, was a very important landmark year for that as well. But Mr. Ramaswamy, I wanted to also talk about the Strait of Hormuz talks as well in terms of the collapse. How fast do you think gold could, retest some of its July lows as well if there's bad news coming in from there? Because you do have this technical breakout. Some of those levels are very closely moving in line with President Trump's commentary as well.
Yeah. If you were to see what's really happening in the Hormuz is that despite these diplomatic progress that we have seen, only 2 vessels have actually transited the Strait of Hormuz. This is a report which came up yesterday. And if you were to see, it is well below the pre-February period where average that was 130 or 140 ships which were going. So despite diplomatic progress that's happening, despite peace talks which are being discussed at this point in time, and crude hovering at around 77.5 WTI, which I mean, we are expecting again a slight bullishness is still witnessed. We can see it expecting to even go to around $85 back again. So crude oil is already declined 10% this week. If you were to see due to as the geopolitical tensions in the Middle East has shown some signs of easing in MCX, it showed some corrections but then it is sideways to bullish is what it is. We aren't seeing any great reversal in the crude prices. We are seeing it in the range, and probably 85 can be witnessed maybe in a couple of weeks.
Absolutely, and that's definitely something that we're looking at, right? Mr. Kataria, just very quickly before we let you go, just wanted to try and get a sense of everything that we've talked about thus far. It's been some interesting data points, right? Be it ETF tonnage, central bank in terms of the reduced pace, but still some bit of intent very much there. And of course, the sentiment in terms of it being a contrarian perspective as well. Just quickly wanted to get a sense of if there is anything else that makes it to your radar in terms of key interesting data points to really watch out for. Anything else that you're really reading between the fine print for when it comes to gold?
So the two more things I look for gold closely. Okay. One is the direction of interest rates. And interest rates going up is a headwind for gold because gold is an asset which does not yield anything. So gold does well when central banks are cutting rates or the rates are going down, and rates are actually going up now. So I'll watch for central bank rate behavior and also overall treasury bond yields. And if they go up further, then I think it's a headwind for gold. And even if I see that gold is in a structural bull market and we had a healthy correction in the first half of 2026, gold as an asset class has become much larger. I think the total value of all gold in the world, because everything mined is retained as an asset, it doesn't get consumed, is about $25 trillion or thereabouts. It's a very large asset in absolute sum. So I don't think I look for this asset to be a multi-bagger. It's a very good ballast or a very good diversifier for portfolios. And we've had a good setup in terms of a healthy correction. And I hope that the bull market, which started off in 22, continues.
Absolutely. And Mr. Kataria, multi-bagger, perhaps if your time horizon is decades instead of years, right? Because if you look at a longer time frame, it's given stellar returns. If you look at a short time frame, barring that 2025 exception, you might stand to get a little disappointed. But divestment and diversify indeed. But lastly, Mr. Ramaswamy, just wanted to get a sense in terms of what single data point this week would really be convincing you that the rally has real legs, or if there is anything at all, be it this week or any other week, that is giving you that little bit of indication that consolidation, that range-bound trade, that disappointment when you take a look at your gold holdings, that's going away right now.
No, this the data point is supposed to be today, as I just now commented.
Yes.
It's the non-farm payroll report which is expected today. And also on August 12th, we have the CPI Consumer Price Index, which is also a key event which has to be seen. So besides that, these are the only 2 points other than the geopolitical news that will come up. So one has to be keenly watching on what is coming up on the non-farm payroll data, which will probably influence the Fed's policy for the month of September. So initial jobless claims have remained broadly unchanged. So these are one triggers which can give you direction for the US dollar as well as gold. So we aren't expecting any much data other than these two.
Thank you so much for taking time out and joining us. It's very clear that, nothing thus far, but it does definitely have potential to really just surprise us with that rally that seems to be building up, at least when you take a look at the charts. Thank you so much, gentlemen, for taking time out and joining us this afternoon. Let's also move on and talk about something like an e-clerks as well that's very much in focus, as the company's reported a rather healthy set of numbers in the first quarter. Revenue's risen sequentially, net profit is up about 16%. In fact, we're joined by Srinivasan Nadadur, Chief Financial Officer at the company as well, to talk to us a little bit more about the numbers. Thank you so much for taking time out and joining us. And firstly, a very good afternoon to you. First things first, just wanted to get a sense of your outlook when it comes to the CC growth as well. What kind of estimates do you have in mind there?
So thank you for having me on the show. And yes, it's been a good quarter. Revenue growth in US dollars terms was 2.8, and growth was driven primarily by the emerging business as well as in high tech. Some of the AI related work that we won last quarter, we've started delivering all those. There continues to be a lot of pipeline, both AI and non-AI related. So I think we are quite positive about the future.
No, absolutely, and it does look like you have every reason to be when you take a closer look at your numbers as well. Just wanted to try and get a better sense of the segments or the key triggers that you have leading your growth story at this hour.
So as out of the 5 industries that we report for the last 4 or 5 quarters, the emerging has been doing very well. I think sequentially double-digit growth for nearly 3 or 4 quarters now. This quarter, high tech has also done well. So some of our clients are embarking on large transformation projects underpinned by agentic AI. We won a couple of deals there in the last quarter, and some of that has started to get delivered in this quarter. So that is also responsible for growth. BFSI and retail, fashion and luxury a bit flat, but we expect that it will improve in the coming quarters.
Absolutely. And speaking of the high-tech segment, that contributes about roughly 16% to your revenue as well, coupled with BFSI and CMT, that makes the lion's share of your revenue. I'm just trying to understand here if you foresee that mix also changing, or do you suspect that it's going to continue on similar footing going forward?
The mix might change because we are having a lot of pipeline in emerging, so that I think the mix has already changed if you look at in a 4-quarter window. So it is possible, depending on which segments grow, the mix could change. Right now, we think emerging will continue to do well. We think high tech will continue to do well. Manufacturing and distribution and retail are a bit soft because of the conflict in the Middle East. They are pushing decisions and pushing away any postponing decisions. So we expect that there may be slight changes to the mix in the next 2 or 3 quarters.
No, absolutely. And a very, very quick yes or no answer, if you will. In terms of deflation from AI, is that something that you're noticing on the ground then?
Not at the moment, no.
Not at the moment. Okay, got it. Thank you so much for taking time out and joining us this afternoon. So there you go. That was eClerx Services after a very healthy set of numbers. When you talk about their revenue mix, they do suspect that that's going to change. But going forward, some of their guidance and growth triggers do remain the same. That's all the time that we have on the show for now, though. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है बैठ सकता आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5
Hello and welcome to Small Cap Bazaars on NDTV Profit. I'm Hiral Datia. Now, one stock that is in focus, Lupin, that has reported numbers in trade. In fact, let's get in Ramesh Swaminathan to talk to us about the quarter gone by and what's the outlook looking forward. Ramesh, welcome to the show. Always a pleasure to speak to you. You know, always under-promised, over-delivered. That's what I would want to say, because you've given a guidance of 25% for FY27, but you've actually achieved 30% in the first quarter of the year. Does this mean you will need an upward revision for in terms of FY27 guidance?
Clearly, you've done very well this quarter. There has been secular growth across various markets. In fact, no geography is left behind. We are pretty pleased with that. Products like Tolvaptan and the base business in a general sense in America has certainly delivered. There is, of course, competition which has come in for Mirabegron. And there's also a cost of additional cost in terms of what we need to pay for Mirabegron itself. We do believe, that there would be more competition coming in for Tolvaptan. So that is clearly, that would actually have an impact when it comes to the overall profitability, because America is a very important geography for us. Whilst there is secular growth, there is also the dark clouds in terms of, cost pressures. Essentially, the geopolitical tensions and the war has costed us a bit. There have been, of course, some inventories which are built over time, which is, and the full impact of, in fact, this, price rise that I'm speaking about will potentially be felt in the next 3 quarters. The cost of logistics, both air freighting as well as ocean freighting, has gone up in recent times. There are dark clouds. So I would rather stick with, in fact, the guidance of, 25%.
Okay, we'll stick with the guidance of 25%. Then does that mean for the rest of the year, the company will do probably the 23.5 kind of an EBITDA margin?
Well, clearly, the math would kind of suggest that, right? So it's a play of mathematics. And I've just told you the reasons why I just wanted to be clear about where we stand on this.
Okay, so absolute play of mathematics is what Ramesh is saying. But Ramesh, what about, you mentioned about Tolvaptan and Mirabegron, where headwinds have started to come in. And, Spiriva, where you were expecting competition as well. So what's the update on that front and the kind of pressures that could come in?
Well, Mirabegron, there's already competition, so Amneal with, in fact, MSN combination have entered the market. When it comes to Tolvaptan, I do know that there will be at least 3 to 4 players coming in at some point of time. There's, of course, a question of, whether they've got their REMS Act right and the like. But I would rather be cautious in my overall estimate of things for the future. And the cost pressures are what they are. So clearly, that's the reason why I'm cautious about the future.
Okay, so competition is what is making you cautious when it comes to the future as well. What about Spiriva? If you could help us understand that, because time and again, we've mentioned about competition coming in, but not yet come in.
Well, it is what it is. Essentially, it's it's a good product, and there is no competition as yet. But at the same time, we stand by our guidance.
Okay. When are you expecting price erosion in terms of the quantum? So by when do you see that coming in, and what's the quantum you're expecting?
No, clearly we have factored in all of the the factors that I spoke about. There is the cost of freight, and there is the cost of various elements that have gone up in recent times. The geopolitical tensions are what they are. It goes on and off. So there are several moving parts out there. But price rise is a certainty that everybody would certainly have felt, and clearly, it doesn't work for us from that perspective, the industry that is. So it's better to be erring on the side of caution.
Okay. What about on the top line front as well? The guidance given is what, high single digits, Ramesh, in terms of overall sales. You've done 32% already in terms of the first quarter. So do you think that would need a guidance revision? And if not, does that mean slowdown in terms of growth is what everyone should anticipate for the remaining quarters?
Yeah, that's what it is, right? I just told you about the fact that there is going to be competition in America for the couple of products that I spoke about, so whilst we would be, still it will not necessarily be the same 370 million dollars on a quarterly basis. There could be some downward revisions to that. So there are of course prospects. So we have in fact biosimilar products and the like. There is secular growth in other parts of the globe. India has done spectacularly well. We're hoping that we would be able to kind of continue sustain this kind of and we always guided for 20 to 30% or rise over the industry in terms of a market share here. Clearly we've done well, so but at the same time it's better to err on the side of caution.
Okay, so again, tread with a sign of caution is what you're talking about. The other thing is, in the fourth quarter of FY26, you had indicated that FY27 could still remain $1 billion plus US franchise, and this is despite tolvaptan and mirabegron headwinds. So after the first quarter, are you seeing that objective which is still achievable?
That would indeed be the case, about $1 billion for sure. And we already are looking at 28 and 29 and so on as well. Still remain confident about growth prospects for the next year as well, given all of this.
Okay, and how should one actually think about biosimilars that you're mentioning about as a contributor over the next 2 years? Because you've indicated earlier that FY27 actually would have been the beginning of the US biosimilar launch journey.
Clearly, we are optimistic about our future. We're wanting to expand our capacities in this, and biosimilars is a platform that we're looking at for the other countries as well. So there are prospects with the number of products. So we have etanercept, which has been there in the market for some time, ranibizumab, PEG-CSF, and a few other products that we have been working on.
Okay, and how optimistic are you about Simanext at the start of FY27? Because that was the optimism that you showed at the end of FY26. And after one full quarter, what has been the response? And are you still on track to become a top 3 player in terms of branded generics semaglutide?
Semaglutide, we've done very well. So we remain the top player in this. Our prospects in GLP-1 would remain pretty good, given the fact that we have a pretty good franchise with in the diabetes space with doctors. We've also got into a relationship with Ganley for bofenglutide, which would be launched in India about a year and a half later. Clearly, that would improve our overall prospects. Very bullish about it in the long term. Whilst I'm also conscious of the fact that the semaglutide market is a little subdued at this stage. The initial exuberance is a little mellowed right now. But clearly, we think that the prospects for the long term are very good. And that's going to be true with, in fact, the therapy areas that we are focusing on: cardiovascular, diabetes, respiratory, GI. All of these therapies have done fairly well, very well actually.
Okay, so diabetes, cardiovascular, these are a few of the aspects you're watching out for. And very lastly, Ramesh, my question is, in the next 3 years, what is going to be that next major growth driver for the Indian markets?
India, so we are looking at, in licensing opportunities. So, so we're also looking at, in fact, seek and develop. bring in products from China, looking at phase 3 development in India, trials in India, and eventually bringing it to market. So we would like to grow our specialty business in India over time, which will give us, in fact, moats vis-a-vis the competition, make us pretty, very differentiated from that perspective. We could look at similar strategies for the rest of the world as well. And equally, when it comes to the rest of the world, we have, in fact, our forays into Aftal. So that's the specialty business that we're building in Europe for the current, but clearly looking at the rest of the globe as well. So India, of course, is going to be a big, thrust for the future, a trigger for the future. And I would expect, the base products plus, of course, the forays into specialty to pay off in other parts also.
Specialty portfolio in the Indian markets is the growth driver. Thank you so much, Ramesh, for joining in. Always a pleasure to speak to you as well. The stock seeing a mild recovery from the day's lowest levels as we speak. But Deepak Nitrite, that's another stock to focus on in trade on the back of earnings. In fact, my colleague Neeraj Shah, who's in conversation with the management of Deepak Nitrite, let's go across to Neeraj. Over to you, Neeraj.
Thanks a lot, Hello. And yes, let's welcome in Maulik Mehta of Deepak Nitrite to talk about how the quarter went by. Well, it was the highest ever quarterly performance. So, Maulik, well on the show, of course, but I'm presuming that there is no reason for you to be unhappy. Is this the start, though, of something durable, or is it difficult to call that right?
So, first of all, Neeraj, thanks for having me. And no, I'm not at all unhappy. This has been a good quarter. It has been a testing year last year, but I think that the thesis that we've been proposing for a long time is actually starting to play out. One of the reasons the previous year looked weaker than it should have been is because our downstream assets got commissioned earlier than our upstream assets, which meant that we worked to see how to commission our downstream assets and put the product out in the market. But we were constrained with regards to the margin profile because we were forced to buy the intermediates. Now this gives us the dual benefit of being present and placed in the market, as well as having our upstream intermediates come in to give the margin kick that we were so hoping to get earlier a few quarters ago. Now, in terms of whether it is durable moving forward, look, one thing that has happened over the last one quarter, say since March, is that there has been a major upset with regards to not only raw material availability, not only manpower availability, gas availability. All of these things have resulted in a distorted outlook for the entire sector. So it is the right question to ask. Now, where I feel confident is from the angle of looking at Deepak as an integrated manufacturer. Many of these assets independently may or may not have made sense. A nitric acid plant on a standalone basis may not have made sense, but for Deepak it does. MIBK for an independent manufacturer may not have made sense, but I'm sure there will be a follow-up question that someone may ask, these margins look great because both phenol as well as acetone were in short supply. What they will not ask is whether propylene was in short supply. But since acetone was also in short supply, prices spiked. And what happens when things normalize? When we have a large and integrated base and multiple downstream assets in line, that allows us to smoothen out these volatilities that would otherwise plague a commodity chemical manufacturer. So these assets allow us to get the kind of margins that would otherwise be reserved for someone who would be a spec chem company, simply because we have much more dominance and control over our own feedstock and intermediates.
Got it. Okay. Maulik, so can I ask you if the current Deepak does it become a larger jet plane that can navigate through turbulence better, despite China dumping, despite geopolitics and raw material pressures?
So, Neeraj, one thing that we've done is our base assumption is that China will dump. Now, everything starts with that baseline. What is working in our favor, and I would say partially structural also. Couple of things. One is that India the home advantage is the anchor. Export opportunities are the force multiplier. Over this period of time, what has happened is that you've had freight rates going through the roof, insurance going through the roof. And generally, even when all of these things were normalized, over the last 5 years, one witnessed that when Deepak came in with phenol capacity and kept on expanding, the downstream consumption activity and investment expanded even faster. So our ability to be able to capture this home advantage meant that we had to run as fast as our customers to make sure that we maintain wallet shares in an expanding universe. All of these things like insurance, freight, depreciating currency, geopolitics, etc., they don't reduce the capacity threat from places like China or East Asia, but they increase the cost of delivery to customers here. And Indian customers are famously frugal. They want to have short cash to conversion cycles. They want to make sure that they are able to push their product out without building high cost inventory. They are able to ensure that they are not impacted by volatility, but the nature of the industry is volatility. And a company that can give them that sense of security is a company that they will always give the lion's share of their consumption to. So when Deepak is expanding into products which are downstream, we've specifically chosen products where India actually does not have a very large manufacturing base, so we are not competing with our customers. We got into specialty solvents specifically because no one else in India does. MIBK is a downstream of acetone. We commissioned that just very recently, yesterday, in fact. And we are already at a point where we're confident of having best in the world consumption norms. And it is our own acetone that is the feedstock. MIBK as well as MIBC, in line with the customer requirements, will immediately be able to go past 100% asset utilization as the demand picks up. So from our operations side, there is nothing which is holding us back. The feedstock is our own. And this integrated model will allow us to answer those questions about the kind of volatility that one might be considering in anything which is a quote unquote commodity play.
Malik, you'll have to hang on. Sorry, because I need to go across to my colleague Somit because State Bank of India numbers are out. Somit, over to you.
Come in right now, and what we are looking at, if you look at the net interest income, that has come in at close to 46,992 crore, and which is a growth of nearly 15%. Now this is slightly above what the street was anticipating at close to 46,214. The net profit has come in at 21,000, much ahead of what the street was anticipating at 19,000 crore rupees. Provisions have increased on a sequential basis at close to 76% to close to 5,047 crore. The GNPA number, that has come in at close to 1.47 as against 1.49 that we had seen in the previous quarter. NNPA stands at close to 0.38 versus 0.39, so nothing much of a change on that front. But yeah, a big beat at least on the NII front and the profit number, but significant concern when it comes to provisions that have increased by 76% on a sequential basis. The stock is gaining up around 2% on the back of a significant beat that we have seen on the NII front. 15% up on a YY basis. But let's get in Piyush with more details on SBI here. Piyush?
Yeah, that is right. Strong set of
Yeah, strong set of numbers, actually better than expected. The profit is up around 10 odd percent. According to estimates, it was supposed to be a degrowth YOY of 1%. NII growth is strong because the interest expense have actually grown at a slower pace than the interest earned. Interest income grew 8.5% and interest expense was up only 5.2%. The provisions, like Somit rightly mentioned, have risen quite sharply. If we see provisions are up 76 odd percent. Now, of course, we'll come back to you with the net interest margin numbers, which are not present as of now. But what will be crucial is, of course, the guidance on margin, further the amount of provisions that the bank has to make to comply with ECL norms, and of course, the amount of deposit it has garnered under the RBI FCNRB deposit scheme.
Right. So we'll be still waiting out for the net interest margin number. The slippage number that has come in, that is still awaited. So the press release will give us more details on that front. So far what we have is the net interest income, which is up nearly 15%. Net profit, it's a beat. The stock is up nearly 2.5%. GNPA. Now, Street was expecting this to be around 1.57, but it has come at close to 1.47. Let's welcome in Parag Thakur, the head fund manager with Fort Capital. Sir, what is your first look? What does the number look like? It seems like a beat that has come in on the NII and the profit number front, but increase in provision, is that a concern?
No. The increasing provision is not a concern. I think the numbers are looking great in terms of NII growth and profitability, all fronts. And that is why stock has also done very well in last 2-3 days, because this was widely anticipated also. But I would keenly wait for domestic NIM number and the global NIM number, which has not come yet. But asset quality, growth, everything looks absolutely fine.
Sir, if you look at the NII number, it has increased much more than what the Street was anticipating. As per you, what could be that alpha factor that would have aided SBI in this quarter? Anything that you could understand from here?
No, see, the low credit growth in the system was very good. So that was pointing towards that SBI being a largest lender, the credit growth would have been really good. YOY, it should be above 16%. The NIM number, we will have to see exactly. But it seems, from the look of it, that NIM has also bottomed out in the last quarter and has improved QOQ. That is the first feeling which I can get, but I'm not sure about the real domestic NIM and global NIM number yet.
As per you, sir, would be the good NIM number for SBI at this moment?
So I think 2.88% if they deliver on global side and domestic NIM 3%, that should be a good outcome.
Right. Well, thank you, sir. Thank you for joining us and giving us your perspectives on the perspective on SBI. So 2.88 on the domestic side, on the global side, and around 3% on the domestic side is the NIM number that would be good for SBI. The stock is up 3%, strong beat coming in on the NII and the net profit front. Still awaiting the net interest margin numbers and the slippage numbers. The slippages seem to be around 7,046 crore rupees. Now, this is yet to be disclosed. So, as per one analyst that I'm picking up, slippages seem to be around 7,046 crore. Is what I'm picking up here right now. But again, we are still awaiting the net interest margin number. If we could get someone from the Piyush or someone from this to give us more details on this. So yes, provisions stand at 5,000 crore as against 2,872 crore, and that's an increase of 75% on a Q1Q basis. Profit is up 10% at close to 21,000. Operating profit has also beaten the analyst street estimates. 30,000 crore was the expectation on the PPOP. And the operating profit has actually come in at close to 33,000 crores. So significant beat across all numbers is what we are picking up so far when it comes to SBI. Still, the net interest margin number is not out, but as per analysts, 2.88 on the global front and around 3% on the domestic front would be a good number. But let's get in Piyush to understand if there have been more details that have come out when it comes to SBI. So Piyush, anything on the net interest margin?
Amit, we are waiting for that number to come out, but like you rightly mentioned, slippages have risen to around 7,406 crore, which is slightly higher than anticipated, because in Q1 banks also see the seasonality effect in their agri portfolio. So this was flagged by analysts, and SBI has done that. Further, if we see the gross and net NPA ratio also have come down, if we see on a sequential basis, 1.47 in this quarter versus 1.49%, the GNPA ratio has come down. Net NPA ratio mostly is flat at around 0.38%. Essentially, the profit seems to have been driven by the strong growth in net interest income, like we mentioned earlier. And the key monitorable, of course, remains the margin number. We are, tracking this counter, and as soon as it's out, Amit, we'll have more details.
So slippage could be one of the concern. It's more than what the street was anticipating at 7,000 crore rupees, and we are seeing a sharp pullback on the stock as well. Not much, just some from 3% has come down to now 2.5% in trade. But yes, overall on all the other fronts, be it the operating profit, be it the net interest income, be it the net profit, the bank has beaten the street estimates. In fact, the GNPA and NNPA are also much better compared to what the street was anticipating. So yes, a good set of numbers on all fronts, but slippages is one concern, and net interest margin is a number that we are still awaiting and we need to watch out for. Well, that's all we have on this edition of Small Cap. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next few minutes, we will start taking all your stock-related queries as well. So it's been an interesting session this as well, and you can see the big numbers that have come through right now. And SBI is definitely the one that I'm talking about. The index is around 70 points down as well, but SBI, you saw that a sharp uptake of 3% on the back of earnings. You've just gotten the press release that has come through as well. The domestic NIM number has come in at 3%, which is up 7 basis points compared to Q4 of FY26. The whole bank NIM has also come in at 2.86% versus, and has improved actually by 5 basis points compared to last quarter. So net profit at 121 crores continues to be a good number that has come through. And NPAs, both the gross as well as the net NPAs, have gone down, and hence you're seeing that stock react positively at this point of time as well. Now, of course, we will be cutting into the press conference for the company. That'll be in the next 15 minutes. So we will take your stock-related queries now, as well as the rapid-fire session also early on, to address as many queries as we can. So right now is the time to pick up your phone, send in your WhatsApp-related queries, as well as call us for those stock-related queries as well. But we spoke about the Nifty. Let's also look at the heat map also very quickly for the Nifty 50 as well, because Bajaj Finance as well as Shriram Finance were a couple of names that were dragging the Nifty down today, led by those new regulations that could come through, and hence Bajaj Finance now down 5.5%. You also have the twin Bajaj Finserv down 4.07%, and Trent has given up some of its gains that came through before the earnings for this particular counter. ICICI Bank and Jio Finance are some of the other losers today. So the banking and the financial pack definitely taking it on its chin. But it's SBI. SBI is up 3.5%. It's now the biggest gainer on the Nifty 52, and single-handedly getting the banking names back in focus. Sectoral heat map also very quickly. You'll see the PSU banking index up and about because of SBI as well, while we see the other constituents also. So Nifty Auto is up 1.7% as well. Private bank down almost 1%. Finance, of course, we just spoke about it. What could be for one of those factors as well. Let's look at the PSU banking index as well as its constituents also very quickly as well. Now up the second biggest gainer in terms of sectors, 1.5%. But let's look at the contributors very quickly before we move on to your stock-related queries as well. So SBI up 3.5%, Indian Bank, UBI, which is of course Union Bank of India, and Canara Bank all up right now. Index is up of 128 odd points. But the advanced decline ratio is the other one. And before we start taking your stock-related queries as well, because it's been a market where this week we've had a lot more neck and neck in terms of moves, and today is also one of those days where the advance is just slightly below the declines at this point of time. But let's start with our stock-related queries. Ruchit Jain, Vice President, Equity Technical Research at Motilal Oswal Financial Services, and Lancelot Dicuna, the CIO of ValueX Wealth Connect LLP, now joining in. Gentlemen, both of you, thanks so much for joining in. Lancelot, a quick view on the SBI numbers. How did you look at, I know it just came around just about 10 minutes back, but a quick view on the NIMs, the slippage number also at 7359 is what it has come at. But how are you looking at the numbers?
More or less in line with expectations.
No really major surprises there. And I think if you look at the outlook going forward, we should see, some improvement in the overall scenario because, as the global uncertainty sort of gets reduced and we start to see some improvement, hopefully, in the rainfall situation that we had, leading to an improvement in agriculture, I think we should be able to see overall the economy improving, and State Bank is like a bellwether of improvement in the economy because it is the largest lender and touches almost every sector in terms of its financing.
Got it. Well, let's go across and take the questions now. This one's coming in from Shankar from Bengaluru, and it's on Sterling and Wilson. Now, he wants to know, he's been holding these shares at 230. So currently, the stock's been neck and neck there, only down 200 at 204 now. Ruchit, a very good afternoon to you. How are you looking at Sterling and Wilson? Would you recommend him to continue holding? And his question being, if it's the right time to average down?
Yeah, hi, very good afternoon. Well, if you look at the broader trend of the stock, it has not been much positive in the recent past as well. It has been a relative underperformer, and the pullback moves were there in between, but we are not witnessing a continuation of that uptrend in the stock. So I believe that there are many other better opportunities in the market which can do relatively better than the stock. So definitely not to average. In case if you are continue to holding, then the 180 is the support where you should keep your stop loss. But any pullback moves, if you get in between, I would advise to take an exit on pullback moves and shift to some other names.
Shift to some other names. Got it. Well, the next question, and this one's from Malik Arjuna. He wants to know about Bank of India. We were just talking about the PSU banking index too. Lancelot, he is holding shares at 109. Wants to know if he should continue to hold. Sitting on some decent gains, should he ride the wave, Lancelot?
So I think if you're looking at momentum, then probably if that's the way to look at it, yes, one can enjoy a little bit of the upside momentum. But if you're looking at valuations, I think the stock is traditionally traded at about 1 time its book value, and it's actually below that valuation at the moment. So one can look at maybe accumulating the stock if one is a long-term investor.
Got that view, Lancelot. Also, Lancelot, just sticking with you because Rajesh, who's from Hyderabad, wanted to enter either Hero or Sona BLW, either of those counters for the long term. We had the results actually come in for Hero as well. The commentary as well as the scooter capacity has ramped up meaningfully. They've still maintained that 14 to 16% margin range, Lancelot. Do you like that particular counter, or would you prefer Sona BLW?
So I think, if you look at, while they are both in the sense based on the automotive industry, Sona BLW provides precision forgings for the automotive industry. And Hero Moto obviously is the two-wheeler, market leader in that space. But if you look at the quarterly numbers, I think Sona has come out with good results this quarter. And there has been an improvement in their operating profit margins, as well as we are seeing some volume growth coming in. So I think from a longer term perspective, valuations for Sona are similar to that as Hero Moto. But if you are looking at choosing one of the two, probably Sona BLW would be a better option at this point in time.
Got it. Sona BLW, a better option there. The next one, and this one is coming in on HBL Engineering. Someone who's from Kolkata wants to know a 3 to 6 month view, Ruchit. She's bought shares at 735. Asking what she should do with this counter and if she can buy more. Is this the price to do that?
I would advise to average, because even though the broader markets have done well since last 3 to 4 months, we have not seen that kind of trended phase coming in the name. On pullback moves, the stock has very significant resistance around 830, 850, which it is not able to surpass. And even if you look at the volumes in the pullback move, they are not that high. Secondly, the stock is trading below all its key moving averages. So upside seems to be limited here on. Do not average more. In fact, on current holdings also, if you get no minor pullback moves, take an exit from this.
Take an exit, got it. Next one's from Tilaknagar Industries, and this counter is in focus as Anil Nair has bought the shares at almost 490 and mentioning that it's been almost a year since been holding, but not too many gains or any sort of gains that he's seeing right now. Lancelot, question being, would he for what he's asking, if he should square off his positions or continue to hold?
On Tilak Nagar Industries?
Yes.
Well, I would think that, at this point in time, it's better to square off the positions and probably wait for a correction. And when the valuations become a little bit more attractive, then one can look at adding, if you want to hold on to that industry, then one can look at adding it at a lower value.
Got it. The next one coming through, and this one is on MCX. Prakash, who wants to enter this counter now, is asking a price range, Rujat. He's been tracking the counter. He's saying that it's been going down, and I think that's the trajectory, that from 2,900 all the way down to 2,646 now. What's a price range according to you that he can choose to enter at?
The major support for the stock is 200 EMA, which is around 2,500 kind of level. If you look at the entire uptrend which the stock has seen since April 2025 in last 1 year and 3 months, not even once the stock has breached its 200 EMA. So 2,500 seems to be a good support for the stock. I think rather than buying exactly at that level, you can strategize to buy some quantity at current levels, and if you get dip around those supports, then go ahead more over there.
Got that view. We have a caller from Mysuru now, Mohan, who is a regular viewer of the show, dialing in again. Mohan, okay, we seem to have lost this connection, but on Neogen Chemicals, there's this question. He's holding 5 shares at 1105. So he's sitting on substantial gains, Lancelot. Should he book out now or continue to hold?
Yeah, at the moment, the stock is valued very expensively. It's about trading at 156 times. It's trading at 156 times its earnings. But if you look at, this chemical industry is actually turning around, and we've seen the quarterly numbers of most of the chemical companies show some improvement. But given that he is sitting on a good gains, I think it's better to book profits.
The next one coming through, and this one's on Samvardhana Motherson. Kunar, who's from Chennai, wants to enter the counter. Stock's up almost 8%. We'll put the stock under spotlight in the next show. But Rujit, how are you looking at this? Because there seems to be definitely a breakout coming through on the back of earnings. Should he jump on this bandwagon? What would be your opinion?
So yes, technically the stock is looking good. The high top, high bottom structure, previous swing has breakout there too with very good volumes. Suppose the numbers, if you look at the volumes, then along with the price up moves, they are too good compared to its daily average, which clearly indicates that even at current levels, there's a good buying interest in the stock. So yes, you can go long at current levels, keep some room to average that in case if it shows any kind of minor dips at low levels, you can add more. And the stock has potential to rally towards 190 to 200 range, in the next couple of months.
Got it. The next one, and this one's from Ishwar, who's from Kolkata, wants to know between Coforge or TCS, and we've had this question all through the month of June when all of these earnings came through. But Lancelot, his question being if it's the right decision to invest in the IT sector now, and if those two picks are the correct ones, how are you looking at it?
So I think, definitely it's an option to look at investing in the IT sector at this point in time. Yes, we have seen a little bit of a rebound as far as the lows are concerned, but one may also see that it may take a while before the earnings growth comes in for the IT sector. And also it's appearing to be quite clear that the smaller companies are able to adapt or turn around their business models a little faster than the large cap companies. So I would say that, going with Coforge may be a better option than TCS, because being a smaller entity and, it is more nimble, it's already shown some success on the AI-based delivery modules, and that should help, when the traction grows, it will probably give you higher returns as compared to investing in TCS, which is large and well diversified across various geographies and would need a lot more time to turn around its operations.
Let's go across to Pune now to take a very quick call from Aniket. Aniket, good afternoon. What's your query?
I have a query on Godfrey Phillips. So I'm a long-term investor. Is this good time to enter into this counter or any other counter in this space?
Well, Lancelot, let me come to you then, because the cigarette regulations and that tax that has come through has taken the sheen out of Godfrey, ITC, all of those. Would you still recommend to enter now, or should you look at maybe ITC, which also has the FMCG play?
I think, if you look at valuations, Godfrey Phillips is trading at almost 26 times earnings. And if you consider that, the quarterly numbers also were impacted with a reduction in the operating profit, mainly because of the drop in volumes, as well as the margins got impacted because of higher taxes. And so I would think that it's better to look at exiting from here, whether one wants to get into the same sector. If one is looking at investing in the same sector, then obviously ITC might offer a greater, diversification, and that would be a better option if you're looking at same sector. Otherwise, at least one can exit from this sector and look at other upcoming sectors.
Well, let's now start the rapid fire round, and thanks so much for your view, Lancelot. Ruchit is Lancelot, you know the drill. First one's from E. Venkatraman. Ruchit, on Uniparts India, he's bought these shares at 377, so trading at substantial gains. Should he book out now and take that profit home?
I think partial profit booking should be a good idea. Hold rest of the positions with surplus below 7.
Aegis Logistics is the next one. Shrikant from Bengaluru has looked at the results, Lancelot, says it's good results, and the stock's also reacting as well. What's your view? And results came this week. How are you looking at it?
I think one can continue to hold investment here, and maybe if it drops another 4-5%, would be an opportunity to add.
Okay. The next one is at Karnataka Bank. A viewer has bought shares at 168. Ruchit wants to know if he should still continue to hold.
The overall trend is still positive until you see any kind of trend reversal signs. Can ride this trend. 290 is the immediate support.
Got it. Next one's on India Shelter Finance Corporation. Ruchit, Akshay wants to know a quick view. He's bought at 760. It's a stock we haven't discussed too much, Ruchit, but what's your view?
I would recommend to exit. The trend is weak.
Satyan from Palakkad, he's bought it. He's bought Samvardhana Mothers. I think we took the technical view, but with Lancelot, your view as well. He's bought at 81. Can hold for the next 2 years. Should he do so?
Yes, I think he should hold on for the next 2 years.
Crompton Greaves as well. Lancelot, Abhijit bought at 293. Results came through today. Asking a long-term view on the counter.
So I think one can, maybe look at holding on to the stock if you're already invested. But if you aren't invested, then you need to wait for a while to make a additional entry.
Correct. Ramesh from Chennai is holding on to NHPC, Ruchit. He's bought it at 80 and asking what should he do with the counter. Stock's broken that level, but what's your view now?
So should look to exit on pullback moves. Overall, the stock has been a long position, so don't look for long.
Got it. Next one's coming through from Pawan from Bengaluru. He's holding on to Coal India, but at 135. So Lancelot, he has been holding for a while. Asking what he should do for the long term. Is it better to buy more shares now, or should he just continue to hold his existing ones?
Well, I think you should just continue to hold the existing ones, and maybe if there's a rally, you can look at even exiting from the existing.
Bala Subramaniam wants to enter Apollo Microsystem, Ruchit, for the next 6 to 9 months. There's been a long wave of run-up that's happened already, but what's your view now?
You can buy here with surplus below 360.
Next one is on Reddington. A viewer wants to enter this counter now for the long term. Lancelot, yet again, we've seen already a big move happen. Should he jump now?
No, avoid.
Last one and next one actually coming through on Balaji Ameen's. A viewer wants to know, he's bought Ruchit, these shares at 2112 and wants a short-term target of this counter.
Expect some consolidation with 2400 being on the higher side and 1900 being a support.
Got it. That was actually the last question of the rapid fire, but we'll take a very short break, come back and take stock of things and yet again I think we'll just check on the SBI presser as well, but come back for a lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
द मस्टर्ड स्पेशलिस्ट सिंस 1933, बरसों से सरसों। कुछ तो बात है इस दिल में।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform. Digital first. Virality.
Without a hook, no way. The message is clear.
It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaign.
Welcome back. You're watching Ask Profit. But let's go across and take the next question. This one's coming in on Shelly Engineering. Our viewer has bought these shares at almost 2,500 rupees per share. So let's pull up the counter. And Lancelot, his question being what he should do with his 1,300 shares now. I mean, he's sitting on decent gains. Should he book partially? What's your view, Lancelot?
Well, I think you should book partially because, you know, if you look at the valuations, they're looking at a little bit, they're a little bit expensive, or they're fully pricing in all the upside. So one should look at booking profits at this point in time.
The next one coming in, and this one from Kutubuddin, he wants to know about Sagility, Lancelot. And, you know, we've seen actually the Q1 results come through and pass by, but not too much of a move that we've seen on Sagility. You spoke about the IT pack previously, Lancelot, but what's your view on the counter now?
So I think if you've been looking at, Sagility, the operating profit has been relatively stable at about, 22%. But the stock is still, trading at little P, which is on the higher side. And there is some, confusion, or there is some apprehension about how their business model will get impacted when AI starts to play in. And that is something that is still unknown. So to factor that unknown looks a little bit expensive at this point in time, or one should be a little careful when investing in under these circumstances.
Also, Lancelot, on Z Entertainment as well, and Sadashiv has been actually asking this question. He holds 8,000 odd shares, 8,700 shares of this counter, but at 128. He's asking, after the SEBI order that has come through on promoters, what is the future prospects? Would you advise him to just exit at the next pullback because of the uncertainty on the stock now?
See, Z's business model requires it to put in a huge amount of cash into various production of serials and movies, etc., which is feeding into their streaming platform. So from a cash flow perspective, they desperately need large infusion of cash to sustain their operations going forward. And because of the SEBI order, the promoters cannot put in that cash at this point in time, and they're unable to raise that money from the market because they'll have to do a significant dilution. And that is unlikely to happen. So I think it would be best to look at exiting, in any kind of pullback, because the company is stuck into a very difficult situation, not able to generate cash for its operations, and is and because of the legal issues is stuck in that sense.
Got you. And hopefully, Sadashiv, that answers your question. A tricky situation, most certainly. But Lancelot, we leave it at that. Thanks so much for joining in and giving us your views on SBI, of course, as well as the other key stocks that we tracked today. But viewers, out of time, India Market Close comes up next. We'll, of course, keep an eye on the presser and get you all the keys updates. But stay tuned, a lot more action.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from fact.
Hi, thanks so much for joining in. Happy Friday to you. My name is Alex Matthew. With me is Mahima Vashtrajani. We're coming to you live from the NDTV Profit Suzlon studio, and this is India Market Close. Long-winded introduction, but let's take a look at how the markets are this afternoon. We're at the low point of the day for the benchmark Nifty 50, but we've traded in a pretty narrow band, all things considered, at 24,539. And I think we've shuttled within a pretty narrow band almost through the entire week so far, right,
Yes.
Mahima? The broader markets, of course, are a different story. Today, they seem to be in a little bit of a consolidative mood. Just about 0.1% higher, or 0.2% higher for the mid-cap index, and the small-cap index just about 0.1%. Here too, the range has been pretty narrow. Take a look at the advanced decline ratio first, and then we'll jump into the heat map for the Nifty 50. It's been chop and churn through the session. So you've had various attempts over the course of the day for the bears to take a little bit of a foothold, and now you have a little bit of a gap between the advances
This
and
is where
declines.
things have changed essentially, and the bears have taken over. But the Nifty 50 heat map, SBI topping that chart, of course, on the back of its Q1 numbers. So NIMs have been better than what the street was expecting. And though the slippage, amount was slightly higher, the ratio has seen an improvement, and on the back of that, in fact, the presser will start soon, and we'll also try to understand as to what the management is also trying to tell. But SBI topping that chart, followed by TCS, Infosys, a lot of IT names back in action today, doing very well. Even auto names are doing fairly well. You have M&M topping that chart. Grasim is that one stock that's waiting. Probably the earnings are expected to be better, and that's why we've seen good gains coming in on this one. But couple of consumption names also doing well. Something like an HUL also in the green. But on the flip side, both the Bajaj twins on the back of the new RBI norms. Though Jeffries has come out and said that for Bajaj Finance, the impact on PAT might be just around 1 to 1.5%. So the market is overpricing this, and
So
hence
the norms, of course,
in.
that you're talking about, Mahima, just so that everyone is on the same page, they're norms that came through on revolving credit and
Correct.
certain restrictions with regard to that, and that is seen as negative for Bajaj Finance. Maybe a bit of an overreaction, also because of the way that Bajaj Finance has done in the recent past. After its results, the stock gained quite considerably. So pull up the 1 month chart for Bajaj Finance, and you'll see what we're talking about. It's a little bit shaved off, actually quite a bit shaved off the top. Now 1 month gains of just about 3%. But you see this gain post the numbers that came through. It's profit taking that has pushed it to where it is right now. Also, I want to talk about the intraday chart for a couple of stocks. So one, State Bank of India, of course, stands out because after the results, there was a very sharp reaction upwards and it settled at 3% higher. You'll hear from the management about the outlook for FY27. And more important than anything else, I think, Mahima, is if Chairman C.S. Setty says that the NIMs have bottomed out at these levels, because that, if anything, would be a very strong signal to the market. And Grasim is something that you were talking about. It's actually bounced up, or rather gained quite considerably. Pull up Grasim if we can, as much as 3% from the low point of the day. And that has come pretty suddenly towards the latter half of the session today.
And you know what, probably one of the reasons of this could be that in the earnings, Birla Opus is what is going to steal the show, and because we've seen paints come out with good earnings, for say Asian Paints, Berger Paints, all of them have done very well, and probably Birla Opus has also done well, and that's why probably there's buying coming in for this one. But I think the BSE 500 quickly, if we can pull that also up and see, because yet another day of where there is earnings action throughout, right? You have something like a Crompton which is down 6.5%.
Surprisingly so.
Surprisingly so. I think the management said that there are some supply chain constraints, and probably that's why the street is punishing it. But there's also eClerks, which is down 5.8%. There's also Ratnamani Metals, which is taking a knock of 8%. But on the flip side, you have names, the two QSR names that stand out for me. In fact, three of them, right? There's Sapphire, Devyani, both doing very well, and Restaurant Brands has continued to do well, right?
But there's no real trigger for these, right?
Not really. Devyani, the numbers were decent. Restaurant Brands, of course, hit it out of the park. But Sapphire, no reason per se, but we'll have to wait and watch out for as to how the earnings pan out for this one.
Samil or Samvardhana Motherson has done incredibly well. It's up about 10%. One of the contenders for stock of the day. There's also Siemens Energy, which is not in this list, which has done incredibly well. There are a couple of other stocks beyond this as well that are doing incredibly well. This is Siemens Energy, by the way, reacting to numbers. We're waiting to hear from the management of State Bank of India, and we will likely have to cut across very quickly to Mr. C.S. Setty, who's going to start talking in just a bit. But before he does start talking, let me go across to our guest today. We've got Jay Bala joining in, And Jay, I just want to check with you, and also, of course, Vijay Chopra. Gentlemen, thanks so much for taking the time, and good morning, good afternoon to the both of you. Jay, I'll come to you on the charts, right? We've seen a consolidative move in the recent past. What would you say with regard to the benchmark, and then Bank Nifty and specifically State Bank of India, where it's building on yesterday's gains?
Yeah, that's right. See, Nifty, first the Nifty. Nifty, it's cleared the July high of May high of 24,602, and that's a bullish signal. And that's first.
I'm gonna have to come back to you on that because the chairman of SBI started talking. Let's listen into what he had to say. Okay, we seem to be having a little bit of an issue with the audio from the press conference. While we get that fixed, Jay, you were making your point. Apologies in advance if I have to interrupt you.
Yeah, no worries. Yeah, see, the Nifty is first has higher high after the Iran war, so that's a bullish signal, and this is what we've been anticipating for several weeks now. And the Nifty in the very short term could pull back closer to 24,100, and then we are looking for a powerful move ahead. And I'm expecting Nifty to accelerate higher to record highs, probably by end of August or probably early September.
What about the Bank Nifty and specifically State Bank of India?
See, the Bank Nifty has been outperformer to the Nifty, and what the higher highs that we are talking about on the Nifty happened for the banking index much earlier. And SBI in particular has been more powerful than any of the private sector banks. And I'm anticipating SBI to clock fresh all-time highs past 1250.
And what are the stocks that you're watching out for today that you'll be probably, buying and waiting and watching for the weekend to go by?
Yeah, more than for today, Mahima. I'm concentrating on these stocks for the next few weeks. The first one is Ashok Leyland, and it's breaking out of a short-term price consolidation. I'm anticipating this stock to scale something like 250 from its current level of 177, a stop loss at about 147. The second stock is PG Electric. PG Electric is breaking out of an inverse head and shoulders pattern, and I'm anticipating it to scale at least 800 if not record highs. So from current levels of about 600 odds, we need to keep stop loss at about 516 and anticipate 800.
Okay, Vijay, good afternoon to you. And what did you make of State Bank of India? Because that really is the large cap stock that is catching everybody's attention right now.
Well, I believe that it is well placed to have a run up close to about 100 200 rupees from here. Fantastic technical setup as well as fundamental setup, the largest bank. And I think the results also seemingly should be in line with the market expectations. So I'm very happy with the way SBI is panning out. Apart from SBI, there are other public sector banks which are looking good as well. So I think the entire public sector banking pack is looking very good on the charts as well as fundamentals as well. And we were fearing that the monsoon would be very bad this year.
Vijay, apologies, I'm going to have to cut you off because let's both listen in to what the management of SBI has to say, and then we'll come back to that.
The quarter, we introduced YONO G, an agentic AI-powered virtual assistant on YONO Business to provide our commercial clientele with round-the-clock support. We also expanded WhatsApp banking services to our current account customers and strengthened the digital capabilities of YONO Business by integrating our trade finance suite, including the use of artificial intelligence in trade finance operations. Our efforts to improve credit delivery is a continuous journey. We have extended our business rule engine, MSME Dream, to cover SME loans up to 10 crore rupees, enabling faster and more consistent credit decisions without compromising underwriting standards. In agriculture, we have expanded digital document execution across the nation for Kisan credit card and Agri Gold loans, thereby reducing turnaround time and improving customer convenience. Technology is equally transforming the way we manage risk through Project Prism, our predictive stress monitoring platform. We are leveraging internal and external sources to identify early signs of stress in borrower accounts. This strengthens our ability to take timely corrective action. Our objective is to remain proactive in preserving asset quality. Collectively, these initiatives are helping us build a future-ready institution. Coming now to our key numbers, I am pleased to share that our net profit for the quarter stood 21,121 crore rupees, registering a year-on-year growth of 10.23%. Our operating profit increased by 9.77% to 33,529 crore rupees. Return on assets remained healthy at 1.11%, while return on equity stood at 17.87%, comfortably above our long-term guidance for the last 16 quarters. Our operating efficiency also continued to improve during this quarter. Operating expenses remained well contained, leading to further improvement in our cost-to-income ratio. Our domestic net interest margin improved sequentially, reinforcing our confidence in maintaining our guidance of 3% for the financial year. Our balance sheet continues to expand on the strength of customer confidence. During the quarter, our total business crossed 110 trillion rupees, with deposits exceeding 60 trillion rupees and advances crossing 50 trillion rupees. Our domestic business has grown by more than 11.6 trillion rupees on a year-on-year basis, while our overall balance sheet has crossed 76.6 trillion rupees. Deposit mobilization remained healthy in an intensely competitive environment. Total deposits registered strong growth of 9.73% year-on-year, supported by robust growth in retail term deposits as well as savings bank deposits. Our CASA franchise continues to remain among the strongest in the banking industry, reflecting the enduring trust that customers place in SBI. Our overseas operations recorded healthy growth in deposits. Credit growth remained broad-based across all major business segments. Agriculture, MSME, corporate, and retail advances all recorded double-digit growth, while our RAM portfolio continued its steady expansion with a year-on-year growth of 18.2%. Our overseas operations delivered healthy growth in advances, having grown at 21.38% in rupee terms, underlining the diversified nature of our franchise. One of the most satisfying aspects of our performance continues to be the sustained improvement in asset quality. Our gross NPA ratio has declined further to 1.47% and is now at its lowest level in more than 2 decades. Net NPA at 0.38% and credit costs at 0.27% have also improved, reflecting disciplined underwriting, effective recovery mechanisms, and continuous strengthening of our risk management processes. Our provision coverage ratio at 74.2% remains robust, providing additional resilience to the balance sheet. The bank also continues to remain well capitalized with capital adequacy and CET1 ratios comfortably above regulatory requirements. This provides us with sufficient headroom to support future credit growth while maintaining a strong capital position. Digital transformation continues to be one of the defining strengths of SBI. Today, the overwhelming majority of customer transactions, almost 99%, are conducted through alternate channels. The revamped YONO platform continues to witness strong customer adoption, with 64% of new saving accounts now being opened on the YONO platform. As customer expectations evolve, we remain committed to delivering a banking experience that is secure, seamless, and accessible across every channel. Our subsidiaries have continued to perform strongly and remain leaders in their respective sectors. During the quarter, the successful listing of SBI Funds Management Limited marked an important milestone for the SBI Group and reinforced the value that our subsidiary businesses continue to create for all stakeholders. If there is one message that I would like to leave with all of you today, it is that SBI is building not only for the next quarter, but for the next decade. As we progress towards our 75th anniversary in 2030, our focus is on creating the SBI of the future. We will continue to strengthen our deposit franchise, deepen customer relationships, continue to build skilled and high-quality workforce, accelerate digital transformation, leverage artificial intelligence responsibly, maintain the highest standards of risk management, and support every segment of the Indian economy with the scale and commitment that have always defined SBI while creating sustainable value for all our stakeholders. Thank you very much and Jai Hind. My colleagues and I will now be happy to take your questions.
Thank you, Chairman. Okay, all right. Hindalco is the other stock that we should be marking, and pull up the chart, the intraday chart for Hindalco, because the numbers are at the bottom of the screen as we speak, and this is a first reaction. Of course, there's a fair bit of volatility as we speak. A few of those numbers stand out. The net profit has come in ahead of expectations. Margins coming at 16.4% compared with an estimate of 12.7%, and so therefore the EBITDA is also ahead of expectations. Now this was expected to take place because the aluminium commodity itself has performed exceedingly well. Mahima, you know what I can see from here?
Yeah.
From the P&L of the consolidated entity is that the change of inventories or change in inventories, the positive charge on account of that is quite considerable. 6,881 crore rupees compared with 3,976 in the previous quarter.
Yeah, you know, the other interesting part is with regards to this exceptional loss that they've talked about in the notes, because PAT has seen a growth of almost 75% YOY basis, but there's an exceptional loss of 2,300 odd crore, which was on account of the Oswego fire, which was, I think, in Novelis, if I'm not wrong. So if that had not happened, the PAT would have been even higher by around 2,300 odd crore. But let's try to pull up the stock and see.
Yeah, we should pull up the stock, and we've also got Parth joining in with a first cut on what he sees from the numbers. Parth, so initial read is that it's a bit of a miss on the revenue front. Okay, he'll be joining us very soon, but 84,825 crore rupees is where the consolidated revenue stands. The expectation was for a number of over 86,000 crore rupees, and so to that extent it's a little bit of a miss, but the PAT number is considerably ahead of expectations. The EBITDA number is considerably ahead of expectations as well. Parth is joining in to talk about some of this. Parth, seemingly an inventory advantage that they have gotten, but an improvement in the margins is visible as well, and there's a one-time exceptional item here. What can you tell us about your first reading of the numbers?
That's right, Alex, and that one-time exceptional gain, that is because of the Oswego fire that we saw. The insurance proceeds have come in. If we start with the highlights, then Novelis had reported numbers of a few days ago where EBITDA saw a growth of 24% year-on-year with beating estimates. In those numbers, Novelis had mentioned that because of the Oswego fire insurance proceeds, they had a benefit of $18 million, and that is what has helped the numbers of Hindalco as well. If we talk about the numbers of Hindalco, then revenue has came in at 84,825 crores, which is almost in line with the estimates of 86,000 odd crores. But in EBITDA, we have seen a big beat. We have seen almost 13,932 crores versus estimate of 11,000 crores, and that is because of that one-time gain of 2,299 crores, mainly because of the fire insurance proceeds that have been received by Novelis during the quarter. Also, EBITDA margin came in at 16.42% versus estimate of 12.7%, and PAT also came in at 7,000 odd crores versus estimate of 5,600 crores. Again, aided by that one-time benefit that Hindalco has seen. Now, the key things to watch going forward will be guidance on the aluminum cost of production and coal availability as well, because the top line has also been influenced by the higher aluminum prices that we have seen during the quarter. In fact, the aluminum prices were up 12% quarter on quarter, so that's why we have seen that top line growth as well. And also another commentary on the Indian expansion, capex guidance and copper segment will be awaited by the management on the call today.
Right, got it. All right, Parth, thanks so much for that. By the way, exceptional loss, not exceptional gain of, what was the number? 2,299 crore rupees on account of the Oswego plant. And if not for that, the number would have been higher. It would have stood at about 11,700 crore rupees or thereabouts. So considerable beat on the bottom line, and that's why the stock is at the high point of the day at 1.2%. But that is not the stock of the day. The stock of the day, in fact, is Siemens Energy. It's been buzzing since this morning. It is up as much as 14.2%. It's at the high point of the day. And Varsha is joining in to tell you about why the street is so excited about the numbers. Varsha, good afternoon. What stands out about Siemens?
Well, overall a very good set of numbers when it comes to Siemens Energy, which is Q3 SY 2026. Remember, they follow September year. Now, talking about the numbers, stellar quarter across the board when it comes to power transmission and of course, your power generation business as well. Now, if you see the margins came in well above expectations. There was a higher contribution when it comes to exports, and project execution also supported profits and margins for the company. Stronger operations, lower interest cost also boosted profit. Now, talking about the numbers, overall revenues were up almost 40%. EBITDA, if you see, was considerable higher at almost 72%. Margins came out at 23.6% versus 19% last year. And there was this even profit, if you see, was up almost 68%. Talking about, let's deep dive into each of their segment. Talking about the power transmission, which was the biggest growth driver over here. If you see, revenues surged almost 42% year on year. EBITDA margin, if you see, moved to 22% versus 19% last year. So good spike over here. They also saw faster execution when it comes to the transmission projects and robust demand of grid infrastructure. Also, there was a good export growth also when it comes to power transmission. Talking about power generation over here, the big surprise was margins. So revenue though increased, if you see, 36% when it comes to power generation, but EBIT margin, if you see, jumped 22% versus 16% last year. What helped? One is of course better service mix. Then you have strong demand for steam turbines, and of course improved execution has led to this great numbers. Talking about export, this was a silent margin driver, I would say. Export contribution rose to 29% of revenue, and up almost 700 basis points versus last year. And the impact of good exports, if you see, was company has seen better margins. They've seen improved product mix and also stronger operating leverage. Talking about the order book, the order backlog reached at around 19,300 crore, which is up almost 16% year on year, which is equivalent to roughly 2.5 times of their annual sales. New orders, if you see, stood at around 3,380 odd crore, and this also provides revenue visibility for the coming quarters. Lastly, what to watch going forward? Of course, the timely execution of 19,330 crore backlog and ramp up of their transformer and switch gear capacity. Of course, margin sustainability, we might want to look into, are these margins sustainable as industry capacity increases? And lastly, nuclear ordering pipeline are some of the key things that an investor should watch out.
Okay, Varsha, thank you so much for getting us those details on Siemens Energy. Definitely, the worthy of candidate in terms of the stock of the day, because the stock is up almost over 13% in fact. But Nazara Technologies is the other one that is in focus. Let's try to pull the stock up and see as to what it's doing. A lot of things happening, right? There's also a fundraise that they've done. There's also Q1 numbers that we're going to talk about. To take this conversation ahead, we're now joined by Nitish, who's the joint MD and CEO of Nazara Technologies, joining us now. Nitish, a very good afternoon to you, and thank you so much for taking up the time. I'll start by asking with regards to your margins, because QOQ, the margins have been pretty much under pressure. QOQ, they've declined to 10.8%, and this is, I think, on account of the user acquisition costs that have gone up. Till what time do you think that these costs will going up, and till what time do you think these margins will be under pressure, and what is the FY27 guidance that you have for margins?
Sure. So to understand our margin profile better, our blended margins, as you rightly said, are around 10% odd. But if you focus on our core gaming business, it is delivering about 19% or 19.2% margin in Q1. And the margins being under pressure right now is actually a good news for us because our core gaming IPs are firing very well. Our popular IPs such as Kidopia, Animal Jam are all growing. Kidopia grew, for example, 14% year on year and is picking up in terms of the momentum. So we are able to spend money profitably to acquire more users, and therefore we are stepping on the accelerator. So I think as long as we can keep seeing strong growth, which is profitable growth, we will keep accelerating the user acquisition spends. I think next quarter or so, you would still again see a similar margin profile, but eventually this will translate into much higher margins.
With regards to the fundraise then, Nitish, because you want to, and in fact you've gone and announced the 100% ownership of both Blue Tile and Best Play. Wanted to get more sense as to the fundraise that you're doing for around 735 crore for both of this for acquiring 100%. What should investors think of in terms of where synergies stand, and secondly, in terms of what is the kind of revenue and bottom line addition that these acquisitions are going to make to your overall top line and bottom line?
I believe the acquisition of Blue Tile by Nazara is a milestone acquisition by the gaming industry in India, which is now proving that it can go out and acquire really high standard, high quality gaming companies anywhere in the world. It's also a marker of how Nazara is now emerging as a global gaming platform and not just an Indian gaming company. So I think the Blue Tile acquisition, which is almost 3,000 crore rupees, the company in the quarter one, the Blue Tile and Best Play company that we have acquired generated 518 crores of revenue in Q1 with an EBIT of 55 crores. So it's going to be generating over 2,000 crores annually for us, almost or over doubles our revenue. So I think it's a very exciting space for us. The reason we've issued the fund for the preferential issue is for two reasons. One is obviously we need to raise some capital to fund this entire transaction, and this is partly going to be used for that. But also, more importantly, this preferential issue is, subscribed by the CEO and founder of Blue Tile and Best Play as well as their team, which is also a great conviction of their belief in Nazara.
In fact, Nitish, good afternoon, Alex here. That's what I want to ask you about. Because Raymond Stauffer coming through as a new Chief Executive Officer of Nazara, what will change and what will stay the same, in your opinion, with you now staying on as Managing Director? And of course, you will have that oversight, and I'm sure that you will stay very, very close to the functioning of the company. So give us a sense of how functionally things will change, and directionally from the top and from the corner office, what changes?
Yeah. Sure. So first of all, for Nazara, it's having this structure of a MD and a CEO. It has been done earlier for 7 years when we had our CEO Manish working with me. And with Raymond, we were really impressed. We spent 14, 15 months negotiating this transaction, spending time with him, spending time with his team, seeing what they are doing. And we realized that outside of Blue Tile, there's a lot of value that they can bring to the rest of the Nazara's gaming IPs and studios. They are particularly extremely focused and competent on AI-driven technologies, which can be a big booster for what we do. And therefore, we thought that the best way to align this is to bring Raymond as the CEO of the group versus remain confined as a CEO of Blue Tile. Took us a few months to get this across the line, but I'm very happy and excited that it has happened. My own focus as MD is going to continue on the strategy, long-term vision, managing global relations for the company. But Raymond is going to be quite empowered to grow the organic business aggressively in the next few quarters. I think implement AI across the studios in an effective manner. I think still forming those priorities, but I think you will see aggressive execution happening.
We look forward to we look forward to speaking to both of you really soon, and wish you all the best in the transition that you have going forward, and indeed for Nazara for the rest of FY27.
Super. Thank you. Take care.
All right. Let's head across to my colleague Somit Sarkar, who is bringing you everything that he's hearing from the dealing rooms. And very interesting. Somit, SBI has come off the high point of the day. It clawed back some of those losses earlier, but it's now trading with gains of 1%. You had heard that those margins would come through where they did. And so this, in a sense, is khabar confirmed. Domestic NIMs at 3%, it looked good. What else are you hearing? Well, a lot of other stocks that continue to remain in focus. Firstly, when it comes to exchanges, BSE and MCX. A pair trade is what dealing rooms are indicating their clients. They're asking their clients to buy MCX and sell BSE. Second on the list is Grasim. There are buy flows on the large HNI and the PMS desk. Dealers expect strong Q1 numbers here. For GMDC, there are buy flows on the large HNI and PMS desk at lower levels. Even the delivery volumes are expected to be slightly higher. The stocks are down today, but both the counters are seeing favorable buying action on the PMS and the HNI desk. When it comes to 361 and delivery, buzz of a potential block deal that could happen in both the counters here. Delivery block deal could well be post their numbers, but keep an eye out for both the names, 361 and delivery. And lastly, when it comes to Paramount Communication, there are buy flows on the PMS desk. Dealers are expecting a positive news flow. Some large deal will could be there, as well as what dealing rooms are indicating when it comes to Paramount Communications.
Okay, Soumya, thank you so much for getting us those details. I'll quickly come to Jaybala first. With regards to Nazara, anything that you're picking up on the charts for this one?
Yeah, see, it's got short-term higher highs. I'm not sure this is driving it to fresh all-time highs. The pattern for the stock is a little bit ambivalent because of its limited history. So I would consider this as a short-term bullish move rather than a medium-term continuation of trend. Because the price action from 2025 is an overlapping move. So that's normally not a trending move. So it's usually a terminal move. So I'll be a little bit, bullish, but only for the short term.
And Vijay, what do you make of Trent? Because, brokerages have gone ahead and said that, the overall for FY27, they've not cut down their EPS or target prices per se. They're saying that they've liked what the management has given in terms of commentary. And the fact that EBITDA and PAT did beat estimates as well. It's just the revenue, which is below 20% for the fifth quarter in a row. But do you think that this kind of pressure on the stock is valid? Or do you think that, it's now in the oversold zone and now is the time to go ahead and buy the stock?
I won't go ahead and buy the stock. Because there are, certain intrinsic problems with the economy as well. People do not have, Trend per se is for the masses. It's a mass brand, and people should have disposable incomes if they really want to go ahead and buy. And Trend, works on the principle of impulsive buying. So people go to buy a shirt or a trouser and they buy three. So that's how Trend functions. But over a period of time, in the last few months, as the petrol, diesel prices have increased, the food inflation has also increased. People are not left with much disposable income. So I would say that whenever such things happen, the disposable income is going down, and we have to understand the trend of the economy as well. So consumption-related stories, they take a hit. And of course, I'm not talking about the FMCG part of the consumption, but Trend part of the consumption where, it can be probably postponed. The buying decisions can be postponed for some time. So I think that Trend should consolidate around these levels. I think 27,2,800 is a good level where it can consolidate for a quarter or so. And then probably we can, have an opinion about buying. But as of now, definitely no buy for Trend.
Definitely no buy for Trent is the view that Vijay has. But with that, thank you so much for both of you gentlemen for taking out the time and speaking with us, and of course giving us your perspective on the stocks that we talked about. The other counter that we're focusing on is Cosmo First. In terms of their Q1 EBITDA, it's improved on the back of higher sales volume, and their Spec Chem business, which has done very well for them this quarter. Now let's try to get in Pankaj Podar, the group CEO of Cosmo First, to talk us more about how things have shaped up this quarter. In fact, Pankaj, I'd like to ask you about the US business because, it has benefited because of lower tariffs. What is the kind of upside that you see from here on for your US business? Is there any internal target in place?
Yeah, so we expect that US should grow anywhere between 25% to 30% this year on higher margins vis-a-vis last year, because last year all the customers didn't pass on the complete duty because for them it was becoming unsustainable beyond a point. So one is now there are much lesser duties and customers are, always love our quality, our product range and so on. So this year Q1 already has seen a good growth and the pipeline of orders are also very strong. So we do expect 25 to 30% growth in US.
Okay, 25 to 30% growth in the US business. Got it. In terms of EBITDA, what percentage of a consolidated EBITDA comes from the US business, and is there any upside that you see here on that 25 to 30% that you've said in terms of top line? What will be translated to EBITDA as well?
It's quite substantial when it comes to film business alone. I may not have exact numbers, but it should be 20% plus for us.
Got it. Pankaj, in terms of your overall FY26, you've done top line of around 3,600 crore, bottom line of around 150 odd crore. What are FY27 targets looking like in terms of both the top line and bottom line?
Yeah, so we should see at least 20% growth in our overall sale numbers. And the new businesses are growing even at a much faster pace. They are expected to grow at 60%. So both numbers look very positive. And other than that, the company is also now working towards ROCE, because last 4-5 years we were doing significant expansions, and now is the time for us to improve our ROCE numbers with full utilization of capacities, sweating out of assets, improving our cost efficiencies, and continue to move on the specialty side and grow our B2B and B2C businesses both at the same time. So we expect good things to come out.
Sure. Okay, Pankaj, thank you so much for taking out the time and helping us answer all those questions. But with that, viewers, it's time to step into a very, very short break. On the other side, we'll be in conversation with Vinay Rajani of HDFC Securities and Vidit Bolinjkar of Ventura Securities. Do stay tuned in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean
Welcome back. You're watching India Market Close, and you saw a glimpse of those numbers for just a bit. Why don't we actually turn it around and show it to you? I see 7 minutes, 20 seconds left, and you know what that is about? It's a countdown to the market close for the F&O cash segment. In case you've been away from the markets for the last week or so, we kick-started with a new way of finding a price at close for the market, and that is the cash. You want to talk about
closing
it?
Account, auction settlement. I keep saying account, closing auction settlement. Session.
Yeah.
But yeah, I mean, so I'm sure that traders are now probably getting a hang of it.
Yeah,
more.
they're getting used to it.
They're getting used to it, to the fact that the F&O cash segment will stop at 3:15. Post that, at 3:30 onwards is where you can again, start taking derivative orders. But the price discovery will happen till 3:30, and on the back of that, either 3+ or 3% minus band is the price within which the orders can be placed, and then 3:40 is when you get the closing price for the F&O cash segment.
And just to catch you up, you've had a pretty rocky start where nobody knew what was happening. 200 points on the Nifty 50 at the end after 3:15. It climbed very suddenly, but that gap has actually been narrowing. Do we have that graphic? If we can pull that up, if we can talk about how the benchmarks closed 3:15 and then closed at the end of 3:30, we'll pull that up for you in just a bit. Remember, yesterday was the Sensex expiry, Tuesday was the Nifty 50 expiry, and through the week what you've been seeing is a bit of a narrowing of that gap from the 3:15 close to what you see at the end at 3:30, 3:35 or thereabouts. But 3:30 more or less is when you see the markets close. Remember, so this is only for the F&O stocks. For the rest of the market, the cash market continues to operate, and so that continues till 3:30. Let's pull up those graphics actually. So there you go. So 3rd of August was when the gap was as much as 0.8%, 200 points for the benchmark Nifty 50. It dropped to 152 points on the next day, fell to 55, and then just 9 points effectively was what you saw on the 6th of August. I wonder where we will see things today. Vinay Rajani, who is Senior Technical and Derivative Analyst at HDFC Securities, joining us right now to talk about the cash effect and certain other things. Vinay, thanks so much for taking the time. Good afternoon to you. Do you think that that gap will further reduce today?
Yeah, I think yes, because things are getting normalized day by day as you shared the data. So on the first day, Nifty saw a gap of more than 200 points and now gradually has come down to 9 points. So the important thing is to watch out for is the expiry days like Tuesdays and Thursdays, where the option premiums are moving like anything. So yesterday also we saw a big movement in the option prices. The at-the-money strike price of Sensex options were like going up and down, and it is actually retail traders are worried about it, and a lot of volatility is there. But I think things will be normalized as the time goes. So I think we have to wait for some time more as liquidity emerges, awareness comes, then things will be normalized. So definitely I'm expecting it to this volatility because of the cash systems which is going on for last 3-4 sessions. It will gradually reduce going forward.
Okay, what do you make of the benchmarks today? First, the Nifty and the Bank Nifty, and what are the picks that you have that you'll be probably holding over the weekend?
Yeah, so stock-specific bullishness is still there, though the in the Nifty consolidation is going on. After Monday's move, there is a narrow consolidation in the range of, let's say, 24,700 to 24,500. But I see this consolidation continues. But yes, overall primary trend of the market is bullish. We are expecting markets to find support at lower level. 24,300, 400 is a very strong band for the Nifty, around which one can again initiate long position. And we are expecting this recent swing high to be taken out soon, which is around 24,800. So buy on dips is a view. 24,400 should be utilized to go long again in the next week, and we can expect a target of 25,000 for next couple of weeks. So yes, we are bullish. Sector specific, stock specific movement is going on in the result season, so that needs to be captured as far as near term, short term returns are concerned. So yes, 24,400 is a very strong support.
Just about 3 minutes to go for the F&O stocks at the very least, and in the cash market today. Do you have any trades that you want to recommend? And you can also talk about derivative trades, Vinay.
Yeah, so yesterday we saw momentum coming back to the PSU banks, and today SBI announced a very good result, and after that the follow-up comes. So Indian Bank is one of the stock which we like, which also came out with a very good result. Technically, the breakout was there in yesterday's session. Today follow-up is there. So around 888 Indian Bank, this is the spot rate. Indian Bank 888 is a good price. 875 should be the trading stop loss on the upside. 935 should be the target for next 2-3 days. The second stock from the F&O space is Hindustan Zinc, which is looking good. So silver has started rising. That is also a positive factor. And zinc as a commodity also have been doing good. So Hindustan Zinc around 600, one can go long. 570 should be the stop loss on the upside. I'm expecting a positional target at 650.
Vineet has joined us this afternoon as well. Vineet, always a pleasure speaking with you. And I must say that I love the library behind you. I can't make out if it's real or if it's AI. It looks like it's a virtual background, but it looks really nice.
Yeah, it's a virtual background. Yeah,
it's a virtual background. All right, but we're nearly at the end of the earnings season. Another week to go. What, according to you, are the top 2 or 3 stocks that you kept on your radar and that you were absolutely enthused with at the end of the earnings season?
So I think your Aether Industries is one which really stands out for me. I think it's going to do really well going ahead. I believe that it has got very, very strong growth trends. Macro trends are very strong, and with the rooftop solar kicking in, I think we will see Aether Industries do very well. I'm talking about Aether Energy, sorry.
Aether Energy, ATHER is the name of the counter. Aether Energy, which is the two-wheeler manufacturer in which Hero MotoCorp just bought stake. By the way, we're very close, 30 seconds away from the close of the cash market for F&O stocks. And at this juncture, we're off the low point of the day for the benchmark Nifty 50, hovering around 24,550 or thereabouts. And that might just be where we close pretty much the normal trading or the continuous trading, and that's a number that you should keep on your radar, because it'll be interesting to see what the gap emerges if it does emerge at the end of the cash window.
550, almost 60 is what we're watching. The only per se concern was that we were expected to close at least this week by over 24,600, but that's not happened. But if that spike comes in post the settlement, there you go. We've settled at 24,557 right now, down by about 0.3%. Now we'll have to wait till 335 to see as to where how this happens. But Vinay, any quick view on how things have settled right now, at least for the F&O space?
Yeah, so it is more or less consolidation and with a positive bias. So I think for last 3-4 sessions, we can see that the after 330, 3828, the tick comes on the positive side only. So that trend may continue. As of now, the stock specific bullishness is there. So I think there is not a much problem. IT stocks are performing very well today. So overall, we are bullish, and I think there should not be any problem from here.
Okay, I want to talk about one of the contenders for the stock of the day, and that is in the automotive ancillary space. That is Samvardhana Motherson. For various reasons, it has impressed the street. The stock is up as much as 9%. Let's head across to Puneet to find out what stood out in the numbers. And he also spoke to the management, and I want to ask him to highlight one portion of that conversation, Puneet, that you found interesting.
Well, thank you for that, Alex. We'll get through what the key aspects were and then highlight the important factor at the end as well. But the earnings was a good show. Was a good show for the company. 17% growth in revenue. EBITDA has also grown in this particular quarter, which was a tough one led by commodities, while profits have come in at almost 1,000 odd crores versus 512 in the same time last year. But when you look at what's actually worked for the company historically, quarter one is a slower quarter. You have a lot of order wins and deal wins that get completed in quarter four. So sequentially, there is a dip. But this time around, that wasn't the case. A good strong show by the company. Quarter one revenues are higher versus last year's quarter four for the first time in a really long time. The second point being that, on consumer electronics, this will be a new division for the company. They'll be making enclosures for mobile phones. That new factory will commission at the end of Q3 of FY27, and they will be adding upstream integration capabilities as well within this particular vertical. And aerospace was a new vertical as well. Company has talked about it. 20% growth is what we've seen, 17 to 20% growth that we've seen. And once the company puts numbers through it, probably in the next year or so, this will be a very big vertical for them, given the order book and the size and the opportunity size too. Finally, I do want to talk about what brokerages have done today as well. Now, valuations were slightly on a better front because of the geopolitical landscape and the impact on global companies, but most major brokerages actually have high target prices. So Morgan Stanley up at 173, Investec has hiked to 185, but you've also seen CLSA, Jefferies and Nomura all go to that 190 odd mark yet again. It's a mark that we haven't seen for Motherson for a really long time, and hence these are baking in estimates and growth for the next few quarters. Almost 22 analysts have a buy call on Motherson as well, but you have to realize the scale. Operates 400 plants, 13 plants are getting commissioned over the next 12 to 18 months, 10 in this year itself, and hence the scale of the company is visible. They have mentioned that they've gotten some orders for semiconductors also. That was interesting, for the first time hearing about it from the company, as well as in humanoids recently as well. So all new aspects coming through, but as Alex should mention, I'd asked them about how auto companies are going into precision engineering, and this is exactly something that's been propping up, because it's becoming a theme now with Sansera as well as others, and Samil is definitely in that race too.
Interesting. Yeah, a lot of these automotive companies, automotive ancillary companies are looking beyond the shores of what they've traditionally done, getting into precision manufacturing, etc. So, oh, by the way, so here's how the futures trade is looking for Samvardhana. Vineet, while we're on the subject of Samvardhana as well as some of the other auto ancillary players, what would you say is your top pick in the space and why?
So I think your Royal Enfield scores very well on this factor. Very strong growth numbers coming in for Enfield, as well as, VCEV has seen very strong growth. We also like Ashok Leyland, which is coming through. FADA numbers have been very good this month, and we think from here, both these stocks can rally beyond 20% for the year.
Just to be clear, I'm not talking about the original equipment manufacturer. I'm speaking about the auto ancillary companies. So within that space, since we were speaking about Samvardhana, Motherson Sumi, what would your pick in the auto ancillary space be and why?
So within auto ancillaries, I'm not focusing on any stocks. I think these two stocks are what I like as auto plays. And I think the numbers have been very strong. So that is why I am going with these stocks, because I think these are got good value at current levels.
Understood. All right. Vinay, let me check with you then. What's the view on Samil?
Yeah, so Motherson Sumi, right?
Yeah.
Yeah, so the stock is trading at its all-time high, and today it is up by more than 9%. And definitely the stock is trading looking very strong. Recently, it has surpassed the crucial swing top resistance of 155. So the previous resistance now becomes a strong support. So it is in the blue sky territory, and better not to anticipate any resistance right now. Better to keep the whole stock with the trailing stop loss, and 155 should be the trailing stop loss for the positional traders.
Okay. All right, so that's the view coming in for Samvardhana Motherson, but Adani Green is the other one that is in focus, and Axis Bank has gone ahead and initiated a buy recommendation on this one with a target price of 1710. What they're saying is that there's strong growth runway ahead for this counter. It's one of India's largest renewable energy company with 20.1 gigawatt operational capacity, and is expected to be 2.5 times its capacity by FY30. And alongside this, with significant battery storage additions that will drive EBITDA from 161 billion to around 460 billion is what Axis Capital is estimating. In terms of long-term value creation also, what they're saying is that despite of factoring in a one-year delay in transmission readiness, it believes that Adani Green will generate 200 billion plus annual operating cash flow post FY32, supporting 12 gigawatt of annual capacity additions and underpinning its positive long-term outlook. Of course, standard disclaimer, Adani Green is also part of the Adani group of companies, and so is NDTV Profit. But Vineet, any quick take on Adani Green that you'd like to give?
Yeah, I think they're managing the risk very well, and we've seen their their ratings are going up, so this is helping them lower the cost of funds, and they got very strong traction in terms of adding about a quarter of gigawatt of capacity every quarter. So we are looking at adding around the 25 gigawatts at least in the next 3 to 4 years. And I think that this will catapult the company into about 55 to 60,000 crores of EBITDA. And that number is very, very respectful. And I think it has got a lot of room on the upside to travel.
All right, that's a word on Adani Green. Now, there's been much talk about the implementation of the new CAS mechanism, and you've got brokers, you've got market participants that have been speaking about this. We've got Nimit joining in, who's spoken to a whole host of these individuals over the course of the last couple of days, and there are a few suggestions that have come through, also interactions with the regulator. Nimit, what have you picked up?
Yeah, so brokers have been talking to us, brokers have also been talking to the regulator, and the regulator has also been talking to brokers and the larger market participants. What's come out of this, the brokers are clearly saying that there is a lack of liquidity for this kind of structure to function efficiently. What they say is that the market needs more liquidity, more depth before CAS can function efficiently. Now, they say that CAS is a great idea. In fact, the idea of fixing the price based on a CAS system has been used globally, historically, and it's worked well, but the market structure must exist for that. Now, what they're saying as to what doesn't exist specifically is that the limited arbitrage and limited liquidity distort these auction prices, and you really don't understand. There's a feeling of flying blind. We'll come back to that. The other thing that they're saying, there's a stronger stock borrowing and lending mechanism that needs to be put in place for efficient short selling, applicable here to the CAS system when you're fixing your price. Also, a common order book between exchanges also improves that transparency. Now, transparency and liquidity, these are the two key points. SEBI has in fact told market participants, we understand, that there should actually be no transparency gap even in the period, even during the closing auction session. There should be no transparency regarding the volumes, regarding the prices, regarding the indicative volumes and prices, the order imbalances, and overall all of this auction information. In fact, as we speak right now, NSE has put out a message saying that most of the information is available during the closing auction session. We'll bring that to you, Sean. That this includes the upper price band, the lower price band, the price changes, the final price, and they've also given an indication as to where this is available, and this has just come in as we speak. So the issue of liquidity and transparency is being discussed between market participants, brokers and regulators, and this seems to be the biggest issue, but both of them seem clear that liquidity will improve over time and volatility in these prices will settle.
Okay, interesting. Vinay, what do you make of that? Thanks so much, Nimit, for that. Vinay, what do you make of that? To say that as a derivative trader, this feeling of being in a black room and not having enough information, if more data and information is available, will that solve some of the issues?
Yeah, so I think one should wait for some more clarity, wait for some clarity to emerge right now. So better to wait and then see how it goes. But as of now, ignore trading much in the option premiums right now going into this gas system. So I would rather wait and watch and see what comes out from this particular development.
Vinay, I was reading one of these posts on Twitter that said that because there is so much gap between the Nifty 50 and the Sensex, there is a possibility of arbitrage trade, after 315 between the two. Is that something that traders are kind of thinking of and maybe even adopting?
Yeah, so see, I have heard that many arbitrageurs have taken advantage in last couple of sessions due to this gap between the indices. But I think that will also normalize as the time progress and as the liquidity increase and as the awareness increase. So I don't think this will remain, this much gap will remain there. Gradually, the gap will narrow down and things will be settled soon.
Okay, just so you know that the window for the CAS began at 320 And so the process of identifying the closing price, that is the bids and asks, have come through between 320 and 325. Limit orders can be placed beyond that point, but there's a random close before 330. And so at any point between now and 330, you will see a close and you will see a shift in the benchmark. Why is that? Because each security in the F&O list will have bids and ask within a range of 3% up or 3% down. And based on the number of trades, once those trades get matched, there's an order matching that takes place. The price it settles at will result in a change in the market capitalization, and thereby it'll have a bearing on the value of the index. And so you could see a change in the index at 328 or 330 or thereabouts. And once that takes place, you will see that on the screen. At this moment, and you see that yellow line, this is where the cash is not being traded, or securities are not being traded in the cash market, which is why that is being depicted as a yellow line. 24,557 is where we closed at 315. I hope I made sense.
Absolutely. And just to add to that, value weighted average price is the mechanism to arrive at that price, and it is going to be plus or minus 3%. That is also something that one needs to keep in mind.
But the reference price,
the reference price to say. So that's of course we'll have to wait and watch out for us as and when that rate comes in. But while we do that, while we wait, Vineet, Bajaj Finance is something that I wanted to talk about because of this new RBI norms. Jeffries did come out and say that this is kind of overdone, and the overall impact on EPS could be anywhere between 1% to 1.5%. But there are brokerages that believe that the impact could be more. What do you make of first of all the norms, and do you think that the way the stock has reacted is kind of overdone? Also, the fact that Alex was mentioning that this stock has run up quite significantly in the past couple of days.
Yeah, so it's going to create a little bit of hiccups in the administrating the business model. You got to move from this kind of BNPL stroke, running in and running out of limits on lending are going to impact this stock a bit. But I think they'll take it in their stride, and eventually it will move to a clear credit mechanism, which is your fixed tenure AUM. And I think that it will come back in its stride. The numbers are very, very strong, and I continue to remain a buy on this counter.
By the way, the closing rates this Friday are in. Pull out the benchmark Nifty 50. Oh, there you go. This is convenient, isn't it? 24,557 was where we closed 315 at. The closing price at 330 is 24,570. And so the gap between the two is just about 13 points up for the 330 close. Similarly, for the Nifty Bank, you've had a 54 or 55 point gap between the close at 315 and the 330 final price. If we can pull up the Sensex as well, let's try and do that because you saw, okay, so we saw quite a bit of a difference. I have the values in front of me. I've actually taken it down. 78,563 was where it was. So it's closed lower. It's closed about 160 points, 160 odd points lower, 164 points to be precise, lower at 78,499. Interesting.
If we can also see some of the names, at least the heavyweights on the Nifty 50, let's try to pull up something like an RIL, an HDFC Bank, an ICICI Bank, and see if we have the difference coming in there. And if we can try to pull up the difference between the rates as well. HDFC Bank, we'll try to get you that very soon. But Vinay, since Monday, at least that points gap is at least reducing. That means that traders are now getting used to it. Would you agree with that? And what do you make of today's closing, at least, and price discovery?
Yeah, so traders are definitely getting used to it. But the another thing is that BSE, the Bombay Stock Exchange website, has started giving this indicative close. So since on 315, when Sensex spot prices stopped moving, there was an indicative close also they are mentioning below the actual close of 315. So indicative close was moving as per the volatility. And looking at that, we can have some idea that at what point Sensex or Nifty can close at 328, 329 window. So that kind of observation was there, and one can know that where is the big movement is coming, whether it is going significantly up and down. I saw that the Sensex was almost at the same level at 327 indicative close I'm talking about. I don't know whether NSE website they giving that indicative close or not, but it's just like a pre-opening session we have at 9 o'clock every day. It is like a pre-opening, pre-closing session definitely, and it is giving some idea that where the Nifty spot prices are going to close, looking at the indicative close on BSE website.
By the way, the F&O stocks that have seen the biggest change during that cash window, let's try and pull those up. And we have those graphics for you. We have that data for you. From what I can see, the biggest change is for IFL Finance at this moment, with a gap of about 1.9% higher. And of course, these are the ones that have gained in that cash window. Petronet, LNG gaining as much as 1% or so. Lodha, Patanjali Food and Asian Paints have seen some action as well. On the losers end, you have Ramco Cement that has lost a little bit of ground, 2% or thereabouts, but not too much of a big gap between the 315 price. Remember, this is not the reference price. We don't see that reference price. It's something that is decided by the exchange. This is simply the last tick that you see at 315. The volume weighted average price is determined based on the trading data between 3 and 315. And so therefore you don't see that. The gap that you see between Loris Lab 315 and 330 is essentially the last tick at 315 and the final closing price, which is about 0.5% lower. So very interesting. Vinit, not Vinit, sorry. I'm just trying to Vinay, sorry, apologies, I've got your names messed up. But Vinay, the gap in individual securities does not seem to be as substantial as it was, and I'm glad that we have that data and we're able to present it.
Yeah, so as Nifty has not moved that much, only I can see 13-14 points from the 315 close. So gap is not that much in the stocks also in F&O. So yes, it's gradually, but it depends on the volatility that we are getting in last 15 minutes. So yes, today because of the almost flat move in the Sensex and Nifty 13-14 points, the gap is narrowed down in stocks also.
Yep, absolutely. Let's head across now to Puneet just to get a check of what's happening in the F&O space as well, because from 3:30 that's been active as well. Puneet, what are the trends that you're picking up?
Well, thank you for that. So looking at the difference between the spot as well as what you're looking at the futures for both the Nifty 50 as well as for the Bank Nifty as well. So 24,570 is something that we highlighted in the morning as well, that if it closes above the 24,600 mark, it will be something that both traders will take with both hands if you would have been told that at the start of the week. But nonetheless, very close to that mark. 57,700 is where we are for the Bank Nifty spot trade as well, just inched up a little bit in terms of the futures price. But let's also look at the cash line graph also, if we can pull that up, because that is the other key factor, something that you spoke about, Alex, as well, that the point is very minimal, just 13 points as well. For the Bank Nifty also not too much, minuscule change at this point of time, but here is what we've been highlighting and trying to present as simply as possible. This one's for the Bank Nifty as well. Let's also look at the cash F&O top gainers and losers. I think Alex just pointed out, if you can pull that list up as well very quickly in terms of gainers, and IFL Finance as Lodha continues to be one which continues to have that active open interest built up. For the losers as well if we can, and then the OI distribution map to just wrap up this particular segment too. Let's go to the losers now. Max Financial, Escorts Kubota is another one. Came out with earnings, not too much reaction, but in the 15-minute window it has propped up on our list. And finally the OI distribution map too. Now this continues very similarly to what we saw this morning, that 25,000 is a very big high candlestick that you're seeing for the open interest gainers, and that's seen throughout the day. 24,600 and 24,700 also seeing that active call open interest being built up, while the rest of the levels about 25,000 and 24,500 continue to have that higher call open interest. So that's the picture, Alex, coming through on the F&O side of things.
Right, so thanks so much for that. Vinay, I just want to come to you on whether you think that there's any derivative strategies that you would employ based on what you've seen in the last hour to half an hour of trade today, heading into next week.
Yeah, so I would not consider anything which has happened in the cash, but yes, looking at the technical charts, yes, Nifty has formed a doji candlestick pattern on the weekly chart. So it is a more or less indecisive kind of in nature. So indecision, that means bulls and bears both are confused after rising 1,000 points from the lower level. So it might happen that this consolidation will continue in the Monday's session. So better to look at the strategy in the derivative, like this short strangle kind of strategy for the 1 or 2 sessions. So 24,570 is the close. One can look at selling 24,700 call and selling 24,400 put. So that kind of range bound strategy one can expect. So short strangle kind of strategy can be done as far as derivative data and the technical development is there on the charts.
Vinay, any stocks that stood out to you this week that could potentially carry their momentum on into next week, that people should have on their radar? Perhaps early Monday they can maybe initiate a long and that opportunity arises? 2 or 3 names that stand out to you?
Yeah, so one of the stock which I like is the Hindustan Zinc. Definitely there is a positive development on the chart, but zinc as a commodity has been doing good, and I can see that silver is bouncing back. So silver mining company, Hindustan Zinc, which is listed, can benefit out of it. So that is looking very strong to me. The another stock which is looking good to me from the derivative space is the Mahindra and Mahindra. So auto stocks have done exceptionally well, but Mahindra and Mahindra has just given a fresh breakout after 3-4 days of consolidation. So Mahindra and Mahindra I like for 3 to 4% immediate upside from 3,500 level. So these are the 2 stocks which I like for the next week, Hindustan Zinc and M&M.
Vinay, thanks so much for joining us today, and happy Friday to you, and speak soon next week. All right, let's talk about the markets, and we're closed with cuts of about 1/3%. 24,570 on the last ticker for the week. But I'm curious about what happened through the week, because you've seen some instance of foreign institutional buying in the first half of the week. It tapered off towards the end. We've ended with gains of about 1% for the benchmark Nifty 50. Let's look at the Bank Nifty. Let's look at the broader markets as well. For the Bank Nifty, just about 0.7%, kept pace more or less, lost ground towards the end there. But for the mid-cap index, gaining about 1.4%. You've seen resilience in the broader markets that continues. And for the small cap index, this is where all of the action is. But the question is there a little bit of fatigue that may be creeping in? Because the last couple of sessions, you've seen a little bit of consolidation play out.
Yeah, and small cap 250, by the way, very near to its life highs, and we'll have to see whether that's been crossed next week or not. But let's also take a quick look as to how the Nifty heat map looks like right today, because SBI still, whether it's topping the chart or not, no, it is tapered off now, just about 1% high, probably something in the commentary that's caught up. But TCS still closing with gains of about 3% Grasim, another one which has done very well this week. If I can actually try to pull up the weekly chart for Grasim, it will be an interesting one to watch out for. But both the Bajaj twins are taking a knock, 5% for finance and 3% for Bajaj Finserv. There you go, almost 6% gains on this Nifty 50 counter. Has done very well for sure, and that spike today is aiding to that gains coming in.
You were talking about State Bank of India and the fact that it's come off. I don't think that it has to do with the commentary more than anything else. It has to do with what has happened this week, right?
Yeah.
So in trade yesterday as well, you saw gains of 3%. So even if somebody managed to buy yesterday morning, and because a bulk of that gain came in the second half, you've had a pop of about 4 or 5% in 2 days, and so money being taken off the table is really par for the course. And so therefore that's the long and short of it. And we've come to the end of what has been a very interesting week of trade for us in the studios as well. I'm sure for you, as you've tried to figure out this new way of finding a closing price. But from the Suzlon studio, the NDTV Profit Suzlon studio, and from Mahima and myself and the team that put the show together, thank you so much for watching. Do stay tuned, lots more coming up on NDTV Profit.
Co-powered by LIC, हर पल आपके साथ, and Coin Switch.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by Coin Switch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin is trading in a range of $64,000 to $65,000 levels. US and UK formalized joint stablecoin framework. And tokenized RWA DeFi deposits tripled to $7.4 billion in the second quarter. And lastly, Moscow Exchange plans standalone digital custody platform. Well, those were the top crypto headlines at this hour. How should you craft your crypto playbook and which concept should make the cut here? Let's listen into Raj Kapoor, founder of India Blockchain Forum, to find out what he thinks about tokenization as a concept.
It's a very simple concept. It's been going on in our lives for a lot of years. Tokenizing, what is the tokenization? It's simple. If I have one cake, I can't eat the whole cake, right? But if I slice it into 8 slices, 8 people can eat that cake. It's as simple or as complicated as that. The same thing happens when we want to tokenize anything which is any asset class. It could be a financial instrument, it could be real estate, it could be gold, it could be commodities, anything. Now, instead of one person, I can't buy a building. But if there are 10 people can put in the money and buy the building. So you tokenize. It's as in the simplest words, that's tokenization. Sharing the risk, sharing the brain, sharing the asset in multiple places. That's called tokenization in the simplest words. That's my easiest way of explaining it to you. And if you want a more complicated way, well, tokenization is nothing else but actually making an asset, splitting an asset into multiple digital assets so that multiple people can come in and take part in that asset class. That's tokenization.
Let's also listen into what he had to say about how this helps the retail in the crypto.
Well, it's like this, today, if you want to buy a Bitcoin, for example, from the market, can you buy the Bitcoin? No, it's almost $60,000. You and I don't have that sort of money to buy a Bitcoin. But the very fact that it is now split into different Satoshis, there is multiple parts. You can buy 1 Satoshi, 2 Satoshi, 5 Satoshis, 10 Satoshis, depending on your budget. That's now you can be a part owner of a Bitcoin. Therefore, the retail markets, they look at that and say, well, I can own a Bitcoin, I can say that. Or I can own a hotel building or an apartment in Dubai, in India, in anywhere. If I just buy a small part of that token, retail markets then become more liquid. It brings in liquidity, and that's most important for any asset class. If I can't buy a Bitcoin or an apartment, but I can own a part of it, that's tokenization to you.
And lastly, let's listen into what he had to say about how tokenization helps in getting the right liquidity.
Yeah, it's very simple. I want to sell this apartment here. I have an apartment here. It's maybe worth 5 crores. I don't find too many buyers right now. And they say, well, okay, I tokenize it. I tokenize it and make it into about 100 or 1,000 tokens. Now, everybody can pay 10,000 rupees or 100 or a lakh of rupees and be a part owner of that. It brings in the liquidity because a lot of people can afford a lakh, but not everybody can afford 5 crores at the same time. Therefore, it becomes easier, brings in more people, brings in the retail, the masses into this. Therefore, it becomes more liquid, easier to manage, and easier to get your liquidity. So instead of waiting for 5 crores from one person, I can get maybe 5 crores from 100 people or 1,000 people, depending on the tokens. That's how liquidity comes in. Easier. It's something like crowdfunding used to be once upon a time in a digital format, in a more sophisticated format.
Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myths from facts and explain why listening better could mean living better. Only on NDTV Profit.
The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global.
NS Ramaswamy, Head Commodity Desk and CRM Ventura is joining us right now on the show. Thank you so much, Mr. Ramaswamy, for taking time out and joining us. As always, it's a pleasure to be speaking to you. But, you know, when you talk about gold as well right now, it's quite the interesting setup, which is why this makes this conversation so much more interesting, right? When you talk about the weekly basis, you're looking at a 5% gain. When you talk about gold thus far this year, especially since late February, it's down by almost a fifth. You did have that rally coming in January, but you know, first things first, just wanted to get a sense of what you think about the week gone by first.
Yeah, basically gold's consolidation is almost come to an end and it has started to rise. That's what we have been observing, mainly through the Chinese demand, which is very strong, and also the US Fed's uncertainty. Basically, the US Fed is not at all in a hurry to raise the rates. If you were to see, the treasury yields are rising, and also the US dollar is a bit of weakening trend which has been observed. So Fed doesn't require any adjustment as regards the inflation. It's because it's behaving as expected. So the consensus is about 56% of the consensus is talking of only a 125% hike in the interest rate, which was during the year end, and this was expected. Almost 2 such hikes were expected. So what is really happening is July FOMC, post July FOMC, we have got only September. So now this is a lean period where the Fed related monetary policy is not going to influence gold. So this is the time when the geopolitical part of it is really acting on it. So the progress that has been seen in the Middle East conflicts and the peace talks and whatever we are seeing on the oil prices is probably indicating that there is no much worry on the inflation side of it, which is giving a great support for gold. And central bank interest rate hike is also actually expecting only one such hike for the year 2026.
No, absolutely, and point taken there, you know, in terms of the setup that we've got at hand. Let's also delve a little deeper in terms of this from a contrarian perspective right now, because we do have Naresh Kataria, private investor, joining us on the show right now. Mr. Kataria, as always, a pleasure speaking to you, right? And a very good afternoon. It is a very interesting afternoon for those who track gold prices, and especially for you, since you do have that little bit of contrarian view also coming in terms of some of your recent commentary that I'm going through. You've talked about how sentiment has also bombed out in gold in the recent months, and which is especially a good setup coming in from a contrarian perspective. Let's talk about that first, and then we'll get to the other insights a little bit later.
Pleasure to be here again, Shreyansi. So on gold, the sentiment is exactly opposite of what it is right now, is opposite of what it was in start of 2026 when there was mass participation and a frenzy or a euphoria. So right now, I think the flows into the gold ETFs, all ETFs combined globally, actually outflows compared to the flows which they were there in 25 and 26. The gold bull market, this leg started in 22 when the Ukraine war started and US weaponized USD reserves of Russia. I think that was the triggered by central bank buying. But and then the retail joined in later via ETFs in 25 and 26, 24 and 25, sorry. But 26, we have seen outflows in all gold ETFs combined. And I think the correction has been run through enough.
Absolutely, and that little bit of run through that we've seen, it's actually quite perplexing to say the least when you talk about some of those support and resistance levels being a little fluid when you talk about gold, right? And Mr. Ramaswamy, I also wanted to just take it across to you and try and understand what you think about the scale of this year's swings, which is just something we just talked about as well. Is gold still behaving like a safe haven asset or something more speculative? And it almost seems like I'm asking you a rhetorical question right now, right? Given the way that it's been trading in a very different sense than a traditional safe haven asset would.
It's been very, very cautious move in gold. If you were to see rightly, like how the guest just now pointed out about the global gold ETF, what is very remarkable is about the global ETF. If you see, it has attracted actually almost $3 billion US in inflows in July. It has actually reversed the last 2 months of outflow. This is as per the World Gold Council's report. And also, mind you, that Indian physical demand is a season which really starts from August. So that's a festival accumulation which begins. So we expect that over the period of 2026, if the euphoria and things should, after it crosses $4,500 per ounce, we are expecting it to greatly rally even up to close to 4,700 levels. And that is what we are expecting by almost 2026. So it's not more of a speculative, but it is an accumulation phase which has crossed now, and the rally has bound to begin now after this fundamental impact on maybe the interest rate and other things. So we need to wait and watch till September, but by then we are expecting it would have already crossed 4,500 mark.
Absolutely, and we wait and watch, we will, because it's quite the interesting setup right now that's been unfolding when you talk about gold as well. Mr. Kataria, just wanted to get in a word here in terms of the ETF tonnage that you were talking about, for some more color on that as well. And when you talk about central bank buying, both of those triggers have been quite important in terms of what investors have been tracking. Your 2 cents on this.
So stepping back, if you see this gold bull market started this in 2022 when central banks accelerated their buying and retail were actually net sellers on ETF. If you see the ETF tonnage drop between 22 and 23 and then it picked up in 24 and 25, but central banks have continued to be buyers. They've been buying about 800 to 1,000 tons a year. Annual production is 3,700 tons. So central banks have been steady buyers. It is the retail and ETFs which took the gold market into, and silver, of course, into a different orbit in 2025. That over enthusiasm, I believe, has been removed, corrected. ETFs, there are no great total inflows. There are actually net outflows across all ETFs. So I believe the sentiment is well placed. Stepping back also, Shreyansi, if you see, even in 2022, when the war started in Ukraine, gold initially corrected, like it's corrected now with this war in Iran, because there is a scramble for liquidity. If you see, even India's political leadership has advised Indians to kind of go slow on gold. Why? Because we want as a nation to save dollars. So there is a scramble for dollar liquidity. And I think that's what has prompted the correction like it prompted in 2022. Just one more point on the last bull market, which was
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है, बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? चैनल तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point.
Market ends a tad lower after remaining in a range through the session. Nifty ends just below 24,600, shedding nearly 0.6% this week. While IT stocks rose today, Bajaj Finance was the top loser after RBI said no to revolving credit facilities. Nifty Auto ends at record high. Oil rises as Iran draft plan seeks Hormuz curbs on US-Israeli ships. Fresh supply disruptions fears lift crude despite Trump's call for conflict to end soon. Brent hovers around $82 a barrel. RBI's draft lending norms propose banning revolving credit lines, allowing only term loans. Brokerages warn that the move could hurt customer acquisition, growth and yields for lenders with meaningful exposure to such products. RBI tightens security over Bank of Baroda after a massive data leak exposed customer and banking records. The regulator seeks list of remedial actions taken and may impose penalties. The largest PSU lender, SBI, outperforms estimates as it posts a strong Q1 performance. Net profit rises nearly 10%, asset quality improves, and SBI chairman says credit growth accelerated across sectors supported by retail, agri, and MSME loans. Akasa Air is targeting an IPO in the next 2 to 4 years. In an exclusive conversation with NDTV Profit, Akasa CEO and founder Vinay Dubey said that India continues to be among the world's most affordable aviation markets despite airlines facing global cost pressures. Lok Sabha passes MSME payment delay bill amid opposition protests aiming to speed up dues recovery and empower small businesses. The legislation sets timelines for faster dispute resolution, targeting long pending payment issues faced by MSMEs. Trump renews birthright citizenship push, signs fresh orders targeting birth tourism after Supreme Court setback, widening efforts to restrict automatic citizenship for children born in the United States.
Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Gargi Shetty. Along the next half hour, we'll bring you the latest on markets as well as national and international news. Let's first begin with how the markets ended. Well, it was a strong week for Dalal Street with the Nifty ending nearly 1% higher, supported by broad-based buying across sectors. The broader markets outperformed once again with both the mid-cap and small-cap indices posting stronger gains than the benchmark. PSU banks emerged as the top-performing sector for the week, while realty was the only major laggard. Let's go over to Parth for a complete roundup of how the markets ended.
With Grasim and Hindalco being the top gainers of the index. Hindalco gaining almost 9% today, this week, and Grasim over 7%. The broader markets outperformed the benchmark this week. Nifty mid-cap closing with a gain of 1%, while Nifty small-cap closing with a gain of 1.5% for this week. On the sectoral side, they have ended on a mixed note. Nifty PSU Bank was the top gaining sector of the week, up over 5%, while on the bottom side, we saw Nifty Realty being the top losing sector, losing almost 2%. Now, coming back to the today's performance, Nifty closed in red, down 0.5%, mainly led by the downfall we saw in Bajaj Twins. Bajaj Finance seeing a downtick of almost 6%, while Bajaj Financial Services also seeing a downtick of over 4%. Broader markets outperformed the benchmark today. Nifty mid-cap 150 closed in green, up over 0.2%, while Nifty small-cap closed in red, down under 0.1%. On the sectoral side, Nifty Auto was the top gaining sector, seeing an uptick of over 2%. Samvardhana Motherson was the top gainer in auto sector, seeing an uptick of over 8.5%. On the bottom side, Nifty Financial Services was there in red of almost 1.5%, mainly led by Bajaj Finance, seeing a downtick of almost 5.5%. Nifty IT and Nifty FMCG today snapped their 3-day losing streak, while Nifty Oil and Gas and Nifty Realty were up for the second day in a row.
Right, thanks for that, Parth. Let's now look at how the oil markets have been doing. Oil prices climbed as fresh concerns emerged over potential supply disruptions in the Strait of Hormuz after Iran published a draft plan proposing restrictions on transit by US and Israeli vessels. Now, the proposal has reignited fears over the security of one of the world's most critical oil shipping routes. However, US President Donald Trump struck a more optimistic tone, saying that he expects the conflict with Iran to end pretty soon, and he noted that oil prices were cooling from recent highs. Iran's parliament speaker dismissed Washington's approach as theater diplomacy, accusing the US of relying on pressure tactics and urging it to honor its commitments. Let's listen to what Donald Trump had to say on this.
Republicans are arguing a lot right now about affordability. What is your message on affordability going into the midterm?
Oil prices now are coming down very rapidly. If you look at what's going on, it's down to 75. When I started the very important excursion into the Islamic Republic of Iran, it was a very important excursion because they can't have a nuclear weapon. Otherwise, the whole world would get blown up. We're not going to let that happen. Not only us, not only the Middle East, the whole world would have been catastrophic. We had no choice. And we'll see those days pretty soon again, based on everything I see, as soon as the war ends. And I think it's going to end pretty soon. I don't think they can go much longer. Yeah.
The contrasting signals from Washington and Tehran have kept energy markets on edge, driving oil prices higher amid persistent geopolitical uncertainty. Early today, we spoke to Steve Englander of Standard Chartered Bank on the recent movement in crude prices and whether oil at the current levels is really a cause for concern. Listen in.
If it's in that price range, and the rationing is by price, in the sense that if you can pay 85 or 90, you can get the oil that you need and the energy products that you need. I think the world goes on. If it gets to the point where we're saying, oh, there are real shortages, and you're seeing that reflected in really sharp increases in certain segments of the market, I think that becomes much more painful. It's no fun to have oil at 85, but I think that the world can deal with it. It takes a chunk out of growth, but it's not disastrous.
Moving on to gold now. Gold has rebounded sharply this week, gaining nearly 5% as buyers return to the market. But analysts say the rally has been driven more by a technical breakout than any major diplomatic breakthrough. They believe the initial upside borrowed some momentum from Iran-related developments, but the current move is being fueled by fresh buying rather than Hormuz-related fears. Now, even after this recovery, gold remains well below the highs seen during the conflict, while the market continues to balance geopolitical risks against the Fed's rate outlook. All in all, it has been a year of extremes for gold prices. Early today, we also spoke to private investor Naresh Kataria on gold's recent rebound and the outlook for prices. Let's listen into his commentary.
On gold, the sentiment is exactly opposite of what it is right now, is opposite of what it was in start of 2026 when there was mass participation and a frenzy or a euphoria. So right now, I think the flows into the gold ETFs, all ETFs combined globally, actually outflows compared to the flows which they were there in 25 and 26. The gold bull market, this leg started in 22 when the Ukraine war started and US weaponized USD reserves of Russia. I think that was the triggered by central bank buying. And then the retail joined in later via ETFs in 25 and 26, 24 and 25, sorry. But 26, we have seen outflows in all gold ETFs combined. And I think the correction has been run through enough.
And viewers, with the new CAS mechanism in force, brokers and market participants want a phased rollout, citing low liquidity and weak participation. While SEBI says auction data is transparent, Nimit is here with more details on this.
So brokers have been talking to us, brokers have also been talking to the regulator, and the regulator has also been talking to brokers and the larger market participants. What's come out of this, the brokers are clearly saying that there is a lack of liquidity for this kind of structure to function efficiently. What they say is that the market needs more liquidity, more depth before CAS can function efficiently. Now, they say that CAS is a great idea. In fact, the idea of fixing the price based on a CAS system has been used globally, historically, and it's worked well, but the market structure must exist for that. Now, what they're saying as to what doesn't exist specifically is that the limited arbitrage and limited liquidity distort these auction prices, and you really don't understand. There's a feeling of flying blind. We'll come back to that. The other thing that they're saying, there's a stronger stock borrowing and lending mechanism that needs to be put in place for efficient short selling, applicable here to the CAS system when you're fixing your price. Also, a common order book between exchanges also improves that transparency. Now, transparency and liquidity, these are the two key points. SEBI has in fact told market participants, we understand, that there should actually be no transparency gap even in the period, even during the closing auction session. There should be no transparency regarding the volumes, regarding the prices, regarding the indicative volumes and prices, the order imbalances, and overall all of this auction information. In fact, as we speak right now, NSE has put out a message saying that most of the information is available during the closing auction session. We'll bring that to you, Sean. That this includes the upper price band, the lower price band, the price changes, the final price, and they've also given an indication as to where this is available, and this has just come in as we speak. So the issue of liquidity and transparency is being discussed between market participants, brokers and regulators, and this seems to be the biggest issue, but both of them seem clear that liquidity will improve over time and volatility in these prices will settle.
And viewers, Titan has posted its Q1 earnings. It beat estimates with net profit at 1,770 crore rupees versus an estimate of 1,392 crore rupees. Revenue was at 21,356 crore rupees versus an estimate of 21,451 crore rupees. For more details, let's go to Mahima. Mahima, what are you getting from these earnings?
Very strong beat, Gagi, in terms of all its metrics. In terms of revenue, it's a beat of around 100 odd crore. For net profit also, it's a beat of almost 400 plus crore. For EBITDA also, if you take a look at the numbers, it's more than 500 crore beat that's coming in, and margins have come in at 13.5%. The estimate was 10.5%, but it's come in very strongly at 13.5%. Just look at the numbers. Revenue up 29%, EBITDA up 58%. 13%. Margins at 13.5% versus that of 11.1%. There's net profit, which is almost up 63%. Jewelry business growth stands at 30%. The EBIT for jewelry business is almost up 68%. In terms of the watches segment, continued premiumization has kind of made sure that analog analog watches have done very well. The portfolio has seen a growth of around 21%. Jewelry business has said that a resilient consumer confidence and stable gold price environment has boosted the performance. Eye care has clocked a robust growth of 21%, and it's a very strong start to the year is what the management is saying. Even in terms of the management commentary that is coming in, they've said that during the quarter, Titan showcased a high-end fine watchmaking credentials as well, and Watch the Wonders. That's also done very well for them. In terms of the jewelry performance, what they've said is that while the jewelry business has seen a growth of 43% in this quarter, Tanishq and Mia has seen a growth of around 38%. Carat has seen a growth of around 40% odd. So all in all, a very strong performance coming in for Titan. Even the emerging business per se has done well. Overall, it's seen a growth of around 43% odd. So seems to be a very strong set of numbers for sure.
Right, thanks so much for that, Mahima. Clearly a very strong quarter for Titan. And staying with that earnings momentum, State Bank of India has reported a better than expected June quarter. The country's largest lender reported a double-digit rise in profits, supported by healthy growth in interest income and an improvement in asset quality, even as margins remained under watch. Let's go across to my colleague Piyush for a detailed breakdown of SBI's Q1 performance.
Well, a strong set of numbers by SBI in Q1 FY27. The bank's net profit is up 10% to around 21,121 crore. This is above the estimates, but the estimates were of Bloomberg said that the PAT may fall by 1% year on year in Q1. This handsome growth in profit is led by the sharp growth in net interest income, which has actually grown by 15% year on year to 46,992 crore in Q1. Further, the gross and net NPA ratios have also improved a bit. The GNPA and NPA ratios stood at 1.47 and 0.38%, which is lower 2 and 1 basis point quarter on quarter respectively. Further, the provisions, however, have risen sharply. It has gone up to around 5,047 crore from 2,872 crore on a Q1Q basis, but they still remain almost on par with Q1 FY26, where the provisions stood at around 4,759 crore. Further, the net interest margin has beaten the estimate. The NIM, domestic NIM, stood at 2.86%, which is higher than the expectation of 2.77%. All in all, a solid set of numbers from SBI. Provisions have risen. This is essentially also because of the seasonality effect that banks see in their agri portfolio in Q1. So this was in a way on expected lines. Back to you.
Right. While SBI's earnings beat estimates, the management also spoke about the broader operating environment. Chairman C.S. Setty flagged the West Asia conflict as a key source of market volatility, while noting that credit demand remains healthy across segments. He also acknowledged that net interest margins are easing across the banking industry. Listen into his comments.
The global economy continues to operate in an environment of heightened uncertainty. Geopolitical tensions in West Asia remain a source of volatility, while renewed trade measures by the United States have added another layer of uncertainty to global commerce. Crude oil prices, exchange rates, and financial markets continue to respond sharply to geopolitical developments and changing global expectations. Against this backdrop, India's economic resilience continues to stand out. With respect to the banking sector, credit growth has accelerated across key sectors, supported by healthy demand from retail, MSME, agriculture, and industries. Capital adequacy, liquidity, and asset quality across the banking system continue to be remaining comfortable, although some moderation in margins has been witnessed across the industry.
After LIC reported a strong first quarter performance, NDTV Profit spoke to CEO and MD R. Doraiswamy on the key drivers behind the numbers, margin expansion, and the company's growth outlook. Let's listen in to what he had to say.
Congratulations, sir, on the Q1 numbers. They stand out here.
Thank you.
What led to this, sir? And is there more profit levers going ahead?
We have been maintaining that ever since we went for IPO. We have embarked on a directional shift in terms of product mix.
So all the products that we launched after 2022 have been on the non-par side, and with a continued focus, we have improved the contribution from non-par products. And that is something which has helped in the corporation coming up to these numbers. We have been able to do well. Particularly in the first quarter of current year, we found that the contribution from non-par savings and non-par protection have gone up, which have helped in the improvement in margins and VNB numbers.
Yes, speaking of the VNB numbers, these margins are improving, and it seems like the tone of the management is that it will go up on the higher side. Just wanted to understand, is the gap coming closer towards your private peers now?
Yeah, we have always been maintaining that we'll be improving our margins in such a way that we can be one among the best in the industry. Right. That has been our focus. When it comes to VNB margins, there are multiple components. One is the product mix. The product mix change that we have been bringing about has helped in this. Two is our improvement in the operational efficiency. Our expenses ratio has been continuously on the decline, and we have been focused on that as well. These two are under our control, which will be continuing to work, and I think there will be further improvements on that. Given that the interest rate scenario remains the same way, I think we can see some more improvement in this area.
And viewers, onto an NDTV Profit exclusive now. RBI has tightened scrutiny on Bank of Baroda after a massive data leak exposed customer and banking records. The regulator has sought answers and may impose penalties. Let's have a look at this report by my colleague Piyush, where he breaks it down for us.
Well, that is right. The RBI has sought data from Bank of Baroda with regard to the massive 1 TB data leak that happened last month. The RBI has asked the bank what was the root cause for this data leak, what remedial actions has the bank taken with regard to the data leak, and if the regulator is not satisfied with the cyber security standards at the bank, then it may go ahead and impose a monetary penalty on Bank of Baroda. As we are aware, Bank of Baroda last month saw a massive data leak wherein the PAN card, Aadhaar card, contact details, virtually bank statement, all of the personal details of a lot of borrowers were leaked online on the dark web, and the bank, in fact the bank's internal audit data, compliance system data, a lot of internal data was also leaked, and Bank of Baroda later issued a statement saying this was because one of their employees' laptop was hacked. But RBI has this cyber security framework which had come on July 31st, the last month itself, which said that banks have to notify RBI within 6 hours of data leak, and banks also have to work in tandem with CERT-IN whenever such data leaks happen to ascertain the root cause of this particular data breach that has happened. So yes, the RBI is looking into this front, and if deemed necessary, the bank may be penalized.
Right, and Akasa Air has launched its first ever loyalty program, Akasa Elevate, as it marks 4 years of operations. NDTV Profit spoke to founder and CEO Vinay Dubey about the new program, its key features, and how it is expected to strengthen customer engagement and reward frequent flyers. Listen in to what he had to say.
More than anything else, I'm sure everyone wants to know what's in it for the commuters, for the passengers, as a gift for 4 years.
Yes, it's been 4 wonderful years, certainly extremely rewarding. We've served just shy of 30 million customers, which we're very, very proud of. On behalf of all of our 5,500 employees or so, we thought this was the right time to give something back. And so on the 7th of August, we will announce the Akasa's loyalty program called Akasa Elevate, as a way of saying thank you for all the customers that continue to choose Akasa again and again and again. And so that's something that we are really looking forward to.
This is interesting. A loyalty program for the consumers is what you're announcing. What would that actually entail? Because the question is, do we get free flights? Do we get free food? What is the loyalty program going to look like?
You know, it's a portion of everything. That there are benefits in terms of free flights that you will be able to accrue over time. There are discounts on food. There are discounts on seat selections. One is able to get flexibility in terms of changing. So we're, for example, one of the only airlines that would provide our top tier customers with an ability to get to the airport early and without any expense whatsoever, take an earlier flight should their travel plans change. And these are some of the unique elements of Akasa's loyalty program. We're also, as we launch this, We're allowing people to make retro claims all the way back to the start of our fiscal year, which is the 1st of April. So that's something interesting. And the other thing is your tier benefits are independent of where you book from. So for example, if you're a platinum tier customer, you can book on any platform and your tier benefits are preserved. So there's some interesting things that we have built into our program really as a way of recognizing people that continue to choose a CASA time and time again.
Viewers, in an exclusive chat with NDTV Profit, Pharma Secretary Manoj Joshi says India must move beyond assembly of medical devices and increase local value addition, expanding domestic API production. Listen into his comments.
What is the way ahead for the India medical devices sector? What sort of growth we've seen given the fact that we have had one PLI scheme already come out, second one in the works? Talk to us about what the growth is.
I think we need, in high-end medical devices, we have seen a lot of assembly happening in India. Now we would like to see more value addition, domestic value addition happening in India to at least say 40-45%. And a lot of growth in component manufacturing in India. We would like more and more units to produce components in India so that we can cater not just to Indian market but to export market. And also in consumables and disposable side, where India has some strength and we do export products also, we would like to see more and more exports of quality products to happen in India. Diagnostic side, we would like some companies to set up production facilities here because we don't have much of a production in India. And implants is another area where we are done quite well, and we would like a larger share in export markets for India.
So what are the sort of incentives we are working towards to attract these? Like you said, we need to set up these manufacturing, end-to-end manufacturing in India, not just assembly.
I think the government's focus is, one is the production-linked incentive schemes which are there for electronic industry, for printed circuit boards, for medical devices, because it's across different sectors, components which are used in medical devices. So all of those PLI schemes are supporting component industry in medical devices. We are working on medical devices parks also, and the development of labs and testing facilities so that it's easier for industry to access to these facilities.
Right, moving on then, the Supreme Court has agreed to hear the Department of Telecommunications challenge to the Bombay High Court order that had quashed the levy of a one-time spectrum charge on airwaves held beyond the 6.2 megahertz threshold. The Apex Court has issued notices to Bharti Airtel and Vodafone Idea on the centre's appeal. The case is significant as the High Court verdict had provided telecom operators a relief of nearly 23,600 crore rupees in spectrum-related dues. The Supreme Court's decision to examine the matter revives a long-running dispute with potentially major financial implications for the telecom sector and the government's revenue collections. And WhatsApp is testing a new feature in India that asks users to add their date of birth. The prompt says the move is linked to upcoming Indian regulations requiring platforms to verify users' age. The feature is currently available only to select users as part of a trial, and the company has not yet announced a timeline for a wider rollout. And moving on, the standoff between restaurant bodies and food delivery platforms continues, but talks are gathering pace. While Zomato has been given more time to find a resolution, Swiggy still faces the original August 15th deadline. Ridhima is now here with all the details.
National Restaurant Association and Karnataka and Bengaluru Restaurant Association has met with the executives of and representatives of Swiggy and Zomato today in regards with the issues of the ongoing tussle between the food apps and the restaurant associations regarding the platform services. Now, NRAI Bengaluru Restaurant Association has extended the Zomato's deadline to September 1st. Earlier, this ultimatum for halting processes for Zomato orders was set to September September 1st, and the extension has been granted to allow further discussions with Zomato. Now the results of the conclusion of today's meeting is awaited. Zomato's CEO, as per the Restaurant Association, had agreed to solve most of the bigger problems before September the 1st, and Restaurant Association hasn't extended August 15 deadline for Swiggy in this case. This is as per the information from National Restaurant Association and Karnataka and Bengaluru Restaurant Associations. Now, what are the key demands for restaurant associations? So they say that they want greater transparency with respect to commission structures, and to force discounts and deep discounting, and timely and transparent payment settlements. And lastly, they demand that there should be no unilateral deductions by the platforms. And if you were to understand the background of this issue, it began in around late July when restaurant bodies had raised concerns over platform practices, and on July 28th to 30th, they had warned of possible boycott if the demands remained unmet. And on August 6th, the deadline was extended for Zomato after platforms sought more time, while it was unchanged for Swiggy. Now, how important are these platforms for the restaurants? Around 100% of the revenue for these dark kitchens comes from these food apps, Swiggy and Zomato, and also 5 to 30% of the revenue for the restaurants also comes from these online apps. Now, as per sources, there is negligible impact so far, and there is alignment with the way forward. And today's meeting will be closely followed as to what happens in this case going forward.
Right, thanks for that, Ridhima. But viewers, that's all the time we've had on this edition of Profit 360. But stay tuned to NDTV Profit for more news and updates.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस तेल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300 300।
Into the skies, someone is actually turning 4. I'm sure you would want to know, guess who? We are talking about Akasa. We have with us Vinay Dubey, the CEO of Akasa, who's joining us in the studio as well to talk to us about what's in store, what's the strategy from here on. Welcome to NDTV Profit, Vinay, and congratulations. 4 years into the skies.
Yes, thank you.
More than anything else, I'm sure everyone wants to know what's in it for the commuters, for the passengers, as a gift for 4 years.
Well, thank you for having me here. Yes, it's been 4 wonderful years, certainly extremely rewarding. We've served just shy of 30 million customers, which we're very, very proud of. On behalf of all of our 5,500 employees or so, we thought this was the right time to give something back. And so on the 7th of August, we will announce the Akasa's loyalty program called Akasa Elevate, as a way of saying thank you for all the customers that continue to choose Akasa again and again and again. And so that's something that we are really looking forward to.
This is interesting. A loyalty program for the consumers is what you're announcing. What would that actually entail? Because the question is, do we get free flights? Do we get free food? What is the loyalty program going to look like?
You know, it's a portion of everything. That there are benefits in terms of free flights that you will be able to accrue over time. There are discounts on food. There are discounts on seat selections. One is able to get flexibility in terms of changing. So we're, for example, one of the only airlines that would provide our top tier customers with an ability to get to the airport early and without, any expense whatsoever, take an earlier flight should their travel plans change. And these are, some of the unique elements of Akasa's loyalty program. We're also, as we launch this, we're allowing people to make retro claims all the way back to the start of our fiscal year, which is the 1st of April. So that's something interesting. And the other thing is your tier benefits are independent of where you book from. So, for example, if you're a platinum tier customer, you can book on any platform and your tier benefits are preserved. So there's some interesting things that we have built into our program really as a way of recognizing people that continue to choose Akasa time and time again.
How big a revenue generator will the loyalty program even be for an Akasa? Because that is somewhere going to be the end game as well. That yes, benefits do accrue to your customers, but something should be there for an Akasa in it.
From day one, we have had the ethos that if you create an experience that our customers like, they will reward you. So the reward is really in developing something for our consumers, as opposed to saying that the loyalty program has to have a particular P&L. That's not the lens through which we're looking at this. From day one, Akasa is an experience-led carrier. Whether you look at the quality of our seats, the USB ports, the larger overhead bins, the quality of our food, the on-time performance, all of this from day one has been fashioned because we know at the end of the day, if you're not providing that experience to customers, no one's going to want to fly you. And so the loyalty program is just a way of saying thank you, as opposed to really, finding some P&L benefits in this. The P&L benefits will come just by winning the hearts and minds and the travel of the consumer every single day.
Okay. So let's leave that aspect aside and then let's talk about what's happening from a business perspective. I'm sure there was a strategy when Akasa came into picture. It's been 4 years. How have you been in terms of the strategy that was planned to executing it with the kind of deviations that would have come your way, right? I mean, because I don't think so there is any strategy that gets formulated which is execution to the T.
Right.
And at this stage, if you were to look at the next 4 to 5 years of your journey, what is that expected to look like?
Sure. So there are, 4 or 5 pillars of the Akasa strategy that were true when we launched and are true today. You're absolutely right. It's not that, we are perfect, and so there are always ways in which we can improve, and we try and continuously improve on that. But the strategic elements, and I'll describe the 4 or 5 pillars of strategy, those we don't think have fundamentally changed today, although we're open to reviewing them periodically. So, for example, we started with service excellence as one of the core pillars of strategy. That very much remains the way we are today. We looked at cost leadership and the business model centered around cost leadership, so we can provide affordable fares for our consumers and keeping our business model simple, again, to with a view to providing affordable fares. Those elements have remained the same. World-class safety is something that is all pervasive in everything that we do. or being employee-centric. That is core to who we are, because it's our employees, our 5,500 employees today, that really are building the company. It's not one or two of 5 people. And so treat them with dignity and respect, and really build this company for them, with them. These are elements of our strategy and ethos that remain alive today. And part of that, in order to sort of execute that, we've also had this view that we have to always be well capitalized through this process, because there are going to be many ups and downs. So these elements remain the same. It does not mean that execution is ever easy. No, there are always things that are thrown at us, but these elements of strategy are just as alive today as they always have been.
You know, but this industry, Vinay, as a whole, is absolutely capital intensive. So the question then is, how regularly do you get yourself capitalized in terms of fundraisers? But before we get there, from a strategy perspective, because you will need money, either you raise money or you get it from internal accruals, right? So then the question comes down to, is it going to be profitability that you're going to chase as an airline, as a company? Or is it going to be chasing the market share first, which will then lead to profitability, right?
Yeah.
Because if I'm looking at Akasa, we're still in single digits. I wouldn't say high single digits also, but somewhere in between in terms of single digits.
Right.
And you have competitors who've achieved that kind of market share much faster. But I'm sure there is a strategy in place of the way Akasa wants to do it.
Yeah, so I'll tell you that we're not chasing market share, we're chasing profitability. And it's not that market share drives profitability, it is scale that drives profitability. So you could be a scaled airline. You could, have 60, 70, 100 aircraft and have a 2% market share. Or you could have a 60, 70, 100 aircraft airline and have a 25% market share. These are, and I'm talking, by the way, I'm talking about different countries in different parts of the world. It is the scale that drives profitability more than market share. And that's the reason why, for us, we don't wake up every morning and look at market share. So our competitors can grow, at 8,000%. It makes no difference to us. We will continue to grow in a disciplined manner. At the end of that, we'll get scale in a disciplined manner. And at the end of that, we'll achieve profitability independent of how fast or slow anyone grows, right? Because market share is not just a function of your own growth, it's also a function of somebody else's growth. And so our view is, if we continue to grow in a disciplined manner, we will get to profitability. And I'll tell you, in the 4 years that we have been in operation, our financial metrics have gone not just on track, but perhaps a little better than track. And so we're very pleased with the way we are progressing. And very happy, with what the future has to hold for us.
So we've spoken about what you have for consumers. We've spoken about the strategy that you have in place as well, in terms of the pillars that you've carried forward. What is most important to you versus, if you have to compare market share versus profitability, where you're saying it's going to be scale, which will help you achieve profitability.
Correct.
3 to 4. What?
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300 300।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV.
Well, we are joined in by Sri R. Doraiswamy. He's the MD and CEO at LIC. And congratulations, sir, on the Q1 numbers. They were standout here.
Thank you.
What led to this, sir? And is there more profit levers going ahead?
We have been maintaining that ever since we went for IPO. We have embarked on a directional shift in terms of product mix. So all the products that we launched after 2022 have been on the non-par side, and with a continued focus, we have improved the contribution from non-par products. And that is something which has helped in the corporation coming up to these numbers. We have been able to do well. On particularly in the first quarter of current year, we found that the contribution from non-par savings and non-par protection have gone up, which have helped in the improvement in margins and VNB numbers.
Yes, speaking of the VNB numbers, these margins are improving, and it seems like the tone of the management is that it'll go up on the higher side. Just wanted to understand, is the gap coming closer towards your private peers now?
Yeah, we have always been maintaining that we'll be improving our margins in such a way that we can be one among the best in the industry.
Right.
That has been our focus. When it comes to VNB margins, there are multiple components. One is the product mix. The product mix change that we have been bringing about has helped in this. Two is our improvement in the operational efficiency. Our expenses ratio has been continuously on the decline, and we have been focused on that as well. These two are under our control, which will be continuing to work, and I think there will be further improvements on that. Given that the interest rate scenario remains the same way, I think we can see some more improvement in this area.
Fair enough. The AP segment, annualized premium equivalent, that is steady this quarter, not very great as compared to VNB. What are the key reasons behind it?
No, there we had a difficulty in terms of maintaining the kind of volumes that we had in ULIPs and annuity, given the market situation that was there in the first quarter.
So is it because of the West Asia crisis?
Yes. When there is an uncertainty in the market, when income of the people get affected, naturally it results in with an impact on the savings capability. When income of somebody goes up, the first thing to get affected will be the savings. So we had difficulty, and particularly the kind of volatility that we saw in the capital markets brought the ULIPs into clear focus. So we could not show the kind of growth that we are expecting in ULIPs and annuities.
Fair enough. But let's talk about a little bit about par versus non-par segment. What's the ratio right now? And what kind of target we can expect 2 to 3 years down the line?
We started at around 8% share of non-par when the IPO time was there, and from there we have been continuously focusing on improving. We have now reached 32% non-par and 68% par. That's what we have reached. We are looking at a ratio between 30 and 35 as a non-par, and it can go up a bit more. We can
by when it can be achieved, do you think?
It's almost consolidating now.
Almost
for the year, last year itself we touched 30, 34, 35, and that's the range we would like to keep.
Oh, fair enough. But the average ticket size, I'm hearing or I'm seeing the numbers, has gone up as well. Do you think this trend will continue going ahead?
Yes. See, we are trying to improve the focus on high ticket sales. In October 24, when the new master circular on products was rolled out by the regulator, we had to align our products to be compliant with that. So one step that we took was to increase the minimum ticket size of the policy in terms of sum assured from 1 lakh to 2 lakh for the highly selling products. That has helped. And also we would like to see that our agents are trained to talk about focusing on the protection gap. So what is the amount of insurance a person should have given the income and the other liability that a person has. So that is something which is slowly starting to pay off. We would like to have further improvement in the ticket size in the days to come.
Nicely explained, sir. But I want to understand, IRDAI is expected to come with regulations maybe in the next couple of weeks. What's the industry buzz? What's the expectations looking like? On which area it might be?
See, the next change in regulations is expected on distribution sector. So the regulator has been talking about the distribution sector reforms for quite some time. The focus of the regulator has been rightly on improving the accessibility, improving the distribution efficiency, and ensuring that the customer interests are well protected.
So customer wins.
Customer benefit. So that's the main focus. If the costs on distributions are high, it will result in the benefits payable to the customer being reduced. So that is the one area which is the focus, and a lot of deliberations have happened. The regulator has had individual discussions with
So it will be like a white paper coming out?
No, it will be a discussion paper.
It will be a discussion
paper on the kind of sector, the reforms that the regulator is thinking of. We are expecting it in the immediate future. The regulator has also been talking about how the distribution costs need to be optimized, and particularly how it should be aligned to effort-based remuneration kind of a thing. And sure, when it comes to LIC, we have been having the least ratio in terms of commission to total premium
as
income
compared to the private
as
players.
compared to the industry and the private players. So we don't expect too much of an impact on LIC given the this position of LIC. But whatever changes are going to be brought, we are fully confident that we'll be able to act upon it, ensure that we are compliant, and also protect the interest of the customers and our agents.
Fair enough, sir. And the agency business, 93% of that business is coming from there. But alternate channels have started increasing, even though it's a low base. So which are the alternate channels looking like for growth?
No, we have both. We have the banks as partners, as well as the corporate agents, brokers, IMFs, and other such organizations which can do, the web aggregators and others. Okay. So our focus has been to keep our strength strong. So agents training, agents handholding, and ensuring that a good improvement in the productivity of agents is one of our key result areas where we are working on. At the same time, we found that the opportunity that was being available in terms of getting premium through banks and alternate channel has to be fully utilized. So we started focusing on that for the last 2 years. We have improved from a 2.5% ratio, which was there at the time of IPO, to 8.2% through banks, alternate channel, and digital in the last financial year. We expect it to go further because the potential is still high, but we are ensuring that we get the best out of agents as well as the alternate channels and banks. So our ratio of business done through banks and alternate channels is expected to increase to close to double digit in the current year, and still further improvement is possible in the years to come.
So the last question is on the guidances. Any important numbers we should be tracking for the end of FY27? Any numbers which have been discussed?
No, we are looking at enhancing our margins to the best of the industry, or to the industry average level at least. That is something which we will continue to work on. Our improvement will be on the contribution from bancassurance and alternate channel. That is one more area which we are looking at. On the product front, we have been doing well on savings, which will continue to improve. We have been doing well on the annuity side, which is a pension market, which is an emerging market, which is required for the country. We will continue to do well in that also. Last 2 years, we saw a good growth in ULIPs. The market fare has also been good for it. The first quarter did not see a good growth there because of the market uncertainty, but we expect to come back in that also in a good way. And the fourth bucket, which is the protection bucket, that is also something which we have started increasing our focus. It has seen a good growth in the first quarter. In the current year, we expect to see something more, some good growth in protection and savings. That's also something which we are looking at.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year.
N.S. Ramaswamy, Head Commodity Desk, and CRM Ventura is joining us right now on the show. Thank you so much, Mr. Ramaswamy, for taking time out and joining us. As always, it's a pleasure to be speaking to you. But, you know, when you talk about gold as well right now, it's quite the interesting setup, which is why this makes this conversation so much more interesting, right? When you talk about the weekly basis, you're looking at a 5% gain. When you talk about gold thus far this year, especially since late February, it's down by almost a fifth. You did have that rally coming in January. But, you know, first things first, just wanted to get a sense of what you think about the week gone by first.
Yeah, basically gold's consolidation is almost come to an end and it has started to rise. That's what we have been observing, mainly through the Chinese demand, which is very strong, and also the US Fed's uncertainty. Basically, the US Fed is not at all in a hurry to raise the rates. If you were to see, the treasury yields are rising, and also the US dollar is a bit of weakening trend which has been observed. So Fed doesn't require any adjustment as regards the inflation. It's because it's behaving as expected. So the consensus is about 56% of the consensus is talking of only a 125% hike in the interest rate, which was during the year end, and this was expected. Almost 2 such hikes were expected. So what is really happening is July FOMC, post July FOMC, we have got only September. So now this is a lean period where the Fed related monetary policy is not going to influence gold. So this is the time when the geopolitical part of it is really acting on it. So the progress that has been seen in the Middle East conflicts and the peace talks and whatever we are seeing on the oil prices is probably indicating that there is no much worry on the inflation side of it, which is giving a great support for gold. And central bank interest rate hike is also actually expecting only one such hike for the year 2026.
No, absolutely, and point taken there, you know, in terms of the setup that we've got at hand. Let's also delve a little deeper in terms of this from a contrarian perspective right now, because we do have Naresh Kataria, private investor, joining us on the show right now. Mr. Kataria, as always, a pleasure speaking to you, right? And a very good afternoon. It is a very interesting afternoon for those who track gold prices, and especially for you, since you do have that little bit of contrarian view also coming in terms of some of your recent commentary that I'm going through. You've talked about how sentiment has also bombed out in gold in the recent months, and which is especially a good setup coming in from a contrarian perspective. Let's talk about that first, and then we'll get to the other insights a little bit later.
Pleasure to be here again, Shreyansi. So on gold, the sentiment is exactly opposite of what it is right now, is opposite of what it was in start of 2026 when there was mass participation and a frenzy or a euphoria. So right now, I think the flows into the gold ETFs, all ETFs combined globally, actually outflows compared to the flows which they were there in 25 and 26. The gold bull market, this leg started in 22 when the Ukraine war started and US weaponized USD reserves of Russia. I think that was the triggered by central bank buying. And then the retail joined in later via ETFs in 25 and 26, 24 and 25, sorry. But 26, we have seen outflows in all gold ETFs combined. And I think the correction has been run through enough.
No, absolutely, and that little bit of run through that we've seen, it's actually quite perplexing to say the least when you talk about some of those support and resistance levels being a little fluid when you talk about gold, right? And, you know, Mr. Ramaswamy, I also wanted to just take it across to you and try and understand what you think about the scale of this year's swings, which is just something we just talked about as well. Is gold still behaving like a safe haven asset or something more speculative? And it almost seems like I'm asking you a rhetorical question right now, right? Given the way that it's been trading in a very different sense than a traditional safe haven asset would.
It's been very, very cautious move in gold. If you were to see rightly, like how the guest just now pointed out about the global gold ETF, what is very remarkable is about the global ETF. If you see, it has attracted actually almost $3 billion US in inflows in July. It has actually reversed the last 2 months of outflow. This is as per the World Gold Council's report. And also, mind you, that Indian physical demand is a season which really starts from August. So that's a festival accumulation which begins. So we expect that over the period of 2026, if the euphoria and things should, after it crosses $4,500 per ounce, we are expecting it to greatly rally even up to close to 4,700 levels, and that is what is we are expecting by almost 2026. So it's not more of a speculative, but it is an accumulation phase which has crossed now, and the rally has bound to begin now after this fundamental impact on the maybe the interest rate and other things. So we need to wait and watch till September, but by then we are expecting it would have already crossed 4,500 mark.
Absolutely, and we wait and watch, we will, because it's quite the interesting setup right now that's been unfolding when you talk about gold as well. Mr. Kataria, just wanted to get in a word here in terms of the ETF tonnage that you were talking about, for some more color on that as well. And when you talk about central bank buying, both of those triggers have been quite important in terms of what investors have been tracking. Your 2 cents on this.
So stepping back, if you see this gold bull market started this in 2022 when central banks accelerated their buying and retail were actually net sellers on ETF. If you see the ETF tonnage drop between 22 and 23 and then it picked up in 24 and 25, but central banks have continued to be buyers. They've been buying about 800 to 1,000 tons a year. Annual production is 3,700 tons. So central banks have been steady buyers. It is the retail and ETFs which took the gold market into, and silver of course, into a different orbit in 2025. That over enthusiasm, I believe, has been removed, corrected. ETFs, there are no great total inflows. There's actually net outflows across all ETFs. So I believe the sentiment is well placed. Stepping back also, Shreyansi, if you see, even in 2022, when the war started in Ukraine, gold initially corrected, like it's corrected now with this war in Iran, because there is a scramble for liquidity. If you see, even India's political leadership has advised Indians to kind of go slow on gold. Why? Because we want as a nation to save dollars. So there is a scramble for dollar liquidity. And I think that's what has prompted the correction like it prompted in 2022. Just one more point on the last bull market, which was 2000 to 2011. Even within that, in the 2008 market correction, gold had corrected 30% in 2008 from the peak. And then, of course, it tripled from that level. So if there is economic dislocation, if there is a scramble for liquidity, gold also initially takes a hit on the chin. And I think this is what has happened.
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversation?
Anant Narayan, former whole-time member of SEBI, but more importantly, a very astute mind on a lot of things, including the topic that we're going to talk today, joins us really. And Anant, it's been a raging debate, considering this just started, but from the looks of it, it'll probably continue for a while, and that is the CAS, or the closing auction session. And what does it do to a market which is full of opinions about whether a particular move is good or bad. I would love to know from you, though, as you join in, thank you so much for joining in, about whether it's a case of the intent being right, but the first draft of the executed law not quite being up there, because the whole of Asia does this, the closing auction session. So it's not something that India is an outlier when it's introduced it.
Yeah, thanks for having me, Neeraj. Look, you're right. There are multiple reasons explained over 2 consultation papers that SEBI issued, I think in December 24 and August 25, why we considered this, why SEBI considered this. Amongst them, of course, were representations from global passive funds, which, by the way, constitute 30% of FPI assets under management in India, and active funds globally, saying that, no, this is something which is there in every major market, not just in Asia, but every major market across the world. And India is kind of an aberration. And for their own tracking errors, it's important that something like a gas be available. Beyond that, Neeraj, there were a couple of other reasons as well. One is, of course, that index providers, they look at and they rate markets based on multiple parameters, microstructure parameters. One of them is the availability of gas. So, India comes as restricted in respect of not having a gas till now. And therefore, that was kind of, in a small way, weighing down on the weightage given to India. And finally, there was also, of course, it was not the primary reason, but, there were always some murmurs in the market about the activity in the market, particularly on rebalancing days and on expiry days, right? And the point being that sometimes the market moves seem unnatural in the cash market. And then there would be a lot of whispers and murmurs about something happening. So the question was, how do we improve trust in the ecosystem? And that's why SEBI conducted this very comprehensive study across, looking multiple jurisdictions, and came to the conclusion that yes, gas does happen everywhere, and it does. Literature suggests it does improve the trust in the closing and reduce volatility quite a bit. And it also said that implementation can be very tough, which we put out in the first consultation paper in December. In fact, countries like Hong Kong went through a torrid time implementing this. Thereafter, there were multiple rounds of consultations. And yes, there were many domestic players, some brokers, proprietary traders, mutual funds who were not in favor of this. And of course, the global market participants were hugely in favor of this. So based on all the feedback, a second consultation paper was brought out, I think sometime around August 2025, which tried to address all of these issues. So I think it's the right design. But while I think SEBI and the market participants tried to prepare for this, clearly the first few days tell us that there are some tweaks required or some changes required. I'm not so bothered about the lower volume per se, but the fact that your prices seem to move beyond what it was at 315 and beyond what is indicated in the open derivative markets, that is definitely a matter of concern, which I'm sure SEBI and all stakeholders will get together to figure out what is it that is preventing people to come into the gas and ensure that aberrations of this kind are simply arbitraged away by general participation.
Yeah, no, Anand, but I want to probe that point a bit, because we've spoken to a few people in the trade over the last 48 hours, multiple conversations, and one of the things that comes up right now is that on the volume part and the participation part, that retail may not completely understand right now. They will at some point of time, and then therefore start participating. But the two immediate issues, or two issues of immediacy right now, one seem to be that the two exchanges have very varied participation, even at the numbers as they stand right now are low, part one. And part two, that a very small volume, a dealer from a large brokerage was making this point that on expiry days, it's not a fair game bang for the buck, simply because the eventual pricing gets decided by a very low volume of quantum traded. How would you respond to both?
So you've packed in a lot of points there, Neeraj. Let me try and address some of them. So this point about mismatches between exchanges, frankly, was there during the volume weighted average price as well. And your market participants would know this. In the larger exchange, the volumes would be in the region of 8,000, 9,000 crores. if my memory serves me right, in the smaller exchange, it would be a tiny fraction of that anyway. So it's not as if it's something which has come up only in cash. Now, on the point about participation, I think there are, as I said, on a look-forward basis, and I'm sure SEBI will be having lots of consultations with all the participants to figure out, how can we improve participation and ensure that these, swings don't really happen. I would expect that some of the larger, institutional participants, including mutual funds, maybe even some PMSs, should be, watching the cash very closely and stepping in whenever they see an aberration, step in. If a price of a stock is showing 0.5% higher or lower than where the futures is indicating or where they think is a fair value, why wouldn't you step in given the amount of stock that you have or the positions and risks that you have? In terms of retail participation, you're right. It will take time for the retail to digest this. But I'm also given to understand that in certain broker front ends, two crucial pieces of information are not readily available. The first thing is the indicative price, where the auction will actually land in case it was to be held at that particular instant. And the second is, what is the order mismatch looking like in the book for that particular stock? These are two crucial pieces of information for two reasons. One, it gives the information to the derivative market so that they have some kind of an anchor knowing where is the price looking like right now, knowing that it's not the final price. The second, whenever you see an aberration in terms of indicative price moving away from what you think is a fair value, it allows for participants to come in. In fact, in the SEBI circular that came out, it was made very clear that this piece of information should be made available at all times. I think there is some technology changes which have to be made to make this perfect. I'm hoping it will get done very quickly, in which case you and I will be able to see aberrations and quickly jump. See, that's the whole point of this game. In an efficient market, the moment you see aberrations jump in or throwing up, automatically players should flood in to arbitrage away whatever those dislocations are.
And then the argument that some people would make is that if the depth of Indian market or the lack of depth relative to other markets could be a reason for ensuring that there is certain set of short selling, etc., not being allowed, the same yardstick should hold true for introducing a globally accepted norm, because it may not be in the Indian market may not have the right depth to be able to absorb it in its entirety right now. I mean, I'm sure this has been thought through, but implementation teaches us a lot of things, right? Almost everybody who's come, Anant, talks about this 3% band, as carefully as it may have been chosen, needing to be tweaked for the time being to allow the markets to adjust, for example, but it doesn't seem like it's going to go that way.
No, look, I'm sure SEBI is having multiple conversations, and I'm sure the system as a whole will co-create whatever changes are required to ensure greater participation and greater trust in the ecosystem. Just a couple of points I want to make, Neeraj. Look, you make a good point, and I'm sure your market participants make a good point, that the volumes in the derivative markets, especially on expiry day, are far higher than the volumes in the cash market. Again, I want to emphasize, this is nothing new. Even in the VWAP process, we had a situation, and I remember when I left SEBI in October, I was doing the analysis that time. The volumes that we were seeing in the index option market on expiry day, in cash equivalent terms, was 700 to 800 times the underlying volume in the cash market. So this mismatch that you have, which, by the way, many SEBI officials have spoken about in the past as well, is a matter of a bit of concern, which we as a system have to look at. Now, your second point, just to correct you a little bit, shorting is not disallowed in India. SLBM does exist. The problem is the SLBM, the stock lending and borrowing mechanism, which facilitates shorting, is not really used, because anybody who wanted to short would use the derivative market, which is far more liquid and offered leverage, to do shorting rather than going through the SLBM process. I'm actually hoping that with this cash coming through, SLBM will get a fillip. In fact, I'm told SEBI is working on improving the SLBM mechanism, making it more easier. I'm hoping, therefore, that actually cash market volumes go up. Finally, again, I don't want to presuppose what the people in India want to do. We are a free country. We can do what we have to do. But globally, Neeraj, most contracts in derivatives are not held to expiry. What happens is people either close out their positions or roll over their positions well before expiry. Okay? India is kind of unique in the sense that not only are our volumes and derivatives far higher than the underlying cash market, numbers I gave you, it's also a market where many people carry their open interest into expiry, despite this mismatches. So the risk that we have is quite large, and I would frankly be happier if this imbalance was addressed a little bit and more people, close positions earlier rather than wait till. And this has nothing to do with cash. I'm saying it is a generic issue, even if you're taking cash.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है? बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? चैनल तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
Hello and welcome to another NDTV Profit exclusive interaction with country's largest bank, SBI Chairman Mr. C.S. Setty. Thank you for giving us time, sir.
Thank you.
Sir, I want to start with, your margins as against the expectation. They have actually grown to 2.86%. You have maintained the 3% target mark. Now, I see that the growth in your interest expended was lower than interest earned. In simple language, sir, we're going ahead, do you feel that deposit rates have peaked now? There won't be further rise in deposit rate. In terms of loan rates, what are your outlook? Do you feel it could go higher or maintain at the range bound level? In terms of NIM, you have already shared the target, but on interest rate front on both loans and deposits, if you can share your guidance.
Mostly, I think they will be range bound for 2 reasons. One is there's no policy rate hike on the horizon, at least for next 2-3 quarters, which means that both on the loan side as well as on the deposit side, the policy rate driven increase is unlikely to be. There could have been a pressure in terms of the liquidity, but I think that also is aided by FCNRB flows, and the system level liquidity is sufficiently available. So my reading is that I don't think there will be any significant movement in the interest rates.
Sure. Another interesting, tool that bankers are using, and SBI is ahead of all of them, is FCNRB deposits. You have mentioned how you have $10 billion odd of, you see the pipeline to be that huge. How much funds have been gathered till now? What are the trends you are seeing? From which regions are you getting more of these FCNRB deposits? And most importantly, do you feel, because we are getting such good inflows, the deadline from September, is there a chance for it to be extended further?
First, I'll answer the deadline part. I think the governor has clarified that there's no contemplating any either crunching the deadline or extending the deadline, and we believe so. As far as flows are concerned, we have done about 6 billion so far, and we have a visibility of at least adding another $4 billion. We have no specific target in mind, but I think broadly $10 billion is quite a possibility by September.
Sure. And are you seeing any particular region from where higher inflows are coming in?
They are coming across the countries, but I think we are primarily doing through our GIFT City. Okay. So irrespective of which geography it comes, I think it gets reflected in the GIFT City's balance sheet.
And are these pure play FCNRB deposits, or you're also giving your clients leverage? If you're giving that, what is the leverage level that you're giving to your clients?
So it's a mix of direct deposits, and some people are taking definitely leverage. The leverage varies from one customer to another based on what the yield expectations they have. Normally, we are not speaking about the leverage and yield at this moment.
Sure. You have given advances growth target for 14-15% year on year. On your already base, how do you see this momentum going? From where do you see the demand coming from?
This I also linked it to the nominal GDP. Based on our own internal assessment of nominal GDP, we should be having around 12% nominal GDP, and SBI always has been growing 2 to 3% more than the nominal GDP. That is where it comes from. And what we have seen in the Q1 and even this part of Q2 is that the growth is secular. It is coming from all the segments. Obviously, I think economic activity also spurs the demand.
In terms of ECL, sir, the shift to expected credit loss model from April next year onwards, have you estimated the sort of provisions that you will have to make? Is there any number that you have in your mind?
So at this juncture, we are still working on the models. We were hopeful that by 30th June we should be having all the data into our models. During this month, we will be able to complete all the model testing on the technology platform. So it would be appropriate that I wait for the data to be clearly defined and the models are tested properly before I give a number.
So just two more questions. First is, I want to get your sense on fundraise. Bank has an enabling approval. You have said Tier 2 does not look that good option as of now. What form of funds, 81, will you come out with 81 or infra bond? How much quantum and what are the preferred instruments at this stage?
So at this stage, what looks realistic to expect is that we may have one more tranche of 81 because we will be calling another tranche of 81. 5-year period is over. So we will try to replace that. That's about 6 to 8,000 crores. Tier 2, at this moment we are not thinking because the yields are elevated. If yields soften, then we probably look at the year end, the calendar year end. Till that time, we do not contemplate Tier 2.
Sir, I had a lot of questions on tech, but you have covered that in the press conference. I want to end by asking, you are the country's largest bank chairperson. You are the head of IBA as well. There is this talk that the high-level banking committee will be made by the government to look after. According to you, which are the, from India's banking sector, what issues need to be addressed first? We all are wanting new and larger, more number of banks. What should take the priority according to you? From a Hawkeye's view, you have a better perspective.
No, let's wait for the terms of reference. I think the government has sought opinions from all the industry participants. What should be the terms of reference for this SCA high-level committee? I think it's better to wait for that.
Sir, SBI, there were reports that SBI could take over a few other public sector banks and eventually we will have only 2 to 3 public sector banks in the country. Has the government indicated that to you in any manner?
Not to my knowledge.
Secretary sir has always been candid. Thank you sir for your time. Appreciate it. We look forward to having you on our channel again.
Thank you, Piyush.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year,
Let's get in Ramesh Swaminathan to talk to us about the quarter gone by and what's the outlook looking forward. Ramesh, welcome to the show. Always a pleasure to speak to you. You know, always under-promised, over-delivered. That's what I would want to say, because you've given a guidance of 25% for FY27, but you've actually achieved 30% in the first quarter of the year. Does this mean you will need an upward revision in terms of FY27 guidance?
Clearly, we've done very well this quarter. There has been secular growth across various markets. In fact, no geography is left behind. We are pretty pleased with that. Products like Tolvaptan and the base business in a general sense in America has certainly delivered. There is, of course, competition which is coming for Mirabegron. And there's also a cost of additional cost in terms of what we need to pay for Mirabegron itself. We do believe, that there would be more competition coming in for Tolvaptan. So that is clearly, that would actually have an impact when it comes to the overall profitability, because America is a very important geography for us. While